more offerings would be coming in for the crypto investors. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, we see Bitcoin, Ethereum, XRP all gaining almost 2 to 3% in trade, and even the support resistance bands has moved up. It's between $63,000 to $66,000, and interestingly, Solana has also seen a good buying. Well, now time is there to look at the crypto strategy for the day. Here's what's there to keep in mind today. So the overall market outlook looks cautiously optimistic right now. A little bit of bullish momentum you can expect, especially during this weekend. Historically, during the weekend, the volume levels generally goes up for crypto, and the range of 64 to 65,000 levels becomes the immediate resistance range on the top. Now, the most important thing is that the regulatory developments still remain key trigger. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide and guide and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Watching Ask Profit here at NDTV Profit. By the way, let's take a quick look as to how the markets are doing. Let's try to pull up the Nifty 50 and see as to where it's trading at right now. The markets seem to be under pressure today. The expectation, slightly though, it's recovered, but is up by about 1%. Let's also pull up the Bank Nifty, and then Anand Rathi has been in focus on the back of its earnings, and we have Sharad joining by because he's the one who spoke to the management on the back of the numbers. Sharad, what is it that you're picking up, and go ahead.
Thanks a lot, Mahima, for that. And largely, the numbers were pretty decent coming in. And remember, March is the quarter where there's a lot of volatility at play. And of course, company has done well. The AUM, they have touched that 1 lakh crore mark also. Of course, some PAT adjustments are there. But largely, if you remove those adjustments, the numbers have beaten the street estimates as well. And I had an important conversation also with the management. Feroz Aziz had joined in. He's the joint CEO at Anand Rathi Wealth. And of course, performance was pretty much very strong. So the first question is for Feroz. Feroz, a strong set of numbers coming in. What led to this?
With God's grace, the numbers are consistent. We have always indicated that our professional effort will be towards trying to make sure that in bad times of the market, unlike the perception that a financial services business will do badly, how do you do market agnostic performance and consistent performance? So this was a 19th quarter result after our listing in December 21. And all the results have had a PAT growth with God's grace of upwards of 20%, and the worst being 23. And this time also, in spite of all the market volatility, we have been above 20%, and 24% is the PAT growth without looking at mark-to-market gains. Because those numbers will look astronomically high, which is not the right way of looking at it. Business profit growth, which I think is a reasonable barometer of how we did, that's 24% growth. But yeah, do HNIs actually allocate more money during bad times? It's very difficult. Human nature always compels people to buy things which are done well. So in January, people were buying gold and silver. Now people were looking at Korean markets because they did well. It's very difficult to convince a group of humans, which we all are, to leave the emotion aspect and keep the heart aspect and operate as per the mind only. Mathematics has a certain role to play, but wealth management and money management is both heart and mind. So I think it's a difficult task. That's why you see the June collections of net flows in equity mutual funds were not the best. It was maybe the second worst for the last 12 months. In spite of that, our market share in mutual funds, this is the most important thing. The market share of ours in 2019-20 FY was 0.18% for the active managed funds of Anand Rathi Wealth, now it has been 2.48%. That's our market share in terms of gross mobilization, including the SIP numbers. So I think we have focused on equity mutual funds. That's why you see 1,900 crores of equity mutual funds bought in this quarter, a 4% growth vis-a-vis last quarter. QOQ, we have gone up in equity, which is a tough task, but I'm glad clients have trusted us with more money during market lows.
And Feroz, looking at the overall FY27 guidance for the top line and AUM, it seems like the year has started well. First quarter, almost 24 to 26% of achievement has come in. So you reaffirm this guidance, or is there any change here?
See, we have given a PAT guidance of 460 crores from a business profit standpoint. We have given a revenue guidance of 1485, if I'm not wrong. And we've given a AUM guidance of 1,20,000 crores. We were at 93,000 crores last quarter end. Now we are at 1,06,000 crores. Of course, the big milestone crossed. 1 trillion rupees is a reasonable number, especially in the Anand Rathi way of measuring assets under management. We don't generously measure, like most wealth management outfits, do small agreements with clients and start counting those as assets. These are true to label assets under management without being too liberal in terms of, because there's no accounting standard for AUM measurement. Every company follows. We are following the most global standard. That's why you see our yields being high. We don't increase the denominator to look like an inexpensive wealth manager. So those were our guidances. We have finished 25% on all of them. Of course, AUM is a little, we've gone a little ahead in terms of AUM guidance achievement, but I think it'll get normalized. And 1,20,000 crores at the year-end number of assets under management seems like a doable thing if God is kind and Trump is kinder.
So there is just one parameter which actually I saw a very interesting number on that. Huge jump in hiring, relationship managers on a year-on-year basis. What does this actually suggest? What are the ground level channel checks?
No, if you look at our results, we don't hire them from outside, we home grow them. So we in 2016-17 realized that this business looks optically very easy from outside, but one of the toughest wealth management is not an easy business to be in. So you have to home grow them. So we've started hiring a lot of college graduates for the last 7-8 years. So my RM increase is not from hiring and buying people from giving astronomical salaries, buying them from competition is not our strategy. That's why you see 75 to 80% of the RMs, last 100 relationship managers have been homegrown. So I have 480 apprentices approximately, which are called account managers, who will be promoted to be relationship managers. So it takes 4 years, 3 years to bring them to the same social cultural fabric as we believe, so that they can carry the Anand Rathi Wealth Limited brand in the marketplace the way we would want it to be. In a most transparent and unbiased, genuine client centricity does not come easy. So I can't hire them from another bank or a wealth management outfit and expect them to have the Anand Rathi culture and hit the ground running. So yes, have the RMs increased? The answer is a big yes. Have we hired them from outside? Rarely, unless there's a friend of theirs working with us and we know them. We don't generally go out, get HR consultants to hire us, relationship managers. This is something which is very unique. And we realized this about 7-8 years back, is why we are bearing the fruits today, because it takes painstaking 4-5 years of training somebody isn't easy. Youngsters don't come so easy to be trained.
And Feroz, in the wealth management space also, the demand is for new assets also, especially international investing. There's a big buzz happening right now. Is there any kind of announcement we can expect for Anand Rathi Wealth also coming into international investing or offering that to their clients?
So we don't recommend, we don't actually currently have the ability, let me be rightly not modest, but yeah, that's what our current status is. Of course, today I can tie up with any private bank outside, which is what most wealth management outfits do. Ratiji, who's our chairman, and my boss, Mr. Rakesh Rawal, has always told me, you only get into the territory where you have done second decimal math. To understand Indian markets, we have 182 product people. For me to understand the world, I might need 500 research and product people. That kind of capital commitment I can't do. Of course, I can. I have a UK subsidiary which we just opened, and with God's grace, that has started. A few clients have started trickling in. That is also to bring money to India. We don't give too much advice on the LRS, or in fact, don't give any advice, which might make us miss some opportunity. But I think we are okay to miss some opportunity, then get into a territory with half-cooked knowledge, and to have a great knowledge or a deeper understanding, finance understanding. I will have to at least have 100 people researching the world. That's not my current philosophy. And actually, focus in businesses is underrated, and opportunities are overrated. Like there is opportunity in India everywhere. There is opportunity in the world everywhere. But focus. You can't be everything to everyone for every part of his money. So understand your segment and focus on your segment and be masters there. That's been what's been taught to us from an IITian boss whom I have, Mr. Rakesh Rawal.
Right. So focus is the word. Thanks a lot, Feroz, for giving your views on the industry as well as the company's culture. It's always a pleasure to talk with you. So, of course, we are talking a lot about, earnings, but I'm sure a lot of our viewers are waiting with their queries and it's, lining up. So I'll take it over to you guys.
Yeah.
Thanks so much for that.
Thank you. So, of course, thank you so much for taking that conversation. Let's try to pull up the chart and see, because it's trading it's up by about 3.5% at the day's high point. So, good set of earnings, as Shad mentioned earlier as well. But let's not wait further. Just a quick check on the markets before we start taking your queries. The Nifty 50 is now trading above the 24,200 levels at the day's high point. You have the Bank Nifty, which is above the 57,900 levels. So, I think the 58,000 levels is something that we'll be watching out for sure on the Bank Nifty, but in line with the benchmarks at today's high point almost. Let's also quickly pull up the broader end of spectrum, the mid cap 150 and the small cap 250 as well. Both trading a percent higher. The mid cap 150 up by about 1.2% and the small cap 250 also up by about 1.3%. So all the indices almost trading at their day's high point, and that's something that most certainly is good to watch on the screen. Quickly, the sectoral heat map, as we see a green across the screen. Metals topping that chart, up 2%, followed by IT on the back of the TCS earnings and positive commentary coming in. You have defense also taking a lead, up by about 1.7%. I think the least gains coming in from the defensives. You have pharma up by about 0.2% and FMCG up by about 0.5%. So that's with regards to where the markets go. But let's start digging into your queries, and to answer them, we're joined by Somil Mehta, Head Alternate Research at Miraset, Shaykh Khan, and Tapan Doshi, Research Analyst at CA joining us now. And Tapan, we've been told that it's your birthday today, so a very happy birthday from the entire team of NDTV Profit, and we wish you all the very best and good wishes for the entire year.
Thanks.
I think I'll start by asking the first question to you as well, as a birthday present from our end. Okay, the first question that we have is coming in, and this is from Mahesh, who is writing us from Maharashtra. He is asking about MTAR Tech, and he says that he wants to take a swing trade in this from a 1 month perspective. He's already holding 100 shares at the levels of 7550. But he's saying that so basically what he's saying is that he took a swing trade, but now he's looking at this from a long-term perspective. Would you recommend this hold from a slightly long-term perspective of a year?
Yeah, good morning, and thank everyone for the birthday wishes. Now, talking about MTRC, the stock has already gone up a lot, but no, from the future also is good. If you see the next 2 years, the revenue growth may be around 25%, and clean energy orders are ramping up. If you see defense orders are also going up. The only thing is that there is a customer concentration risk, and the working capital intensity is there. So we have to look at the working capital. But because of defense overall orders is going to go up, and it is a beneficiary of indigenization. So I think one can hold the stock, but volatility is there. But if he is going to stay for 2-3 years, I think there is no issue. He can hold the stock.
Got that view, Tapan. But the next question coming in now, it's from Ansh, who's writing to us from Australia. He's holding on to Vishal Megamart, bought 1,000 odd shares at 118 rupees per share, and he wants to hold on to this particular counter for the next 3 to 6 months. Somil, very good morning to you. On Vishal Megamart, would you recommend that Ansh should continue holding? What's your opinion?
Good morning to everyone. Happy birthday, Tapan. Friday birthday time, you should have taken a leave.
Well, you're going to close our shop one day, Somil, I feel, with this. But I'm glad that, Tapan, you're sharing your birthday with us. And again, a very happy birthday from my side as well. But Somil, go ahead. What's your opinion?
See, Vishal Mega Mart, definitely hold on to it. I'm bullish on it in the very short term, in the near term. You can keep a strict stop loss around 110, 108 levels, but I'll be positive. It's a triangle pattern forming on the charts, on the daily charts, and I'll be expecting a target of around 130 to 135 in the next probably 1 or 2 quarters.
Got that view. The next one's on Acme Solar. Raja from Chennai has been holding these shares at 289 and holding 102 shares. Now, Tapan, it's been a very interesting story, right? Because largely a laggard, and then that QIP happened, and stocks just flown through that 280, 290 mark to the current levels. Do you feel it's a good time to hold? Because the 19,000 crore debt for the company, which is earning about 2,000 crore in revenue, is that a concern?
Yeah, it is a concern, and again, the stock has gone up a lot. Of course, if you see the profitability and the quarter-to-quarter results are good, and the management is also very much bullish for the future. Guidance is also strong. But at this valuation, I feel no, one should not enter. Wait for the dip, because otherwise, I can tell you around 320 or 330, that will be a good entry level. I think the stock has gone up a lot, and in future, I feel there'll be a margin pressure because the competition is too much and the debt issue is also there. So yes, wait for the dip, then only buy.
All right. Okay. The next one that we have is coming in, and this is from Kiran Tejwani, who's writing us from Karnataka. She wants to invest around 2 lakh rupees from a short-term perspective of 3 to 6 months, and she's asking for what stock can she go ahead and buy right now. Saumil, anything that you would suggest her? Maybe a stock, maybe 2 or 3 that you're looking at that she can divide her 2 lakhs into?
See, at this point of time, there are 3 sectors I'm looking at. One is pharma. Definitely, pharma looks great to me. The second one is a little high beta, that is real estate. And you can look at defense as well. So these are the 3 sectors which I'm looking at. Pharma, Mankind Pharma, Zydus Life, Cipla, all of these stocks really look good to me. Try to focus more on large caps because a little uncertain at this point of time. Once we close about 24,600, I think then you can speed up your investments. But at this point of time, try to focus on large caps. On real estate, I like DLF, I like Oberoi, Phoenix, I like, but it has already run up a lot. On the defense side, I like BEL and HAL, but buy on declines on defense. So these are the 3 sectors I'll focus on.
Got it. Well, let's take another caller now, and dialing in from Ambala. Ajay has a stock query for us. Ajay, very good morning. Yeah. Welcome to the show. What's your query?
Yeah, good morning, sir. Good morning, sir. Thank you, sir, मेरा क्वेश्चन लेने के लिए. सबको गुड मॉर्निंग. सर, मेरा क्वेश्चन NSDL पे है. सर, मेरे पास 200 शेयर्स हैं 897 पे. सर, आज ये थोड़ा सा ऊपर आया है. क्या यहाँ पे 100 शेयर्स ले सकता हूँ? सर, दूसरा ये है कि या तो CDSL इसका जो दूसरी कंपनी जो सेम बिजनेस में या इसमें एंटर कर सकते हैं. सर, लेने का पीछे रीजन ये है कि सर वो CDSL सर वो 65 के आसपास थी पे और ये 44, 45 पे गैप बहुत ज्यादा है. तो क्या ये कभी गैप कम होगा कि इसको शिफ्ट कर दूं CDSL में?
अजय जी, फर्स्टली आपके क्वेश्चन के लिए धन्यवाद. आपकी रिसर्च तो सही क्या इंडिकेशन दे रही है आपको. पर तपन, क्या आप सहमत है अजय से? उनको क्या अभी और NSDL के शेयर लेने चाहिए? लोअर PE पे है कंपेयर टू CDSL. क्या है आपकी राय?
दोनों में डिफ्रेंसिएशन ये है कि NSDL काफी इंस्टीट्यूशन को कैटर करता है और CDSL रिटेल. अगर आप देखें तो डीमेट अकाउंट कंपेरेटिव CDSL के 3 गुना है. अगर मैं बाकी की ग्रोथ भी यहाँ से देखो, मुझे कहीं ना कहीं ऐसा लग रहा है कि CDSL का ग्रोथ अच्छा रहेगा. प्लस वो थोड़ा प्रीमियम में है, लेकिन देट विल डू वेल. और यहाँ से कैपिटल मार्केट पेनिट्रेशन आगे बढ़ने वाले, तो दोनों कंपनी को फायदा होगा. हमें बस उनका मार्जिन और जो चार्जेस जो सेबी से भी लगते हैं वो सब देखते रहना पड़ेगा. EBITDA मार्जिन अगर NSDL का देखे 35% अबव है, CDSL का भी अच्छा है. लेकिन अगर मैं दोनों कंपेयर करूं तो मुझे कंपेरेटिवली अगर 2-3 साल के लेना है तो मैं CDSL की तरफ जाऊंगा कंपेयर टू NSDL.
Okay, all right. So that's the view coming in on both NSDL as well as CDSL. But it's time for a rapid fire round. Saumil and Tapan, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on Paytm. Mohit from Ludhiana says he's got 50 shares at the levels of 1165. He has a 2-year time horizon. Tapan, what's your recommendation on Paytm?
Yeah, hold.
Next one's on Enviro Infra. I bought at 171. Our viewers holding the share for a while and he wants to accumulate more. Tapan, would you recommend for the next 18 months?
Yeah, you can, but buy around 215, 220. Let it come down a little bit.
Alright, okay. The next one is on Kfin Tech. Ashok Pai from Bengaluru wants to know as to what should be the view on this one. Soumil, on the charts, what would you recommend him?
Fintech in the short term positive, but in the medium term still wait and watch. Breakout above 970.
The next one's coming on Paytm. Khurshid from Delhi is holding shares at 1167, asking Tapan if he should still continue to hold this counter.
Yeah, please hold.
Okay, the next one is on Mopen Labs. Pratap from Pune is holding around 2,000 odd shares at the levels of 62. A long-term perspective on this one, Tapan?
Yeah, hold.
Sanjay from Bengaluru is already holding on to HDFC and Canara Bank. Tapan, he's asking if he can add Bank of Maharashtra to the list.
No. If you want to add, you can add ICICI Bank more.
Okay, the next one is on Hindustan Zinc. Madanlal Shroff is holding 50 shares at the levels of 685. Hold, book losses. Soumil?
Hold.
Soumil on CAMS as well. Priyanka Ashar is holding 175 shares, bought at 727. So currently sitting on gains, asking if it's a good time to book profits or what's the target that you are watching out for?
If you are a short-term trader, book profits. But if you are a medium-term trader, hold on to it. Stop loss would be 744.
The next one that we have is on Ola Electric. Arijit is asking this question. He's got around 54,000 shares that he's bought at the levels of 41 rupees. From a 6 months perspective, Soumil, should he hold?
I would exit this stock because it has already rallied, so I'll exit.
The next one coming in is between Inox Green Energy, Idea Forge and DCX Systems. Tapan, a viewer wants to enter one of these counters. What do you like amongst these?
I think Inox Green will be better option, but on dips.
Okay, Scott's Kubota is the other one. 35 shares bought at the levels of 2872. Continue to hold, exit. Dilip from Kolkata is asking this. Soumil?
Escort, hold.
The next one that's coming in now, and this one's on Marico. Our viewer Akash wants to enter for the next 2 years. Tapan, a good strong Q1 update. Should he continue to hold and can he buy now?
Yeah, one of the best stock in FMCG. Yeah, hold.
Okay, the next one is on IRCTC. E. Venkatramanan is holding 100 shares at the levels of 723. A 1 year horizon. Continue to hold, Tapan?
Yeah, hold.
The next one's, on Keynes Technologies, our viewer Saurabh has bought shares at 3172. Soumil asking what's a medium-term target on this counter?
See, in the medium term, the targets would be around 3,500, 3,600 levels, but that's the only target I have, nothing above that.
Okay, the next one is on either Anantraj or Bellrise. Nikat from Bengaluru wants to know from a 2 year perspective which one is better to invest in 50,000 of amount. 2 years is his time horizon. Tapan, your view?
Looking at the valuation, I think Anantraj is better.
Now, the next one is on Dixon. Vijay from Chennai wants to know a short-term view on the counter. Soumil, of course, buzzing today on that Vivo JV approval, but what's your view?
The short term, I'm definitely positive, but no fresh buying. Keep a stop loss around 12,800.
Okay, Acme Solar, 102 shares bought at the levels of 289. Continue to hold. What should be the next target? Raja from Chennai wants to know. Soumil?
400 is my target. Keep a strict stop loss around 355.
Alright, okay, that brings us to the end of this rapid fire round. I'm told, Soumil, that you'll be leaving us now. So thank you so much for taking out the time and helping us answer all those stock related questions. But viewers, it's time to slip into a very, very short break. But we'll be right back answering more queries on the other side. So do stay tuned.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea. What idea? We were desperately hunting for it, and then that hunt was on for 4 years. Nothing changed. Shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
Welcome back. You're watching Ask Profit right here on NDTV Profit, and it's been a good screen for the markets today. We're continuing to just be around that 24,200 mark for the Nifty 50, and that up move of 1% continuing to hold at this point of time, and we are still away from that 24,400 mark, which we lost out to on because of on the Wednesday move essentially. So there's still yet some headroom at this point of time. But when you also look at the Bank Nifty, as we highlighted at the start of the show, also important levels to watch out for is 57,800 and 200. With this up move of 1.2%, we're now closing in on that 58,000 mark. So 58,200, all those levels continue to be important. And also the advanced decline ratio, because that has been the other key factor. It's been a story of benchmarks actually over the last week or so. Today, the advances are now, gaining in terms of 4:1 versus the declines, and that's visible in the BSE 500 as well, because you're seeing a lot of those individual movers that are buzzing in trade today. Of course, the broader benchmark move has been led by IT, but that's also visible in Zensar Tech, which is up 10% now. Shoppers Stop is also up 11.7%, and Kalyan Jewellers continues its dream run of almost 30% in this week. Also seen a lot of positive moves coming in across a bunch of Adani Group names also. So Adani total up 6%. Adani Green also doing well in trade right now. IFB, MRPL and Bandhan Bank are some of the other gainers on the BSE 500. But let's continue taking your stock related queries now. And we are now being also joined by, of course, Tapan Doshi on our fundamental side. Devin Mehta of IDBI is also now joining us. Devin, very good morning. Thanks so much for joining in. Let me start with the first quick question. This one's on Dr. Reddy's. Muralidharan from Chennai is holding on to these shares bought at 1270. Now, on the fundamental side of things, Devin, the stock has been caught on the semaglutide side, but Muralidharan wants to know if he should still continue to hold the stock for the short term. What's your view?
No, I think yesterday after news, I think the stock has corrected and has given a breakdown below the important support of 1260 levels. Today it's trying to bounce back, but I don't think it will reverse from the lower levels as it has given a breakdown. So for short to medium term, I think one should avoid buying. In fact, those who are holding should try to exit on bounce. There is a major resistance now in a range of 1260, 1270. So I think one should try to exit on bounce.
Okay, all right. So that's the view coming in on Dr. Reddy's. The next one that we have, I think Shri from Chennai is asking about Infosys. The buying price is 1081, the quantity is 50. Tapan, we've seen overall TCS earnings coming out on the back of that. All of these IT names are buzzing in trade today. Any quick view on Infosys as well as, a take on TCS?
So TCS result was overall okay. We have to wait for the Infosys result, of course, no. But if you see, the main thing is now how will be the guidance 2027? Again, no, whether they are able to control the margin or not, because that is a bigger problem. Plus, how they are going to go in on AI side also. So, lot many questions are there. I think one should wait for the result. But at this level, I'll not recommend any buy. No, still this sector is quite weak. No, unnecessary buying is not been told here. But yes, one can wait for the result, then only take a position. But all, I think 3 months, 1 or 2 quarters, there will be a struggle.
Got that view, Tapan. But the next question coming in on insulation energy. Now it's been a stock that's been in a good move, since it got transferred to the main board side of things. Our viewer Rohan from Thane, from Mumbai, of course, is holding these shares at 116. Tapan, he wants to know a long-term view of the counter. What would you recommend? Because there's been a significant up move over the last 2 to 3 years. Is it still a good hold, or should he switch out to some of the larger players now in the renewable energy space?
If you see, the main thing is in the solar demand is accelerating, but whether they are able to control the margins or not, that is a thing. Their cell and module capacity is increasing, but the only thing is the raw material pricing, volatility is there, and working capital will be an issue for this company. They are going to be beneficial of PLI and ALMM, but order book is visible, but I'll not enter at this level. No, I'll wait for some time and just see 1 or 2 quarter more, then only enter. Currently, no, at this level, don't enter.
View, Tapan. The next one coming in on SW Solar, and M. Ahmad from Delhi is holding on to 80 shares bought at 200 odd. Now, Deven, he wants to know about a 6 month to a 1 year view on this counter. Has been in that range of 220 to 240. What's your view?
I think one should hold this counter. The way counter has given a breakout about 220, and again after making a high of around 260, the counter has retested its breakout levels. One should definitely hold with a stop loss of 222. If it breaches this particular level, this coincides with 200 exponential moving average. So I think if it breaches 222, one should try to exit. There should be a trailing stop loss, as he has purchased at a good levels. 222 can be the trailing stop loss. One can hold. The counter can again bounce towards 250, 260 levels.
Got that view, but let's go across, take the next caller from Chennai now. And Abhirami is joining in for a stock query. I hope I'm pronouncing your name correctly. Good morning and welcome to the show. What's your query?
Good morning, sir. Sir, I buy Zenso Technologies for 25 shares. I buy my price 448 yesterday.
Okay.
Now I will get want 3 months will be. I want how get the target I want, sir.
Okay, you want a 3-month target. Got it. Deven, on Zensa Tech today, a very sharp up move, on the counter, and our viewer, of course, getting benefited from that. What's the 3-month view?
Definitely, the stock has moved 10% today itself, and the way it has recovered from lower levels with increasing volumes, I think one should hold. The risk reward ratio is very much favorable at current level. So 434 is the important level for this counter. If it breaches, then we can see some more correction in this counter. So 434 will be the trailing stop loss, and one should try to hold this counter. There is a small resistance around 520. If it surpasses and holds above that, we can see some further up move towards 590 levels as well. So one can book profits near 590. Overall structure, it is trying to reverse, but yes, definitely. As the buying levels are favorable, one should hold with a stop loss of 434.
Nice. Okay, all right. So that's the view coming on Zensa Tech. I think we've got the next question from Suresh, who's writing us from Chikmagalur, and he wants to know a better pick between Syngene and Laurus Labs. Tapan, I'll come to you. Which one in the pharma space that you're liking? We've seen a significant run up in a lot of these counters already, but which one is your preferred bet from a long-term perspective?
See, if you see CDMO segment will do well from here also, but Laura Slab valuation is quite high. Syngene is not so much, but Syngene been underperformed over a time, and last few quarters were not so great. So if you talk on the valuation perspective, Syngene will give you a better risk reward ratio. I think next few quarters will be better. I'm not saying Laura Slab is not good, but I think from the valuation point of Syngene is much better place to enter currently.
Got that view, but the next question coming in now from Ishwar. He's actually asking an interesting question on Bellrise Industries because stock's trading at a 52-week high, and I'm still yet to see the valuation, but he's mentioning it at 41 times on price to earnings basis. But the company is also diversifying in defense and aerospace. So Tapan's question being, what's the view on the stock now for the next 3 to 5 years? Because very sharp up move from the 91 rupees that was at listing, but is it slightly more overvalued? Is there other place to look at?
See, Puneet, if you see, the growth is supporting the valuation. It's been good performance in last few quarters. And of course, the stock has gone up a lot, but I think OEM orders are going to come from in future. Aerospace exports is expanding. Again, manufacturing revenue is growing. And if you see the auto sector is, I think, doing well. So I'm positive on this stock. Of course, valuation is on a higher side, but still it is performing well. So my take is stay with this stock. I think management is quite positive, yes, at this level, and you can buy at dips also.
Okay, all right. The next one that we have, and this is coming in from Keshav, who's writing us from Chennai. He's asking about Mishra Dhatu, and he says that he's a long-term investor. He's bought this at the levels of 412, and he's looking at a time horizon of around 2 years. Tapan, I'll stick with you for this one as well. What is your recommendation on Mishra Dhatu?
See, Mishra Dhatu, if you see, defense demand remains robust for this company. Aerospace order is also coming. The government order dependence is there. That is what we have to see, and plus working capital we have to see. And here also, customers are few only, so that is a problem, one of the problem. But if you see, the balance is debt free. So yes, stay with this stock. I think this stock may do well in next 2-3 years as defense orders are coming good here.
Got that view, but let's go across and take our next caller from Vizag. Murthy has a stock query for us. Murthy, very good morning. Welcome to the show. What's your query?
Good morning, sir. First of all, happy birthday to Tapan, sir. My question is to Tapan, sir, only. Which is the better investment for long term, 3 to 5 years, either JSW Energy or Tata Power?
Got your question, Murthy. Tapan, of course, you heard the wish as well as the question between JSW Energy and Tata Power. Along with the other people who are messaging us about your birthday wish as well, what's your view?
Yeah, thanks everyone for the wishes. Well, I'll go with JSW Energy, because if you see Tata Power is much more diversified, but I think JSW Energy, much more capacity is coming. Even the execution is much better. Even if I see the quarterly result, JSW Energies are better, and their management also, the guidance what they are given is very much supportive to the valuation also. So yes, I'll go with JSW Energy at this level, even buy on dips category.
Okay, all right. The next one that we have is coming in, and this is on Swiggy. Narayana from Andhra Pradesh is saying that he's got around 700 odd shares of Swiggy at the levels of 266, and he wants to know whether to continue to hold this, and his time horizon is just 6 odd months. So Devin, I'll come to you on this one. What are the charts indicating for Swiggy?
I think the overall structure is weak, but yesterday it has crossed a major resistance of 270, and it is currently holding this particular level. So I think one should hold this counter. One should keep a stop loss of 260 on closing basis. If it closes below 260, one should try to exit, because yesterday we have seen a good volumes in this particular counter, and today we have seen that there is slight profit booking, but again stock is trying to hold above the major breakout level. So one can hold this counter with a stop loss of 260. The stock can further move towards 315 levels. One should try to exit near 315 levels.
Okay, all right. So that's the view coming on Swiggy. We've got, I think, Shankar calling us from Chennai. Shankar, a very good morning to you. Go ahead, ask your question.
Very good morning. I want to buy 1,000 shares of Kalyan current levels for off portion for 3 months and 500 shares for long term. I want to know technical outlook for 3 months and TR time frame.
Okay, got your question. I'll take the technical one first. Devin, we've seen a significant run up from the low points. I mean, it's run up over that 35 odd percent, and in just 3 odd days, it's seen significant amount of gains. We just did a deep dive also today. But overall, I think from a technical standpoint, what would you recommend, Shankar? Then I'll also take a fundamental view from Tapan.
As far as Kalyan Jewellers is concerned, I think the stock has already moved from last 3 days. But again, we have seen a breakout in this particular counter above 454 levels. So those who are holding, one should try to hold this counter. A trailing stop loss will be around 430, and if it comes down towards 455 levels, then that can be a good buy for this particular counter. The way it has moved and the volumes have increased, I think this particular counter should go sideways for a few days and can again start its up move towards 520. So 520 is the target. One should try to accumulate on dips, and the stop loss will be 430 on closing basis.
Okay, and Tapan, what is your view? Because the street was disappointed with the business update coming in for Q1. The expectation was of a 50% growth, but it did a 38% growth. Plus, the Middle East conflict is still an overhang, right? It could impact the international earnings. Overall, from a long-term perspective, because he's also putting around are buying around 500 shares from a long-term perspective, what is your recommendation? Of course, it's buzzing on the back of what Somit said yesterday with big money coming in. But from a long-term perspective, how do you see Kalyan?
Yeah, but 38% is also good growth. The problem is, we were expecting too much. So yeah, I am quite positive on this stock. Now, if you see the same growth is also, LFL growth is almost 28%. If you see international division is around 35%, that is what the update was. So overall, things are moving good for Kalyan. And I think the festival season is coming next 6 months. And gold prices, as it has gone down, jewelry, demand will go up. So I'm quite positive on the stock because all these valuation, or most of the jewelry stock has beaten a lot of the Modi ji, requested about don't buy gold. But at this level, I'm quite positive. But yes, as the stock has run up a lot, wait for dip. But yes, for long term, you can go for Kalyan.
Got that view. But let's go across and take another question now from Bengaluru. And Subramaniam is joining in for a stock query. Subramaniam, very good morning. Welcome to the show. What's your query?
Very good morning to you all. I hold 20 shares of SBI cards from IPO allotment at 755. Given the current scenario where it is, what do you advise for a long term? Hold, switch, average?
Got your view, Subramaniam, and most certainly you've been holding on for the last 5 years almost. But Tapan, we actually, the easier answer is to get out of the stock, right? But just in terms of the May data for the credit cards was actually very surprisingly positive, and I think SBI cards also expected to perform well in that. How are you seeing SBI cards? Would you still recommend Subramaniam to get out of this counter, or hold on for the near-term results?
No, I'll tell him to get out from the counter only because it's been underperformed. And again, credit cost pressure is then again credit card business is competition is too much, and you have to come up with lot many discounts and all that. If you see the funding cost sensitivity is there for this company. Of course, premium card portfolio is doing well, but I feel this company is not doing so great. And no, there are many other sector which are doing good. So better to move out. If he wants to wait for the result, you can wait. But overall, long term, I am not so much bullish on SBI card.
Okay, all right. The next query that we have is from Aarti, who's writing us from Bengaluru. She wants a 3 to 6 months outlook on Affle, and she wants to know whether this is the right entry point. Devin, this is one of those counters with a highest return potential, top 5, among the top 5 with the highest return potential as per Bloomberg consensus, because a lot of brokerages had a buy call on this one at the start of the year, right? But it's not, kind of tried to reach to those levels. So what would you recommend from a 3 to 6 months perspective on the chart?
No, I think overall the counter is trading sideways from last many weeks. I've been checking weekly chart, but it is unable to cross 1550 levels on the higher side. On the lower side, it has a support around 1390 odd levels. So I think it is trading in a range from many weeks. So one should accumulate this particular counter only if it breakouts above 1540 odd levels. So 1540 is a major resistance. If it breaches that, then we can see some good breakout in this particular counter. So that can be a good buying opportunity at that level. But currently, no, one should avoid this particular counter as it has been sideways and consolidating since a long time.
Next one, an interesting question coming in from Murli, who's from Hyderabad and a regular viewer of the show. He's bought into Aadhar Housing at 490 odd rupees, holding on to 40 shares. Now, Tapan, he wants to hold this for the next few years. I think the financial performance since listing has been quite decent. Should he continue to do so, and would you actually advise him to add more at this price as well?
Yeah, the stock is good. Even I am positive. If you see the AUM growth guided from here is 20+%. Affordable housing demand will be strong in future, and the branch expansion is continuing. The only thing is competition from the banks will be there, and rural credit will be a risk. So we have to see that NPA, how they are able to do it, not able to control it. Otherwise, asset quality profile is good comparatively, and ROE is above 4%, which is also good. So I am positive. So yes, you can hold this stock, and maybe on dips you can buy also. For long term, I'm okay with this.
Okay, the next one that we have is on Apar Industries. This is a query from Vikas, who's writing us from Pune. He says that, is this the best buy right now? By the way, he's holding at the levels of 14,070, just near the current market price, and he wants to know as to what should be the next course of action for him. He's not mentioned the time frame, but Devin, any view on the charts for this one?
Yeah, I think overall we have seen some kind of a profit booking in this counter, but yesterday it has formed an inside bar and again trying to move higher. So I think as it has bought near current levels only, one should hold this counter with a trailing stop loss of 13,450 levels. 13,450 will be the stop loss for this counter. It can again move towards 14,800 and then 15,200 if it sustains above that. Then definitely stock can again move towards 16,500 odd levels. So I think one should hold with a trailing stop loss, and again once it crosses major resistance of 14,800 and 15,200, one should try to book partial profits and can trail stop loss for the rest of the quantity.
What a stupendous move though on this particular counter, up almost 70% just in this year itself. And had been consolidating at that 8,000, 9,000 mark, and then once that got broken through, even in the last year itself has been very, very strong in terms of up move, of course. But the next question, and actually it's an interesting one, because Ishwar's query on Bellrise Industries, Tapan, you already answered, but he's saying that since it's your birthday today, he wants one special stock from you to invest in till your next birthday. So it's essentially your birthday, but he's asking for a gift. What would that one special stock be?
I think one special stock, well, I have to think about it because you're asking only one. Yeah, but I can tell about the sector. I think EMS sector now it's coming up. A lot of now you can say the government initiatives plus updates are coming good. So you can think about Dixon. I think this level is good. Even Sirma or Keynes also. I think that will bounce back. Now their semiconductor unit is starting. Maybe one or two things will be better. These are the three. I think for long term you can go. EMS sector will do well for next 3-4 years.
Okay, all right. So EMS is the space that Tapan is finding attractive. The next one that we have is from Soma Shekhar, who's writing us from Bengaluru, asking about GMR Airports. He wants to know, by the way, he's bought it at the levels of 99 rupees and he's got around 500 shares. And he wants to know from a long-term perspective, this is a good hold or not. Tapan, what would you recommend him?
Yeah, you can hold the stock. If you see that business operations are doing good, even the passenger traffic growth is expected, maybe in double digit. Delhi, Hyderabad expansion is going on, and international traffic will also. So hopefully, once this geopolitical issue is over, I think that will come back. So yes, hold this stock, and deleveraging story is already there. So at this level, one can hold, and if it is coming at around 100, you can buy more also.
Got that view, Tapan. But Tapan, viewers as well as Deven, it's now time for the rapid fire round in this edition of show. Keep your answers as short as possible so that we can take as many queries now. The first one coming on, if it's a good time to buy between Coforge as well as Persistent at the present rates. Deven, of course, today's move led by TCS, but what's your view?
I think Coforge is good comparatively, so one should buy Coforge. It is very close to the breakout levels. One should buy Coforge with a stop loss of 14.14.
Okay, the next one is on ICICI Prudential Life. Gayatri from Bengaluru has got around 20 shares that she wants to continue to hold for the next 6 months. She's not mentioned the buying price, but Devin, what are the charts indicating?
I think we have seen a bounce back in this particular counter. We can hold with a stop loss of 480. This can move towards 520 odd levels.
The next one, and this is from Surya from Hyderabad. He's holding on to Vishnu Prakash Pugalia. He bought it at 195. Stock's trading at 25 though. So Tapan, would you just recommend him to exit this counter at this point of time?
Yeah.
Okay,
Yes.
the next one. All right, okay, the next one that we have is on HAL. This is from Noreen, who's writing us from Dubai, asking about HAL as to whether this is a good time to enter into this one or not. Devin, are the levels attractive enough?
Yeah, I think one can buy this particular counter at this level with a stop loss of 4,350. This can move higher. So 4,350 will be the stop loss.
Also, Devin, Sunny, who's from Karnataka, is asking about Borosil Renewables. He's bought these shares at 632, holding since last November, and asking if what is a target on this counter.
I think one can try to book at least partial profits. The stock has recently moved, but I think on daily chart it is overbought. Book partial profits and can hold for 692 level.
Okay, the next one is on BEL. Girish from Bengaluru has bought around 1400 shares. He wants to know if from a couple of months perspective, can he continue to hold, Devin, on the charts?
Yeah, I think one should hold with a trailing stop loss of 403. If it closes below that, one should try to exit.
Aniket Desai from Pune wants to enter into UTI AMC. Of course, one of the cheaper stocks in the space, Tapan. But would you recommend that or any other in that space? You also have, of course, the big IPO of SBI coming across. What's your view?
Yeah, other stocks are quite expensive. This is the cheapest. So he can enter just but track the quarterly result. If it is not coming, then exit.
Okay, the next one is on RBL Bank. Tapan, our viewers bought it at the levels of 339 and 861 shares is what Vivek from Delhi has been holding. From a long-term perspective, continue to hold?
Yeah, hold.
The next one is, on IRFC, our viewer has bought, Vijay Kirti has bought at 72. Devin asking if he should still continue to hold. What's your view?
No, I think exit on bounce. The chart is weak.
The next one is on RVNL. 150 shares bought at the levels of 250. Long-term perspective, Suman from Kolkata wants to know. Tapan?
Currently hold.
Devin, between KIMS and RateGain, both those counters is something that Siddharth from Noida is interested in. Anything that you like?
I think KIMS is betterly placed, so one can try to accumulate KIMS near this level with a stop loss of 790.
Okay, the next one is on HPL Engineering. This is specifically for you, Devin. Prashant wants to know the target for the next 2 months on this one.
I think one can hold. Yeah, HBL Engineering, I think one can hold this particular counter, but a strict stop loss should be placed around 740 levels. If it breaches and closes below that, one should try to exit. The overall structure is weak.
And the last query for today, Tapan, coming your way on PI Industries. Kiran from Hyderabad asking if it's a good time to enter. It has been underperforming as well. What would you recommend?
No, not now.
Got it. Well, that was the last question for today. As mentioned, we solved 56 queries. So Tapan as well as Devin, thanks so much for joining in. And Tapan, hopefully, happy birthday once again, and hope you have a good day. Thank you for sharing it with us. But viewers, out of time on this edition of the show. Thanks so much for joining in. Stay tuned and a lot more stock-related queries at 2 p.m. So we'll see you there.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूम
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea. What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, you're engineering.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, finding you the best stories, and also, is there any alpha to be made from here onwards or not? Today is a very interesting company I've got. I'm going to explain you. But before that, try to guess it. It's an Ahmedabad-based pharma company. Very interesting name. Of course, it was recently listed, so I'm sure you'll try to guess it. A very interesting name also they have. This is one of the fastest growing companies amongst the top 30 Indian pharma peers as per the data. And Street is quite bullish on it. Recently, it was listed in the month of December 2025, 15th to be precise, but from then onwards the IPO has been strong, the listing was strong, the stock is up almost 90% from the IPO price. IPO के भाव से लगभग 2 गुना बढ़ चुका है ये स्टॉक। लेकिन ये स्टॉक का नाम क्या है? What is this pharma company? Ahmedabad based? Interesting. No, it's not Torrent Pharma. The company's name is Corona Remedies. This is what we are talking about. But why are we calling this company? What is it that they are doing different than the markets? Why are they doing better than the industry? A lot of questions. I'll try to find you all of these answers. The commercial production of women's hormone facility. ये धंधा कैसा है? इसमें margin क्या ज़्यादा है? We'll try to understand that, and also the capacity utilization and expansion. एक हिमाचल प्रदेश, and of course the second one is in Gujarat. Another important question to be asked for the company is on the portfolio mix, chronic versus acute. Where is the company's focus actually going ahead? Another question, the fourth one, which we'll try to understand, is the inorganic growth. There is Bayer Zydus relaunch portfolio also which is coming in. How does that strategy work out for this business? And this timelines for this Vocadine acquisition. That's what the street has been looking forward to for this acquisition. It's a very interesting story though. And the biosimilar biologics, what's the entry looking like, product launch. So they are going all out as a pharma company, and the growth in the international business. It's very small right now. It's domestic focused. देखा जाए तो Mankind Pharma जैसा जो है इनका exposure है. To put that in perspective, we'll have Bhavin Bhagat, the CFO of Corona Remedies, trying to explain us what's the real story behind it. And yes, the company is coming first time in KYC. तो कंपनी के बारे में आप समझते हैं. About the company, what is it all about? It's a pharma company. It was established in the year 2004, Ahmedabad based. Interesting origins. Let's talk about the other key reasons why we are interested in this counter. They develop and market therapies in women's health, cardio, diabetes, pain and urology. Lifestyle के जो आप कह सकते हैं बुरी आदत का जो impact आता है, that is what they are catering to. So this is a very interesting theme, to be honest. They operate, of course, on the certified manufacturing facilities, and Invesco has bet in this stock. 4.4% stake they are holding. So this is an interesting story. Formulations, roughly 1.65 billion units. That is the capacity which I'm talking about. Sachets comes around 20 billion and bottles comes at around 10 million units. This is what they can keep manufacturing. It's the fastest growth amongst the top 30 Indian pharma companies. This is the MAT industry data which we have taken and analyzed the key details about the company. Also 76 brands are there. They are having 32 engines brand as well. So the way they have this brand acquisition at play and the way they commercialize it, that seems to be quite important in this re-rating. Now they are commercialized recently this approval of women's hormone manufacturing facility, और इस पे जो है हमारी सबसे पहली सवाल रहने वाली है मैनेजमेंट के साथ. Everybody is talking about it. This is a very important trend and a high margin business. Also, let's look at the other key announcement. Of course, for hormone and oral solid dosage facility approvals have also started coming in. याद रखिए इनका जो हिस्ट्री है सिर्फ 6 से 7 में नहीं पुराना है. सो दैट इज हाउ वी हैव पुट आवर एनालिसिस एज वेल. बट लेट्स मूव ऑन फ्रॉम द रीसेंट अनाउंसमेंट्स. व्हाट यू शुड नो बिफोर यू स्टार्ट दिस. रिमेंबर द एक्यूट का जो बिजनेस है, दिस इज फॉर सडन सिवियर एंड शॉर्ट टर्म कंडीशन सिम्टम व्हेनेवर वी टॉक अबाउट एक्यूट. नंबर 2, chronic. This refers to a long developing persistence, long lasting condition. ये 3 महीना या लाइफ टाइम हो सकता है. यानी कि क्रॉनिक के धंधे में ज़्यादा कस्टमर स्टिकीनेस है. That is the reason why everybody is moving towards chronic. This progress happens over a lifetime. Why this is that? Because there is a higher customer stickiness and chances of margin expansion. अगर आपको lifetime के लिए कुछ fever या आपको कुछ टाइप से कह सकते health issue है, then you'll keep buying these products. Portfolio breakup, that is how things have changed. Look at that. The story moves on to the chronic segment. 72% of that comes from just this. The acute has come down. So this is the trend which we are looking at, and this is how things have changed for the company over the last 10 years. And remember, 96% of the revenue comes in from the domestic space and 45% comes from the western region in India. So definitely there is a skew coming in towards this, but company is expanding in the other sectors as well. This is how the domestic business looks. But इस कंपनी के पॉजिटिव ट्रिगर्स क्या हैं? तो मैंने 5 ट्रिगर निकाले हैं. The growth for the chronic segment, that is at 19%. Compare that with the industry growth, it comes in at 10%. That is a very important point to track. Also, the geographical expansion is still at play. And India is such a huge country for pharma that पहले domestic business पे focus कर लिया जाए, and that is why a lot of players are focusing on it. There's more DI and FI participation likely. इसका lock-in का जो overhang है stock का IPO का, that is also almost over, but still a good absorption is coming. That's a really good sign. The expertise in the strategic collaborations and product scaling, बड़े brands के साथ the way they scale up and make their products, that is one of the moats which I have discovered in the history while I was studying this company. And also important approvals are being announced, and that is why the market is rewarding, at least in terms of premium valuations. But what may not work, not everything is right. At KYC we make sure that we give you both the sides of the story. The valuations have become expensive if you are looking for fresh positions. Regulatory risks, आपको US FDA या आपके कह सकते हैं कि बाहर वाले जो रेगुलेटरी अथॉरिटीज होते हैं उसका इस धंधे में हमेशा रहता है. And they do a lot of integrations and acquisitions. So if there is any delay, it might be impacted in the numbers, and that is what the story is all about. But the KYC story, that's also very much important, and that's what I write. 8 rating parameters I get for you. This of course includes the income statement, balance sheet, cash flow, and the usual return ratios, especially the ROC numbers. Very important to track as an investor, especially if you are from the long-term thought process. Street cred and shareholding, take it with a pinch of salt. सिर्फ 6 महीना का ही डेटा है, उतना ज़्यादा है नहीं. Valuations, I'll give you an interesting peer list and more than 3 of them are there. It will be very interesting to analyze. Is there any fair valuation left, or the stock has run up already from the IPO? And the outlook, where is the overall guidance looking like? And company is coming for the first time in KYC, so this is something which everybody will be excited about. But let's talk about income statement and see what's happening here. This is the first one to talk about. Largely the 3-year CAGR numbers look pretty decent. That's around 17%. 32 to 33% growth coming in the EBITDA as well. That is where we see a good momentum coming in. So it's kind of ticking all the right boxes, and this is where the business model थोड़ा change हो रहा है. और अब 20-21% पे जो है margins आ चुके हैं, and it's a significant jump, and they're sustaining it. This is what I like about companies, the way they change, and the change is the biggest constant in life, as everybody talks about. So let's talk about balance sheet, what's happening here. In balance sheet, I feel a little bit of debt levels are on the higher side, and the way the expansions happen or integrations happen, then of course stress comes in financials, especially in balance sheet, and that's what is looking like. But nevertheless, it's decently managed as of now. हाल ही में IPO भी हुआ था, तो capitalization was decent. So it's a neutral rating right now for my analysis. But apart from this balance sheet, let's talk about the cash flow segment, what's happening here. In cash flow, we see a good amount of movement has happened. It's at 229 crore rupees. Compare that, it's around 157 crore rupees. So you see a good momentum is coming in. Let's talk about the overall absorptions, the way things are panning out, and this is around 115%. It's pretty decent. ज़्यादा net cash flows अभी check ना करें. Company is in its growth phase right now. ये ज़्यादा important होता है, इस पे आप ध्यान दें. So right now it's a strong positive sign in the operating cash flow segment. But let's talk about return ratio. What's the story looking like? And wow, the ROC numbers, something was there in FY23, FY24, especially for margins and the return ratios, and there seems to be a change happening in both these years, and it is sustaining. So now it's a high ROC business as well, and I had mentioned they are looking after a lot of these important, you could say the chronic segment. That's where the focus is, and we can see that in the numbers. So it's a strong thumbs up when it comes to the ROC numbers. Let's talk about shareholding and just take it with a pinch of salt. सिर्फ 2 quarter का ही data है, उतना ज़्यादा नहीं है. So largely things are not moving so much, but yes, minor increases happening from the DIs and the FIs. If you could just show us the shareholding, how things are moving, and largely let's pull out the shareholding numbers to give you that entire picture of what's happening here. And yes, this is over here, and just wanted to get that thing on the screen as well. Just once, छोटा error बीच में हो जाता है, but the error in analysis is not there. Public, that's where around 22% is there, and FIs and DIs we see that's also holding up. That's around 2 to 7%. So that is what we'll be watching out for. Let's talk about street cred now and see what's happening here. And yes, this time it's right. Street cred, let's see from the IPO price, listing price, stock has done really well. It has almost doubled up, and the listing price also, stock is up 38%. And if you look at 2026, stock is up 46%. पिछले एक महीने में भी stock में तेजी आई है. That's up 14% as well. So net a good momentum coming in. So I'm going to give this a thumbs up as well. Let's talk about valuations to see so much run up has happened. Are the valuations comfortable or not? And no, it is not comfortable. Corona Remedies, it's at a trailing 12-month P of 62 times. Compare that with the other players. Of course, this is on the higher side for Torrent Pharma, 76 times of valuations coming in. Other players are still cheaper. Alchem Labs सिर्फ 32 गुना trailing P पे चल रहा है. Let's get in the other two companies also, where we'll show you Abbott and Mankind Pharma. They are still, on the cheaper side. Of course, Mankind Pharma is a very close competitor, but nevertheless, their expensive valuations are there, but not as so much as Corona Remedies. And right now, it's not a good time to enter because the valuations are not that attractive for an investor. So I'm going to give this a thumbs down. Let's talk about outlook to show you how the picture is looking like. There are 5 pillars of growth which the company is focusing on. They want to increase their market share in the domestic space. Of course, largely in the Western India, they have a better concentration. They have expanded into other 2 therapeutic areas as well, and we'll try to understand from the management which are these areas. Are they very high growth, high margin? The strategic acquisitions and in-license agreements, this is there in their business model itself. It was there before the IPO also, and now they are sticking to their culture, expanding the sales in select 5 overseas markets. Right now, only 4 or 5% of revenue is coming in. So I would say that the outlook is pretty strong. So I've given this a thumbs up as well. Let's also talk about the overall ratings, how things are looking like. And let's just get in the numbers. Largely the numbers, income statement, balance sheet has been pretty strong. Cash flow also looks decent. Return ratios, it has changed. The model of the business has changed, and that's what we are seeing in the numbers. Take things with a pinch of salt. Just 6 months of data, street cred and shareholding for you. Street cred, it has been really wonderful. 90% gains coming from the IPO price, but the run-up has made sure that the valuations are not attractive in this stock, but the outlook is pretty strong and the street is quite bullish. So the total rating in the KYC segment for Corona Remedies comes around 6 out of 8. It's largely positive on the normal averages which we give here. Let's talk about the management. After this, how things are going to be coming up. We'll have Bhavin Bhagat, the CFO at Corona Remedies, talking about the company's growth plans. But stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years.
Welcome to Know Your Company, and now we are joined in by Bhavin Bhagat. He's the CFO at Corona Remedies. Good afternoon, Bhavinji. It's always a pleasure to have you with us at NDTV Profit, and a lot of announcements are coming in, and of course your company makes a debut at KYC as well. The commercial production of women's hormone facility, that's what the street is talking about. Just wanted to understand, what is this facility and why are you focusing in this segment?
First of all, thank you so much, Shagatji, and thank you so much for inviting me in the KYC. So it is delighted to share you about our company first. And as you asked about the hormone facility, women's healthcare is a need of an hour in these days, and it is an evolving era in the modern medicine. Henceforth, we have started our EU GMP approved women's hormone manufacturing facility on 30th June 2026. As far as the women's healthcare is concerned, we are into top 5 in India as far as the covered market is concerned. And out of our several brands, 7 brands are into top 3 category in terms of rankings are concerned. So we are niche in gynecology and women's healthcare. We are present from menarche to menopause into it. So from 14 years young girl to 75 years old lady, we are catering the entire basket as far as the women's healthcare is concerned. Out of 30,000 gynecologists and IVF specialists in India, we are present in 85% of the market. And after the total revenue, 31% revenue comes from the women's healthcare and gynecology segment in us. So that is the reason it was a need of an hour for the company as well to go for a dedicated hormone facility. And we have secured our supplies not only from the manufacturing side, from the API as well, as we have invested 31% equity stake in an US FDA and EU GMP approved La Chandra facility. It is just outside, it's in Gujarat, and we have invested 31% equity to secure our supplies. So we are going all out as far as the hormones and the women's healthcare is concerned.
Right, hormones and women, that's a very interesting take which you have given and also given us an industry perspective. But Bhavin ji, अगर बताया जाए तो आपकी कंपनी की मोट क्या है? What's your moat? It's been 6 months, the markets have rewarded you, the shareholders have been rewarded, but we want to understand and maybe do a revision. आपका मोट क्या है आपके धंधे में?
So first of all, we see our business is very simple, to be very honest. You are into such business where you deal different types of people and businesses. But as far as pharma is concerned, we are into simplest form of business where every day a new company is entering into this competition. So out of 1,200, 1,300 odd pharma companies, every day a new company is entering into the business. And as you asked the question, that was what is our moat? We are very simple company. We are very focused company. Our moat is very clear, is a razor sharp focus and ruthless execution in whatever we do.
Wow, that's interesting. Bhavin bhai, let's try to understand chronic and acute, the way your business has changed. Chronic is getting more, preference going ahead, and we all know why. But just wanted to understand what's the growth outlook for acute as well as chronic now going ahead for the next 2 to 3 years.
So I'll tell you the last 3 years scenario at Corona is concerned. If the chronic is growing by 10%, which is 25% faster than the overall IPM, we are going by 19% in chronic since last 3 years. And as far as the acute is concerned, acute is going by 6 odd percent, whereas we are going double than the IPM, that is 12.5%. So acute and chronic mix, and out of which 72% is chronic in nature, chronic and subchronic, which contributes 76% of the total revenue out of it, and which is growing by 19% since last 3 years.
But the inorganic growth strategy is also something which, I've just noticed, the history also, the way you do your strategies for the portfolio launching, talking with the bigger guys, it's a very good setup which you have. But what's your inorganic growth strategy right now?
So, as far as the last 3 years growth of Corona is concerned, out of the 100 rupees growth, 85% rupees growth have come from the organic side. Only 15% came from the inorganic. That means we are not highly focused on the inorganic side. We are focused purely, majorly on the organic activities. Yes, having said that, if anything adds into the kitty, we'll definitely go for it. So our strategy as far as the inorganic acquisition is concerned is very clear and simple. We have 3 philosophies whenever we acquire any brand. First, that brand should have a strong brand recall. Means the doctor should be on the pen and mind of the brand should be on the pen and mind of the doctor, which is the first and foremost. The second philosophy of R is there should be an underlying science with that brand. And the third and most important is that perfect fitment in our basket. If all these 3 philosophies are done, we go all out for that brands. Hence, we never say that whatever brands are available on the street, we go for that. But if these 3 philosophies are tick in the box in the right manner, then we go all out.
Right, you do go all out. But Bhavin, by the Vocadin acquisition, that was a very important, step for your company. Any kind of timelines, how things are looking like when the integration will start coming in?
Yes. So as far as the last two acquisitions, what we did, that is from Bayer Pharma and in the form of a Dr. Reddy's, that is Vocadin. So just to tell you that by end of FY26, means on the last quarter, we started the integration, and the integrations is coming into picture, and the play is going on in this financial year. So this financial year is based on the execution of what acquisitions we did in last year, and it is very important for us to grow. And just to tell you, Bayer acquisition was a missing link in our entire women's healthcare portfolio. We acquired that link from Bayer Pharma, and now we are going all out and meeting the direct competition with the people who are having this infertility portfolio, which we acquired from Bayer. This is our integration. We have deployed a dedicated task force of 46 people and design a particular division to hit the IVF specialist in India. So that is our strategy as far as the inorganic from the Bayer side. And as far as the Vocadin side, we have launched into the multi-specialty portfolio, which caters the 40 to 45% revenue of the organization.
Fair enough. And the products which you are there is a good pricing power also which you have. I was just studying that as a student. But biosimilar and biologics, that's also a lot of noises coming in. We already know big players are talking very bullish sentiment about it. But your case, entry time, products launch, how are things looking like?
So as a philosophy, we introduce 6 to 8 new products on a yearly basis or an SKUs. So this is our philosophy as far as new product introduction is concerned. As far as the launch and execution is concerned, we always see that talking to the biologics and the biosimilars first, we have entered into footprints of the biosimilars by launching 3 products. That is Fostin R, which is into again a gynecology and women's healthcare segment. Second is a Tritium D mab, which is a denosumab, which is again a biosimilar, and the third is a GLP-1. So all the 3 products we have entered the biosimilar market.
Right. It's a full revision of the pharma sector, which we did in just 30 seconds. Very nicely done. Bhavin, by the capacity utilization and expansion, these are basic numbers, but the street wants to know what's the current capacity. This blended दीजिएगा consolidated करके, and the expansion strategy or any capex plans अगले 1-2 साल में.
I'll take you from the date of listing. So it is just 6 months ago. So it is very easy to tell me from that side, and a brief revision for me as well. So when we got listed, both the facilities were having 95% capacities. So in January 2026, we unlocked 40% manufacturing capacity in an EU GMP approved facility based out of Ahmedabad, which increased our further levers of growth, as we already commented in the past. Several earnings call that will be growing our revenue by 15%. So this 40% enhancement in my capacity will help me to grow for further 2 to 3 years with our own in-house manufacturing facilities. And as far as the coming years down the line, for coming 2-3 years, we need a 4th manufacturing facility by the start of FY29, for which we are seeing and seeking the land and the other machineries involved by the end of this year. So we need 2 to 3 years time, for which we need a capex of almost 175 to 200 crores, which we will be managing from our own internal accruals. And after the total mix is concerned, 65% is owned and 35% is being outsourced.
Fair enough. A very interesting take, and maybe who knows, you can have a new plant in Madhya Pradesh or South or even Bengal now. Of course, geographical diversification is something which we all want. It's always a pleasure to have you with us, and best of luck for the future going ahead. It's always a pleasure to have you at NDTV Profit.
Thank you so much. Thank you so much, Sharatji. Thank you so much for inviting.
Thank you. Thank you. So that's the management of Corona Remedies, recently listed, but the street has given a green signal. Stock has almost doubled from its IPO price, and the management are sticking to their core philosophy, and the bullishness is coming on the women hormone space as well. So for interesting companies like this, keep watching KYC and stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start.
Benchmarks sustained recovery after a sharp sell-off earlier this week. Broader markets outperform benchmarks. Defense, metals and IT lead gains. FMCG bucks the trend. Kalyan Jewellers extended its winning streak for a third straight session as a bullish brokerage view and growing confidence in its long-term growth story kept investor sentiment strong. TCS in focus after an inline set of Q1 numbers. Margins were impacted by wage hike issue. Profit declined QoQ, but attrition came in slightly above anticipated numbers and dividend was below estimates, but deal wins too were lower than earlier quarter. Dixon Technology receives government approval for its Vivo joint venture. Finally, we've been talking about this, clearing a key hurdle. The nod is expected to boost smartphone volumes, strengthen growth prospects, and has prompted brokerages to upgrade their earning estimates as well as target prices. Apollo Microsystems is buzzing in trade today as it's set to acquire a 41.3% stake in Premier Explosives in a 1,550 crore deal. Speaking to NDTV Profit, Premier said that the management will remain unchanged. FY28 will mark the partnership's rollout. Capacity expansion is on track and a stronger domestic growth is expected. Good afternoon. You're watching Markets at 12 with me, Mahima Vachharjani, and this is a show where we get you updates on the top buzzing stocks and news updates at the noon. But first, let's take a quick look as to how the markets are doing. Let's pull up the Nifty 50 and see as to where it's trading at right now. We've seen good gains coming in, slightly off from the day's high point for the Nifty 50, but still trading almost 1% higher. Let's also try to pull up the heat map because a lot of IT names in focus. A good commentary coming in from TCS is what is leading to a lot of growth in names like Infosys, plus Infosys, Tech Mahindra, etc. Of course, you have Jio Finance now topping that chart, followed by HDFC Life. You have both Adani twins doing very well in trade today, Adani Enterprises as well as Adani Ports, Indigo, JSW Steel, BEL, Infosys, RIL. So heavyweights are buzzing in trade, and that's the reason as to why we're seeing gains on the Nifty 50. But DRL for second straight day is down by about 1.8%. Eternal today finally seeing some profit booking. Nestle also continues to be under pressure, down by about 0.7%, and you have Bharti Airtel, which is down by about 0.8%. Let's also quickly pull up the mid cap 150 and the small cap 250 and see as to where the broader end of spectrum is trading at. Second straight days what we are seeing for broader markets to be performing good as compared to the benchmarks. Both the mid cap 150 and the small cap 250 are gaining in that range of 1% each. Let's also quickly pull up the advance decline ratio, because that will give you a perspective of how things are panning out. There you go. There's 2,000 odd advances versus that of around 600 odd declines. So much in the favor of the bull, and the gap between the both of them has remained intact throughout the day, at least till 12 o'clock as we see. Let's also quickly pull up the BSE 500 to see as to what are the stocks that are buzzing in trade today in the broader end of spectrum. You have Zensar Tech topping that chart, up 13 odd %. Shoppers Stop, another small cap name which is doing fairly well. Kalyan Jewellers for third day straight, gaining in that range of 6 to 7 odd %. HEG, MRPL are some of the other names that are doing fairly well. But on the flip side, your VST Industries, which is under pressure, down by about 5 odd %. Sun Pharma Advanced Research is also down by about 5 odd %. Lodha Restaurant Brands, Gujarat Ambuja Exports, and Page Industries are some of the other names that continue to be under pressure. So that's with regards to where the markets go. Let's also take a quick look as to what the crude is doing right now. It is under pressure. The Brent is down by about 0.4. So it's not under pressure per se. It's down by about 0.4 odd %, around that $76 per barrel, and WTI is down by about 0.3 odd %. So slight downtick is what we're seeing in terms of crude. So that's with regards to where the crude goes. But let's also get in Harshal Dasani, who's the business head at Invest PMS, joining us now. Harshal, a very good afternoon to you, and thank you so much for taking out the time. Because we've seen good moves coming in the markets in the last 2-3 odd days. Plus, we've seen for a change SMIDs also doing fairly well. I'll take your perspective first on the markets as to where are you seeing action right now, because there are a couple of counters which are doing fairly well. You have pharma, which has done significantly well. You have realty, which has picked up very well. Where is it that you are finding value now?
Firstly, good afternoon, and thank you so much for having me. As we're talking about the markets, as you were talking about crude, we are seeing a cool off coming in crude, and that is why we are seeing the markets really picking up. We are finally seeing not only Nifty, not only the small cap index, but the entire broader market picking up, as we were seeing in the advanced decline ratio, where we have around 2,000 stocks that are in green and close to 500 stocks in the negative. So the bulls are completely taking charge. We're seeing a broad market-based rally. And recently, the US data that came in, where we're seeing the inflation cooling down. So the chances of the Fed rate hike have gone significantly down. And once the rate hike chances have gone down, the interest rate sensitives, that is your real estate and auto, which have been underperforming for a very long time, on the fact that there's a possibility of a rate hike, have finally started cooling off and are rallying back. So I think the markets are doing fantastic. And even if you compare Indian markets to global markets right now, they have underperformed for the last 2 years. For the last September 2024, that is when we made our last all-time high. From there, we have done close to zero returns in terms of Nifty, Bank Nifty, mid cap, small cap, all the major indexes. So I finally think that right now it's the time that we are all set to break out from their all-time high. We just need that one positive trigger. See, there's still some uncertainty around the Iran-US war. I think that is settling down. Just like the Russia-Ukraine war happened, it settled down. I think Iran and US is settling down. We're going to see some down spikes when there's a tweet from Trump. But I think overall, till crude is below $80, still we are sustaining below the $80 mark. I think it is going to be fantastic for Indian economy, and the markets are going to pick up really well.
Harshal, the other aspect is IT, because we've seen good moves coming in all of these names today. Of course, it's on the back of TCS earnings. I mean, it's not like the earnings were very impressive. It was an inline set of numbers, but I think the commentary coming in seems to be positive. Plus, we've seen a lot of brokerages also that have talked about how IT could be a dark horse going forward, that, foreign players could turn to IT companies for their AI applications and solutions, etc. Just want to get a sense as to what is your view on IT right now. Is it a positive one, or do you still think that there is some more time to kind of understand as to where this move will go forward?
Absolutely. If you talk about IT right now, I think I would still wait and watch. Well, I have a negative bias towards IT, but I think I would still wait and watch. All these bounces that we are seeing right now, I would consider in the technical terms as dead cat bounce, because if you study the TCS result, right, they might have some positive triggers because of which the stock has given a good bounce back. But overall, if you consider IT, until they're not moving towards AI, they're not taking off the pivot. I think every day Claude is coming up with something new. OpenAI is coming up with something new, and all their services are getting replaced. So I think it's a sunset business till they do not move towards AI. And again, of course, you're seeing a lot of brokerage houses putting up reports, and we've seen that DIIs have been aggressively piling up on IT stocks. But if you look at FIIs, which we're talking that they might turn around as buyers, they're not going to turn around as buyers, because as a foreign institutional investor today, I have an option to buy NVIDIA and I have an option to buy TCS. What am I going to go and buy? I'm surely going to go and buy NVIDIA. I'm not going to move down to TCS until TCS is showing some phenomenal turnaround or a growth. Now, if you look at the result yesterday, the growth expectation is still in single digits. It's still somewhere close to less than 5%. And this is for every IT company. We saw the Accenture result coming in back then, and we saw the sell-off coming in Accenture. And Accenture has been historically setting up the trend for Indian IT. But I personally feel that until we are not taking that pivot, I think it's going to be a tough time for Indian IT. TCS today, at its peak, I think it was trading around a market cap of 15 lakh crores. Today, TCS is close to somewhere around 7 lakh crores, and at the lowest PE in its history, it's trading at a PE of 15. Historically, it has traded close to a PE of 22, 23. Today, it is trading at 15. People consider this as a dark horse. People consider this as a value bet. But a very simple question. A company which is growing at single digits at 5%, commanding a PE of 15 to 16, isn't that too expensive in a layman fundamental language? Well, until the growth expectation doesn't come in, until the management commentary doesn't say that, okay, we are expecting a turnaround in the growth, till then, I think IT is a no-no for me.
Got it. Harshal, we've seen a slew of business updates coming in ahead of earnings, right? You had majorly banking updates coming in, FMCG updates coming in. Anything in specific that stood out for you and something that you'll definitely be watching out for the fine print once the earnings come out? Anything in specific from the banking space, retail space, consumption space that you've liked?
Well, very honestly, banking, auto, and reality is something that I really want to stay away from right now, because the IT thing that I was talking about is going to create a massive wave of layoffs, and that is going to down the line affect the consumption. If you're losing white collar jobs, the first thing that you're not going to go and buy is auto and real estate. So I think I'm going to stay a little away from auto, real estate, and your banking. But I think the sectors that can really do well, I think pharma should do fantastic, because at 95 USD INR, they are making amazing money in terms of export, because their major earnings are in dollars, and when you convert them into INR, they're making a hell lot of money. Also, I think power companies, they're going to do fantastic. The global AI and the semiconductor theme that we have right now, India doesn't have any sector that is directly betting upon the global AI and the semiconductor theme. So the only sector that I find which are proxies to the global AI and semiconductor theme would be one, I think your power, and second would be metals, which is a proxy to power. So I think metals also should do well. Metals have taken a lot of beating down, I think, right now because of the fear of the rate hike again. But I think US at a $40 trillion debt cannot really afford a rate hike at this point of time. So I think the correction in the metals that we are seeing is temporary. So I think metals, power should do fantastic. And there's one another sector, it's a very small sector, I think, but the companies are doing fantastic. The water management sector, companies like VA Tech, Wabag, they're doing fantastic, because at this point of time, your data center and your AI is going to require a lot of fresh water to cool it down. And this sector, which has been a dark horse for a very long time, except VA Tech, Wabag, if you see many other companies, they've been on a downtrend. So I think that this sector should pick up really well. So these are the few sectors that I think could do well, and I think a few sectors that I would really want to stay away from.
Sure. Harshal, thank you so much for giving us that perspective. Definitely, that's a value add with regards to what you're tracking, and it makes sense. Power, water treatment, etc., are going to be the emerging themes going forward. So thank you so much, first of all, for taking out the time and helping us with those insights. Pleasure speaking to you.
Thank you so much. It was great talking. Yeah.
Same here, Harshal. Thank you so much. But IT remains in focus, and let's try to pull up some of those names: TCS, Infosys, Tech Mahindra, etc. And on the back of course, TCS earnings, the sector itself is gaining over that 1% mark. And to understand as to what's next for all of these players, we're now joined by Sandeep Agrawal, who tracks this space very closely. He's a fund manager and co-founder at Sovilo Investment Manager LLP. Joining us now, Sandeep. A very good afternoon to you, Mahima this side. Thank you so much, first of all, for taking out the time. I'll start by asking about TCS first, because it's not like it's a great set of numbers, right? It's an inline set of numbers, but the hiring number that came in as a surprise at a 15-quarter high. There is some bit of surprise that is coming in the AI revenue as well. Just want to get a sense from an entire perspective of the first earnings in the IT space as to how you're viewing it, and will this follow through in the other names as well, because you're seeing enthusiasm in the other names as well.
Yeah, hi, good afternoon, and thanks for having me on the show. So I will say that, while I don't give any comment on any specific company, but let me tell you that the number which has come, they are in line and they are decent. There is no negative shock in the numbers. Obviously, because so many people are talking for so long on channels globally, not only in India, for in favor of AI and semicons and chips and everything. So no one is right now focusing on IT services. And because, in the US, a lot of money has been made in AI related companies. So even there, the services companies have suffered very badly on valuation, and we are just following that. So Accenture, you can see how badly it has been hammered, and Cognizant how badly it has been hammered, and same thing is basically flowing into India. So I would say that whenever an inflection point comes in the industry, it always comes in this way only, that you will have stabilization in a particular quarter, and then things will move up. Now, I would only reiterate that, we have more than 80% market share in IT services. So it is very difficult in this outsourcing part. So it is very difficult for us to outperform or to the industry to grow in a big way. So this is a sector which will grow at a slower pace for a longer term. I think at large companies at 6-7% dollar growth will be a good growth to assume. And but the profit growth will be much better. And with those numbers, if when you do the working, you find that the numbers are not at all bad. And for that, I think the valuation has corrected meaningfully. So there seems to be good upside at the sector level. And obviously, there are many stocks which are deep value, which are small cap and mid cap as well. So barring ER&D, which I am still cautious for another 15-20% downside, I don't see downside in the IT services space. And the chain is same every time. What happens is people mix disruption and cycle together. So please don't mix disruption and cycle. Cycle is same every time.
Correct. That makes a lot of sense, Sandeep, because what you mentioned is correct. But from what you said, just trying to follow up on that, you said that there is valuation comfort in a lot of names, and you're saying that small caps and mid caps is where you're seeing more risk to reward ratio, if I'm not wrong. Is that reading correct? And in the large cap space, because a lot of these names also have weightage in the Nifty 50 per se. I mean, if somebody is viewing at the theme as a whole, because there are brokerages who are also saying that IT could be the next dark horse, because it is a possibility that foreign companies could come to India for their AI applications or solutions, etc. And this will go through via Indian companies only. So how are you viewing that comment? Plus, in the SMIDs, where are you seeing more value? And if you were to play the large cap theme, how would that play out to be?
No, so, I'm very clear in my mind what is going to happen in the space. So I have no doubt. So let me again reiterate that, the hardware players have benefited in a big way. Now the foundational layer player like the Groks and Gemini are all doing well. And we will also do well when the enterprise version of this starts getting implemented. So I am not at all in confused mind, or I have zero doubt that we will not do well. So there lot of demand and growth will come. But understand that, this is the first disruption in last 25 years where efforts is going down by 30%. In past, all disruption, what has happened, technology has transitioned from one to another. So there was a lull period of 4 quarters, 6 quarters, and then huge pent-up demand used to come and compensate for all the losses. This time that will not happen. We will not get back what we have lost. Almost 30% of effort reduction has happened. That is permanent and that is going to stay. We have to move on from here. So I'm just saying that even if you do that maths, the EPS growth for the companies for next 3 years cumulatively is between 45 to 70%. And even if you assume zero re-rating of the sector, which is unlikely, then also you will make at least this much return of 45 to 70%, which translates to 12-13% to 15-16% or 18% CAGR, which is not bad at all. How many companies does in Nifty grow at that pace? Secondly, to your point, large and mid cap and small cap. See what has happened. Small cap after COVID, the time to execute has become very important. So earlier, what used to happen? Client used to give ample time, 5-year, 10-year to execute project, and hence they had very strict criteria of choosing and how much contract in the past you have executed. So by default, Accenture, HP, and large Indian IT companies were only allowed to participate in global transactional deals. Now, post-COVID, what has happened? There is a lot of democratization. The time has become essence because of digital. So everyone wants to do very fast turnaround of the project. So everyone has been invited in every tender. And that is the reason the mid and small cap growth in last 4-5 years has been much higher than the large cap, which was opposite earlier. So I think this trend cannot reverse. Mid and small cap will definitely continue to do much better growth than large cap. And hence, till someone who wants to buy a very liquid name and large name, the large caps cannot move meaningfully. So when will that happen? That will happen when, the US investors starts seeing value in IT services there. That means they start buying Accenture or likes of that, and then they will stop selling what they're selling in the large cap in India, and then you will see meaningful upside in the large caps. Otherwise, large caps will take 6 to 9 months at least to recover in a meaningful way. But in mid and small cap, what is happening? The local mutual funds, the local HNIs, the local PMS, the local AIF, all are buying because they are going by the growth numbers. In the large cap, that is not true because large cap growth obviously is lower. And second, FI selling pressure continues there. And also FIs are not buying. So everything is going against large cap. So 6 to 9 months it can persist. But finally it will do well. That is what my call is.
Got it. Fair analysis, Sandeep. Just one last quick one from my end, because I think what stood out in TCS was also the part of hiring, right? There's a significant hiring growth coming at a 15-quarter high is what we've seen. Do you think that will follow through and this trend should continue from here on?
So I think, one thing is very clear that, people who are writing obituary of the sector, that it is one, I don't agree to it at all. I've seen this 5 times in my life. I can tell you there is a lot of demand and the ecosystem. You just see Naukri number next 2 months and you will realize that what kind of hiring has again started. So AI related talent is in short supply. Everyone has started looking for it. What TCS has done, I cannot say that everyone will show a very high headcount addition number. But I think we are very close to, again, hiring picking up. So I am not in the camp which believes that, there will be layoff in the sector and people will lose job and all that. I am in the camp which strongly believes that 80% of the pain is behind. I don't know this is the worst quarter or next one will be the worst. But we are 80-90% of the pain is behind us.
Got it. Sandeep, thank you so much for putting that perspective, perfectly, because that optimism is now being reflected in the way stocks are moving as well. So thank you so much for taking out the time and helping us understand the entire IT space. Pleasure speaking to you. Let's also quickly pull up the IT names once again. You have TCS, Infosys, Tech Mahindra all doing very well in trade today, gaining in that range of 1 to 2% each. But like Sandeep said, the worst is behind us for IT as of now is what he believes. But shifting focus, retailers body first has approached the Competition Commission of India, alleging that Flipkart is engaged in predatory pricing and unfair marketplace practices. Rishabh is here with more details on this one. Rishabh?
Absolutely. We have a copy of this complaint that has been filed by FIRST. FIRST is an abbreviation for the Forum of Internet Retailers, Sellers and Traders. So what they have done is they've filed a complaint. The Competition Commission of India complaint alleging various predatory practices that Flipkart is engaged in. What essentially they are saying, and the premise of their complaint is that Flipkart has been avoiding and reducing its GST liabilities. Thereby, it has created a pool of roughly 3,000 crore rupees, which it is using to fund the deep discounts on its platforms, and therefore causing a lot of harm to a lot of small retailers that are operating on that platform and also on the broader marketplace. What we are seeing also is that Flipkart allegedly has treated 33 sellers preferentially, and it sells to these sellers. It sells its goods to these sellers at a much lower rate than the market costs, and then these sellers in turn resell it on the platform, and thereby they're able to beat a lot of other sellers on the platform. So this is some sort of a nexus that First is alleging that Flipkart has. What First is also saying is that Flipkart is operating an inventory-led model, but they only have the permission, and India only gives permission to the likes of Flipkart and Amazon to operate a marketplace-led model. That is yet another issue that they've brought up. What they've also ordered is a probe into various other Flipkart group entities like Myntra, eCart, and ClearTrip, and all of these concerns have also been brought up with the Competition Commission of India. So that's what is to be seen is whether CC this and whether they will sort of bring this up and order a probe into it. So that's what we're keeping our eyes peeled on.
Okay, all right, Rishabh, thank you so much for getting us those details. Of course, we'll be tracking this story very closely and give you updates as and when they come. But shifting on to another one, an important one, the FCNRB deposits lose momentum after initial surge. Let's get to you the latest trends and what's driving flows from here. Piyush joins us with the latest details. Piyush?
Yes, that's right. After registering the initial surge in the deposit mobilization of FCNRB deposits, now there is a, the flows have gone back to gradual status in the sense that till now around $6 billion odd of inflows have come in, which is slightly lower than expected, but bankers are expecting it to pick up from second half of July onwards because the rates are still very good. The rates and the overall leverage that, these clients can take up to 9x is very appealing. Industry estimates that around $60 to $70 billion of FCNRB deposits can be raised through the course of this scheme, which ends in September. So the key reason as of now for the shutdown, the initial rush, like we mentioned, came from existing clients. So that base is now shrinking. Second, fresh customer additions are on the lower side. Depositors are expecting a more favorable, rupee and dollar mark because RBI takes care of banks as hedging costs, not the customers. So the levels are very important for the clients to invest in this. Borrowing costs for banks over the last couple of days have gone up because the US dollar rates, loan rates have gone up. Some clients are, on the taxation aspect also, there is a little bit of, concern on that front. Now, how will the flows improve? First is, of course, the borrowing cost. If it comes down, it's helpful for banks. Second is the hedging, the leverage. If they provide higher leverage to the client, that will also help. The engagement with the clients and counterparties, that is also essential. More deep, engagement with them. And on their part, banks, after the RBI came out with FAQ on this FCNR deposits, banks, domestic banks are now tying up with foreign banks for this SLBC facility. Under the SLBC, RBI said that banks can issue SLBC against, which is essentially bank guarantee against the FCNR deposit. But, since Indian banks don't really have a lot of presence in foreign banks, they issue this SLBC and the foreign bank then give the loan. So they are partnering with foreign banks and, figuring out how the scheme will pick up.
All right, Piyush, thank you so much for getting us those details. But viewers, with that, we're completely out of time on this edition of Markets at 12. But do stay tuned in to NDTV Profit for more news and updates on the other side.
Superstar Stocks of the Day, presented by Tata Azura. Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short.
Hello and welcome back to NDTV Profit. You're watching Trending Stocks right here from the NDTV Profit Suzlon Studios. Now, it's been an interesting session of the day for the markets because we're now above that 1% mark, continuing for the Nifty 50 at this point of time, and that augurs well after the correction that we'd seen on Wednesday. So that pressure continued. We're still yet to go back to that 24,400 mark, but important to monitor all of those key levels at this point of time. With me, Puneet Zaveri. Of course, I also have Sharad Dubey with me joining in from the market pit. But Sharad, what are some of the other key takeaways that you are looking at this point of time for the markets?
Thanks a lot. Good afternoon, Puneet. And yes, the markets are in a good recovery mode for the last two trading sessions. We are near the day's high level for Nifty. And let's pull out Nifty Bank also. Both of the benchmark indices are showing a really good strength in the markets. Now, will this sustain or not till the closing? That's what something to watch out for. But let's look at the key triggers for the markets, how things are panning out, and a good recovery is happening. And globally, the risk of sentiment which was there 48 hours ago, that is reducing. Let's pull out the factors to watch, what should be the important numbers. Of course, the first thing is the rebound. That is something which is showing a good strength. Of course, the FIs are volatile right now, but nevertheless, the sentiment is changing. The second important part is definitely going to be the new ranges of momentum to come in the resistance for both Nifty and Nifty Bank, and this is a very important trigger, and this is actually impacting the global asset classes as well. Largely crude, gold, most of them are actually quite stable right now, but the action is in the small cap, mid cap space. For the second straight day, it's outperforming the benchmarks. That is where the strength is lying, both mid cap as well as the small cap 250 index. We will be focusing on this more. The IT stocks are rallying post TCS results. Valuations were cheap, and now a good buying momentum coming in, be it mid cap, large cap, and even product based IT companies as well. Let's look at the other key factor as well of how things are panning out. All sectors are in the green. Only FMCG is slightly in red. So you can see there is a total buying happening across the sectors. Apart from this, also the earnings season start. The TCS yesterday it started, and today we have 3 earnings: Just Dial, L&T Finance, Bank of Maharashtra, all of them in the green. So we will be tracking these announcements and the earnings as well. Also, apart from this, 2 things to track today. June AMFI data is going to come out by 1 o'clock to 2 o'clock. That will show us the SIP data is expected to be near that record high levels, and of course the Forex data. And if you are tracking the AI trade, South Korea's SK Hynix ADR debuts in Nasdaq, and the numbers which I saw were phenomenal when it comes to subscription. So overall, we can say the risk-on sentiment is slowly coming back, but you never know what happens in the weekend and Donald Trump.
Well, most certainly, Sharad, that continues to be one of the biggest triggers as well. But let's look at now what's on the trending stocks watch list. Now, of course, TCS as well as the Nifty IT continue to be on our radar today on the back of earnings coming in from TCS, as well as the commentary that Q2 could start seeing some revival essentially at this point of time, and hence both those counters doing well today. Godrej Properties is also up about 4% as well. The embellishments houses amalgamation has now been approved by the company, and hence stocks reacting to that. What's also interesting is Premier Explosive. Now, Apollo Microsystems, another listed peer, has actually acquired the company at a 41.3% stake. So Premier is down 4% on the back of that announcement, and we'll just get to Apollo Microsystems in just a bit of how that stock is reacting. Vikram Solar also continues to be another stock which is in focus for today. Evervolt Solar Tech agreement has now been signed with the company, and hence stocks buzzing. Yesterday also, you do have to realize that this week we've seen the Chinese players and in China essentially the regulations change and getting more strict in. So that has also been another key trigger for all of these renewable energy players as well. But when you look at the other stocks, Dixon Tech continues to be a big one. Stocks not reacting too much, but finally, after a 19-month wait, the joint venture pact with Vivo has now been signed and approved by the government under the PN3 approval, which is required if you share a land border with India. So that's why they needed that approval to come through. Has taken a while, but is finally here. Anand Rathi Wealth also came out with good, strong set of numbers for Q1. Sharad spoke to the management today as well, and that guidance for FY27 continues at this point of time. Just Engineering is the other one. A big order book of about 912 crore, stocks reacting and continuing to be in the green at this point of time. A 15-year agreement with GAIL is also boosting Container Corp today. In the stock is up almost 2%. What's also doing well is Lux Industries. Its stock is reacting up 5% right now, as they have the Reebok trademark agreement essentially in India now, and hence that will be another growth lever for the company going forward. When you also look at some of the other ones within the tech space, of course, a letter of intent of 67 crores for Chinese Tech. That stock is up almost 2.6% as well. And Solar Industries, now this one's been a slightly more topsy-turvy. Kotak Securities initiated coverage yesterday at a 10,000 rupee target price. Today, Goldman Sachs has actually remained bullish with a target price of over 19,000. So you see that variation amongst brokerages too. But for Goldman Sachs, of course, that could be possibly one of the key triggers for the stock at this point of time. Hindustan Copper also in focus today. Elevated copper prices leading to that momentum on the particular counter. HFCL, an export order of almost $52 million is leading the stock in the green, while Paytm is up 4% on the back of a tie-up with Indonesia's Flip and as well as subsidiaries. So you will be looking at all of those counters right now. But Sharad, what are some of the ones that you are focusing on in terms of the rapid fire round with our technical guest?
Well, thanks a lot for that, Puneet. Joining us, we have Sachin Sarvade with us. Good afternoon, Sachin. It's always a pleasure to have you with us. And we'll start a rapid fire round. And interestingly, real estate stocks have been doing really well in trade. I'd like to pick out Godrej Properties near the day's high level, this stock as well. Important corporate developments. You see more buying coming in this Godrej Properties counter. And what will be the levels to watch out for?
So the stock is continuously making higher and higher low. So the trend is good for the stock, but basically the upside what we can see is 2166 and 2200 is the immediate resistance for the stock. If in case we hit that resistance line and if we are getting a supply over there, then one can book profits at that range. Support wise, 2000 and 1980 is a good support levels. If in case we are getting at that price, one can book buy at dips at that levels on a support levels basically.
Right. Another stock is Anand Rathi, a very strong set of numbers. I had a conversation with the management. They were quite bullish also, especially in the 27 guidance which they had given. But stable stock, do you think more up move is possible in this counter? Sachin?
So right now the one indicator which I see for a momentum is RSI, and it's currently at 77 levels, which is overbought levels. So we have to be cautious at current levels, and today also what we can see from a higher level, we have seen some kind of profit bookings, and on RSI as well we have seen negative divergence as well. So we have to stay cautious, but yeah, this is a good stock because it is maintaining a higher low and a very good trend. So buy on dips will be a good strategy in this, and the support levels is around 2000 and 1970.
Right, buy on dip strategy for Anand Rathi Wealth. Next stock, Jash Engineering in focus. So they have come out with their order book announcement. And of course, if you look at the long-term charts, the stock has been under a big selling pressure. But do you see the signs of bottoming out in this counter? And if yes, any important breakout levels to track for Jash Engineering?
So the stock has actually changed from down to up. The trend has been changed. The immediate resistance for the stock is 570 and 575 levels. If we are closing above 575 levels, then we can see 600, 650 levels on the upside. On the downside, 509 is a good support. So 509 and 500, this is a good demand zone. If one wants to accumulate, that area is a good accumulation point.
Right, your view on Paytm, positive development coming in, and slowly the company is actually doing well on the technical charts. We are seeing good up moves as well. Your view on Paytm, at least on the medium term basis, how does it look, at least on the weekly or the monthly charts? Sachin?
So on a weekly charts, what we can see overall trend is good, but immediate resistance for the stock is 1350, 1380 levels. If we are closing above 1380 levels, of course, the stock will perform, and then we can see higher levels of 1500 levels as well. So, but we have to wait for the closing. On a daily basis, it is in a process from changing trend from down to up. So this process may take time. So buy on dips will be a good strategy. Do not chase the price on a long side.
Right, and your views on solar industries. Yesterday there was a little bit of selling pressure as well on the brokerage reports coming in, but of course this entire industry, defense and explosives, a lot of news flows are coming in for solar industries. Is there any trade to be made here?
So one can buy solar, there is no problem as the stock trend is good. Overall what we can see, it may cross 18,900 levels, and if you are closing above 19,000 levels, we can see 20,000 and 21,000 on the upside.
All right, so this is the important levels you should track for solar industries. So that's the end of the rapid fire round. Over to you, Puneet. What are the Google trending stocks suggesting?
Well, there are a bunch of them today. Of course, we spoke about Premier Explosive as well as that acquisition led by Apollo Microsystem. That's one of the counters that is buzzing today, up 2.6% at this point of time. You also have to note that the QIP that the company did recently was at 416. So it's still trading a tad below that mark. Vedanta Limited is up almost 0.8% at this point of time. Swiggy continues to be a focus stock. Yesterday was up almost 6 to 7%. And most technical analysts spoke about that trend being broken for the upside. Today, though, you're not seeing that move yet again, so you have to continue to monitor the stock. Bharat Electronics is one which is doing well in trade, and so is Adani Power, as well as a few of the Adani stocks that are doing well in trade today. So these are the five which are buzzing on the back of Google trends as well. But Sachin, just a quick question on Swiggy, because yesterday we saw that 6 to 7% move that was led by the change in its structure for foreign ownership, now below 50%. But is there any kind of momentum yet being seen on Swiggy, or was this yesterday's move just a one-off?
So the trend for the stock is down. Basically, yesterday it actually coincided with the 100-day EMA, and today we can see open high is same basically, which is exactly giving like it has taken a resistance around that level. So profit booking will be a good strategy in this stock, and we can see a lower low as well in this stock because the trend is down.
Got that view. We'll let you go on that note. Sachin, thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But let's go back to you, Sharad. IT continues to be on our radar today.
Exactly, you're right, Puneet, and this is the sector which we have been talking about. A very good surprise coming in, and of course the valuations seem quite attractive. That's what the analysts are talking about. But why is IT stocks up? And of course there is a big contribution of TCS, and to decode that we are joined in by Jasmeet here. Jasmeet, your sector is the talk of the town. What's the main reason for this up move?
Well, sure, thank you for that. We see Nifty IT buzzing and a lot of other IT small cap also buzzing. That's on the back of that strong commentary which we saw from TCS. While we did know that TCS reported a muted to flat set of quarter, but still no bad news is a good news for the company. If we look at the overall commentary, we do know that the management remains bullish on the Q2 and the H2 going ahead, and they also state that the manufacturing and life sciences division might see a turnaround in the Q2, which is a key positive for the company and among the biggest sectors as well. Apart from that, the key positive which I have picked up from the TCS is the overall headcount hiring. Company has been hiring from last 2 consecutive quarters, and in this quarter they have done a bumper hiring of over 9,000, the net addition of 9,000 employees. So which in term relates that there could be a strong demand going ahead in the coming quarters. So that's the reason why a lot of other IT packs are also buzzing. Almost the entire IT pack is buzzing, and also we see a good value buy coming. And also, as we have seen, the valuations are at multi-year low, and for top 5 IT firms the valuations are currently at 10-year low. So a good crosshair, a good commentary about TCS management is something that's taking the overall sector at heights.
Thanks a lot, Jasmeet, for that detailed analysis. But our conversation continues for the IT. Earlier today, Neeraj had a conversation with the management. Do listen in.
When I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, obviously if there is a beat, we are all happy about it. Our order book has been good. Our largest vertical, BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having on the size, the other point is that the ticket size of our AI projects are growing, and the discussions we are having with our customers on AI. So that's also resonating very well. Our customers like the overall 5-pillar strategy we put in front of them. As I said, all in all, satisfying quarter. Geopolitics did play, particularly the Middle East war.
One of the important ones, of course, as we look at the SBI Funds IPO also, that will be another kicker for SBI as a whole in terms of cash being received as part of that IPO. But the next question now coming in, and that was Bhaskaran's query. Hopefully that answers your question, Bhaskaran, on Indian Bank. But Siv Kumar from Bengaluru is actually holding HDB Financial and wants to hold it for the next couple of months, asking if he should continue to do so. Ruchit, good afternoon to you. He's holding at 730, which is very close to the IPO price. But this counter has seen recovery from the lows. Does it continue, or are you seeing some kind of resistance again at that 730 to 750 mark?
Recently, we have seen price up move supported by increasing volume. The stock is right now trading above all its crucial moving averages. 700, I think, has become a good support base for the stock. So in the short term, till it is above that 700 mark, the near-term trend remains positive and hence can hold down.
Got that view, Ruchit. But the next question, and this one's from Navendu Sharma from Patna, on Sona BLW. It's a counter that started to see a lot of up move as we wrapped up the month of June as well as Q1. So let's look at the 1-month picture of Sona BLW. He's holding shares roughly and at the similar level, has been holding it for a while now. And there you see the 13% up move just in the last month or so. But Lancelot, this counter has seen a fresh leg up after a really long time. Would you recommend Navindu to continue holding his shares? And is it a good time to add more too?
So, if you really look at valuation, the stock is trading at about 63 times, its trailing earnings. And that is quite an expensive, valuation. However, profit growth has been good. We've seen sales growth also grow. This company has grown at almost 27 times, 27% every year, profit growth about 15%. So the track record has been good, and going forward, since you're seeing an increase in the in the commercial vehicles as well as the passenger vehicles, business will grow for them, and so I think one should remain invested at this point, but maybe not add anything unless the valuation corrects.
Fair point, Lancelot. And next one, and viewers, you can also call us on the numbers that are flashing on the top of your screen. The landline one is the one you have to use to pick up your phone, speak to us as well as our guest as well. But next one's from Shiva from Bengaluru. He's holding BEL at 419. Now, Ruchit has actually taken quite a big position of 2,300 shares in this one. And yet again, that counter seeing buying at that 400, 405 odd levels. Is this yet again seeing a momentum back to that 450 odd level, or how do you look at this move right now?
Near-term trend for the stock is still sideways. We have seen a good amount of consolidation over the last 3-4 months in BEL. But good thing is that post the recent correction from the highs, the stock is quite close to its lower end as the support end, which is around 400. So till 400 is intact, the downside seems to be limited. On the move, we need to see whether the move comes with a volume anytime going ahead. 440, 450 is the resistance zone to watch out for. So hold on at current levels. You can keep a stop loss below 395 and just review the position when the stock comes around 440 to 450.
Got that view, Ruchit. But the one space that's been very interesting is the chemical space, and we've been discussing in all of our shows how that has seen value buying starting March as well as in Q4 essentially. April, May, all of those moves started to come through for the chemical names. So Naveen Fluorine, Sudarshan Chemical are two counters that Rajesh from Hyderabad currently has on his radar. He wants to basically enter this counter, either of those, with the long-term view, and asking if there is any other ones apart from these that look great as well. Lancelot, I think one of the bigger ones at this particular point of time has been the last 3 to 4 years there's been negligible returns, but only selective stocks like Deepak Nitrite amongst others starting to see moves. How are you looking at this one?
So I think if you look at Naveen Fluorine or Sudarshan Chemicals, they're both trading at very high multiples. And given that we are just seeing the beginning of some improvement, we still have to wait and see how it plays out over the next 6 to 8 months. But the valuations have run up in advance of expectations that earnings will be good, and that's why it's a little expensive at this point in time. As far as Deepak Nitrite is concerned, or other companies in the chemical space, I think one should probably look at a company called Aether Industries. They're also looking attractive at current valuations, and Deepak Nitrite also should do better at the current valuation. So these two can be accumulated even at the current prices.
Got that view. I just want to quickly address the SIP numbers also. We will, of course, Alex addressed the main mutual fund numbers in the previous show. The SIP contribution has now come in at 31,781 crores. That's just coming in from, of course, the conference that started at 2 o'clock. But very importantly, that the momentum has currently continued, especially on the SIP book. So we've been seeing a number roughly between 30,000 odd crores per month on the SIP side. There have been some cancellations. We've talked about it in this particular quarter as well. But that SIP contribution has actually increased above the 31,000 mark now. So it's been a steady current run rate that we've been maintaining at this point of time. So just wanted to point that out. And we'll, of course, get you more details. But from the Amphi press call, this is one of the important numbers that we track as well. But get back to your stock-related queries. The next query is on Dixon. Now, this counter continues to be in focus on the back of an approval for the Vivo JV finally received after a 19-month hiatus. The company had announced an exchange filing on 15th of December. in 2024 regarding the joint venture now has gotten the government PN3 approval. But Ruchit, Sunita from Hyderabad actually booked some profits on this counter at 14,000 and asking if she should enter the counter yet again, seeing the current news flow, or she should go for some other counter like E2E network for the short term. How are you looking at this one?
I think in Dixon Technologies itself, you can keep a buy and dip strategy. Prices have already seen a pullback in last few trading sessions on anticipation of these news flows of JV. So that's why we have witnessed some sort of profit booking from the highs. But the stock has formed a very support base around 12,500 to 12% range. So I would suggest to buy and dip approach in decline forward.
I think, Ruchit, we lost you in the last 10-12 seconds odd, but was your view that Dixon Tech looks good even at this price point in terms of going back into it? Is that the correct understanding?
On dips around 12,500, sorry. 12,500 is the support now. So if you get the stop over there, then buy out.
Got it. Lancelot, I also just want to take a quick fundamental view as well, because this will incrementally add a lot of volumes as well as essentially revenue. So company back on that growth focus. Anything that you like in Dixon right now? Is it a good buy?
So I think the stock has already run up, significantly in the hope or anticipation of this news. And it's trading at about 57 times trailing earnings, which is relatively on the higher side. However, you have to see that this is one of the few companies where growth is also assured in terms of, they will grow their existing business, and as well as this new addition will add to their both volumes, revenues, as well as earnings. So I think one should wait in terms of valuation, wait for a little lower price to buy into the stock. But for sure, over the next 3 to 5 years, it's a growth story which one can look at accumulating.
Both fundamental and technical view converging on this particular counter. But let's go across to Bengaluru now. Pramod is dialing in for a stock-related query. Pramod, good afternoon to you. Welcome to the show. What's your query?
Good afternoon. I bought Sirma SGS shares in January 100 quantity at the price of 825.
Okay.
Now actually I wanted to buy like 200, 300 more shares of this. Is it the right choice? Because I have seen the PE, it's almost like 85.
Right.
So I have a time horizon of 5 years. So will it be okay if I add 200, 300 more shares of this?
And Pramod, when you entered this counter, of course, you looked at the fundamentals. Is that the correct understanding? Because you of course, gotten at a very good level, looking at where the shares are now. You also gain good profits. So did you look at the fundamentals at that time in January?
Yes, of course.
Okay, got it. And Pramod, I hope you heard Lancelot's comment on Dixon as well, because valuations in the EMS space continue to be important. But Lancelot, on Sirma SGS has been one of the biggest winners, right, in the last 1 year or so. Stocks up over 100% at this point of time. But what would you recommend, Pramod? He's already holding 100 shares at 825. Should he continue to hold those? And is it a good time to buy? Is his question now?
Yeah, I think it's a good time to hold these shares, Puneet, because you are seeing visibility in terms of growth going forward. And both on the revenue as well as on the earnings per share, we will see growth going forward. So, but at the same time, currently the stock trades at 86 times its earnings. And what happens in this kind of a high valuation, in case even you have 1 quarter of bad news, and this valuation can be hit very badly, in the sense the stock could correct significantly. So it's better to wait for a correction and then buy, because the company is one of the leaders in electronic manufacturing and RFID transponders and smart label technologies, which is mainly used in industrial logistics and pharmaceuticals. So it's a good company, good business, decent margins, but valuations are high, and then you will have to wait for the next round of appreciation to come in.
Fair point. Do you agree, Ruchit, on this one as well? Because I think for Sirma as well, there are multiple levels that got broken through in terms of resistance, and that move continues. What's a good level to buy according to you on the charts? Is it 1200 odd that you're looking at?
So we have seen that whenever there have been corrective phases, the 50-day MA has been acting as a good support, which is now around 1250 to 1310. So if one has to keep a buy and dip strategy, then any declines towards 1300, 1250 should be good levels to enter again.
Got that view, Ruchit, and hopefully Pramod, that answers your question as well. But we'll take a very short break. Back again in a jiffy with the rapid fire on the other side. Do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow business.
Welcome back. You're watching Ask Profit right here on NDTV Profit. It's now time to start the rapid fire round in this edition of the show. As you know, you also see another banking name come through in terms of earnings, but we'll get to that in just a bit. Lancelot as well as Ruchit, you know the drill. First one's from Shankar from Bengaluru. On Ashok Leyland, he's bought shares at 156, Ruchit. Wants to know if it's a good time to add more. We've seen buying from that 144 odd level. Is this a good time to buy more, Ruchit?
Range bounds to hold existing positions. Won't advise to add.
Next one's from Bharat from Hyderabad on Indian Bank, and I think we took Lancelot's view. Ruchit, our viewers bought shares at 802. Should he still continue to hold given just today that up move we are seeing on the counter? I think we seem to have lost Ruchit in that connection and probably get him back and just check with that as well. But let's take another question and then probably get back to Ruchit at this point of time. It's on Shakti Pumps. Jayashree from Coimbatore wants to enter for the next 1 year. Lancelot, is it a good time to enter?
Yes, you can look at entering this from a 1 to 2 year perspective.
Got it. Ruchit, on Indian Bank, if you can provide us with that view.
Hold with stop loss below 800 target.
Got it. The next one, and I think we seem to have a connection issue with Ruchit, so we'll probably connect back with him. Next one that we're getting in, this one's from Deepak from Dubai. He's been holding on to Wipro, but at 304. Lancelot, what would you recommend? Because you're seeing good earnings from TCS. Is it a good time to average down on Wipro, or should he just exit?
No, I don't think he should average down. It's probably better to exit, depending on whether he has a very large exposure to IT or Wipro. If it's a small exposure, you can just leave it as it is. It's not going to it wouldn't make an impact on the portfolio.
Got it. The next one coming in, and this is from Sriram Raghuraman on Kelton Tech Solutions. He's bought this at a very early level. Lancelot, a smaller name. We don't discuss this too often, but he's bought it, at 17 odd. Stocks trading at 15. Should he continue to hold?
Yes, he should continue to hold it.
Also on Vesuvius, Lancelot, Dilip from Kolkata is holding shares at 490 odd. Wants to know if it's a good investment to continue holding his 150 shares of Vesuvius.
I would think that he can hold the shares. It shouldn't be an issue.
The next one coming in, and we did answer this question. So let me ask another one to Lancelot. On Transrail, Lancelot, this question keeps propping up on a lot of investors' radar. Our viewer Hemant actually bought shares at 653. Stock's been languishing at the 500 mark for a while now. Should he wait for some kind of indication before buying it back?
So I think if he's looking to buy it back, he should definitely wait for a longer period till it corrects further.
Got it. Well, that was the last question of the rapid fire. But Lancelot, thanks so much for joining in, giving us your views across a whole bunch of stocks right now. But viewers, out of time on this edition of Ask Profit, the afternoon edition. Thanks so much for joining in. We've answered 87 queries today along with the morning edition. So thank you for all those viewers who sent in their queries. Have a happy weekend. We'll see you on Monday, but stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। PMark, the mustard specialist since 1933.
बरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, Shifted in a shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway. I think not even a month probably, right? And I literally cried that night.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because, to get a point of view as to how different jury members were looking at various participants and, the rigor that they brought it to the.
Hello and welcome. Thanks so much for joining in. You're watching live from the NDTV Profit Suzlon studio. This, of course, is India Market Close. My name is Alex Matthew, and with me in studio, you'll see her soon, is Mahima Vachurjani. Let's talk about how the equity markets are this Friday. It's a good picture. Let's start with the benchmark Nifty 50, and we're at the high point of the day, or very close to it. In fact, I wouldn't be surprised if we are at the high point of the day, up about 1%. Above that 24,200 mark and climbing, right? So you saw a little bit of a dissipation at the end of trade yesterday. I wonder if we'll hold out for the next 1 hour. That's going to be absolutely critical. One of the big talking points has been IT. And when you look at the heat map for the Nifty 50, so there you go. It's still trading with gains of about 1.9%, not the heady levels that you saw at the start. But take a look at the heat map for the Nifty 50, and right on top of the screen, you will see quite a few of them. Actually, they've given up ground, but you still have Infi, Tech Mahindra, as well as Wipro in that top line. TCS seems to have lost a little bit of ground. HCL Tech as well dropped from the high point of the day. But what's leading the gains? You have Geofinance, it's looking good. HDFC Life is okay. Adani Enterprises recouping some losses from earlier in the week. BL is looking good. Reliance Industries, possibly the reason why you're having such a rip-roaring move for the benchmark Nifty 50. And then you go down the list and you see a few private sector banks also doing okay. You have Axis Bank that's up and about. You have ICICI Bank that's gaining about 1.8% or thereabouts. So it's a pretty picture. Quite a few stocks in the green. TCS, of course, trading with gains of just about 1.2% after starting the day with gains of well over 3%. So some of that ground has been lost. Let's talk about the broader markets, and let's start with the mid-cap index, the intraday chart. Of course, we're at the high point of the day for this index as well. It's up about 1.2%. Small cap index also trading at the high point of the day, 1.3%, and that should tell you that the breadth is looking robust. The breadth pretty much at the highest gap in the trading day so far, with the advances significantly ahead of the declines. Let's pull up the sectoral indices and you'll see a sea of green here. It's again a pretty picture. What's not doing well, because let's get that out of the way, not too much to talk about here. Pharma as a pack not doing incredibly well. You have healthcare as a pack that's losing a tad bit of ground, but it's not too much to speak of. What's working is Nifty Realty once again, and we've got a special presentation for you on the show about what you need to pay attention to with regard to the rip-roaring move that this index has had over the last 1 month or so. PSU banks back in front, and this is on the back of pretty robust results that have come through from the likes of Indian Bank, even Bank of Maharashtra having a pretty decent set of numbers. Nifty IT gaining about 1.9% or thereabouts, and the India Defence is up about 1.8%. Nifty Bank not too far behind, about 1.5%. Pull up the PSU banking pack components, because this is where quite a bit of action is. You have Indian Bank on the back of a pretty good set of numbers is gaining about 10% or so. Bank of India is up and about. UBI, Canara Bank, all of those gaining over 3%. BOB is doing well. Central Bank and UCO Bank as well. So it's a pretty robust set of numbers that was posted by Indian Bank. I wonder whether that sets the template for some more of these banks. And beyond that, the question though, Mahima, is from the broader markets, what are the stocks that are doing well.
Right, so overall, Alex, the broader markets have maintained the momentum throughout the day, right? And that's the important part, because the mid cap 150, the small cap 250, both are up and above in that range of 1% each, and have held that gains throughout the day at the day's high point almost now for the small cap 250. But some specific names that are doing well in the broader end of spectrum. Let's try to pull up the BSE 500 index and see as to what are the counters that are doing really well. You have Iron Exchange, topping that chart. Zensar Tech, of course, also doing very well, up 13%. You also have Muthoot Microfinance, which is up by 12%. Greaves Cotton, Newgen Software, which is also seeing gains of about 10%. Probably on the back of that IT sentiment is what we are seeing for Newgen Software. Indian Bank is also doing fairly well. But just on the flip side, you also have names like VST Industries, Park, etc. And restaurant brands, of course, on the back of the open offer, tanking in trade by about 2 to 4% each. So that's with regards to where the broad end of spectrum goes.
Not too many big losers. And let's take a look at some of the key reasons that are contributing to where we are at with regard to the to the markets, right? The benchmark Nifty 50 gaining for a second consecutive session, led of course by Reliance Industries and the private banking names. The Nifty is in fact recouped nearly 60% of Wednesday's losses. 24,200, 24,300 remains a key resistance zone. We're trading above that 24,200 mark for now, but a decisive breakout above that mark should or could trigger fresh short covering and revive that bullish sentiment. 24,000 to 23,800 remains a strong support zone for the Nifty 50. A break below that 23,800 zone may open the door towards 23,600. Now, the Nifty Bank is on a very strong footing, recouped over 90% of Wednesday's losses. 58,250 to 58,300 is the resistance, and support is seen at 57,500. We've got Neera Vashar, Head of Equity Research at Latin Manhallar Securities, as well as Gaurav Sharma, Vice President and Head of Research at Globe Capital, joining us at this hour. Thank you so much, gentlemen, for taking the time, and good afternoon to the both of you. Gaurav, I'll come to you first. Very strong session today across the board. What do you make of the numbers that you're seeing for the Nifty 50? Is there potential for further upside?
Hi, Alex. Very good afternoon to you. Thanks for having me today. A phenomenal up move. The best part is Nifty Index is holding ground till the end of the day. Just 1 hour of trading left, and we are trading almost at the highest point of the day. Things are looking optimistic. We are expecting a further upside toward 24,300, 350 odd zone. Therefore, traders who have taken up long positions can consider holding it up. Do maintain a stop somewhere close to 24,150 odd levels.
Gaurav, and what about your picks for the day? Are they buys, or do you also have some sell calls? How are you viewing the markets right now? Especially because you'll be taking a position, into the weekend is what we're seeing. And we've seen in the last week that geopolitical situation did turn down markets. So overall, what are you seeing right now in terms of that, and what stocks are you picking?
Stock specific ample of action is there. Two stocks I have picked up today. One is from the banking space. Karur Vysya Bank is looking very attractive. It is all set for a fresh breakout. Trading in a narrow range from past couple of weeks. 306 is where it is currently trading at. Stop loss is very close by. Take a stop at somewhere close to 300 odd levels. Look for target closer to 320, 325 zone. That's first one. The second one is Lloyd Metal and Steel, Lloyd SME. Again, a clear-cut flag and pole pattern is visible in this stock. Good amount of sideways consolidation is seen at higher levels. Stock is an outperformer clearly. Current level of somewhere close to 1800 looks very attractive. Reasonable volume interest was also witnessed in today's trading session. Therefore, this is a volume-backed buying that we are seeing. One can consider buying it at current level closer to 1800 odd levels. Keep a stop at 1730, 1730, and look for targets close to 1875 to 1950 levels in the next week.
Okay, all right. Nirav, today we are seeing water treatment as a theme doing very well. There's ion exchange, which is seeing significant amount of uptake. There's Vartech Vabag, which is also doing very well. It's been doing well, in fact, for the last so many days. Just want to get a sense because, all of these names are, sitting on high Ps. But from a fundamental point of view, any of these that you're liking, maybe for an entry right now?
Good afternoon and thank you for the invite. There's clearly a scarcity premium which is prevalent in the water treatment space because of the strong prospects which we are seeing in this particular space, and there are a lot of avenues for growth in various areas like desalination or wastewater treatment or wastewater recycling, etc. And that is actually the need of the hour. So I think this is one factor. Apart from this, the renewal of the Jal Jeevan mission from the government, I think that is also going to play a critical role. And most of these players, especially the likes of Vartech, Vabag, they have learned the hard way. They have executed a lot of contracts in the past, but now there's a very good balance which is being maintained between the order book in terms of the core EPC projects as well as the O&M projects, which are asset light model, which follow asset light model and which have very strong margins. So we have Vartech Vabag, which is sitting on an order book of more than 18,000 crores. And I think a very strong revenue visibility going forward, and consistently they've been winning orders. Plus 40% of the order book is O&M contracts, which tend to have very, very thick margins. So I think this is one. And I think the rest of the players have also been picking up pace. We have Ion Exchange, which is doing quite well. We could have a Eureka Forbes, which is not far behind, which is, of course, into water purifiers, etc. So I think the entire space is buzzing, irrespective of the steep valuations.
Nirav, I do want to ask you very quickly about Indian Bank, because really this is turning out to be a stock to keep on the radar because of the kind of gains that it's had. Pull up the intraday chart for Indian Bank quickly, please. It is the top gainer in the banking pack, and we should definitely talk about it. It's up as much as 9.4%. This is on the back of the results that have come through. Net profit gain of as much as 10%. The gross NPAs have actually improved on a sequential basis. The net NPA in any case is pretty low at 0.15%. The net interest income has grown as much as 17% or thereabouts. But I think the real trigger for this kind of up move is an uptick in the net interest margin by as much as 6 basis points on a sequential basis, which looks particularly strong, doesn't it? Nirav, what do you make of the numbers? 3.41% is the NIM that this particular bank has managed to give. Is this a one-off, or do you think you can extrapolate this to other banks in the space as well?
I think a very superlative quality of numbers as far as Indian Bank is concerned. Approximately 14% growth in the advances and approximately 14% increase in the deposit mobilization. As you rightly pointed out, the net interest margin has been quite strong at 3.41%, which is quite strong. We have a CASA, which is at around 40%. So that is also, again, a very big positive. And when you tick all the boxes in this fashion, naturally the markets are going to reward you. And that's what exactly we are seeing in the case of Indian Bank.
All right, I'll circle back to find out which particular public sector bank you like. But before we do, let's go to the stock of the day. And actually, it's not just the stock of the day, it's probably the stock of the week. Kalyan Jewellers is the one that we're talking about. It's on a red hot run. Or I wonder if there are any other metaphors that you can use that have to do with gold, because the stock is up 37% from its lows and 30% in the last 3 trading sessions. Mahima joining you to talk about what is going on, Mahima.
Yeah, can we call it a golden rush, Alex, is what I'm thinking.
Yeah,
so it is, right?
Rush. Yeah,
it's a golden rush, right? And that's what has happened. In the last 3 days itself, the stock has gained over a 30% mark. It's, been up almost 40% from its lows. And, let's try to take a look at the fine print of what, the earnings of Kalyan Jewellers have looked like so far and what's working and what's not working. I'll start with the financial metrics first because in terms of the top line growth, a 3-year CAGR of 36% is what Kalyan Jewellers has witnessed, from 14%, from 32% to 43% in FY26. Profitability CAGR has been at that 44% mark. This is a 3-year CAGR that I'm talking about, from a 20% in FY24 to a 92% in FY26, and ROC trend has been improving from a 14% in FY24 to a 21% in FY26. Now, if we take a look at the valuation, because there is valuation comfort as compared to the biggest peer, that is Titan, because 1 year forward for Titan stands as around 64 times PE versus that of a 27 times for Kalyan, and for Thangamayil it is as high as 49 times because the stock has run up so much, but Senco still sits at a better position as compared to Kalyan at 15 times 1 year forward PE. Now, what's not working? This is also interesting because it has a very high exposure to Middle East. One thing, the international revenues overall are around 14% to the consolidated top line number, of which around 10% comes from Middle East. They also have 38 showrooms across UAE, and if the Middle East tension intensifies or escalates, it could impact their revenues coming in from the Middle East business. So that's 10% of their total revenue, and that's something that investors will definitely watch out for. The second aspect is the FII selling, because there has been constant selling of FIIs in the past 3 years, from a 21% in March 24 to around 14.5% in March 26 is what we've seen in terms of the FII number. In terms of the debt, because both in terms of the short-term and the long-term borrowing, that numbers have gone up. So total borrowing has gone up by around 23% in FY26. Even other liabilities in the balance sheet has gone up by 55% in FY26. Lastly, in terms of where the Bloomberg consensus estimate stands, because that if you take a look at the numbers, there are around 8 buy calls for this one, 0 hold and 0 sell calls, with a return potential of 50% is what the analysts are estimating. So this is the overall view on Kalyan Jewellers as to what is working and what's not working, and Middle East is something that everybody will be watching out for. Gaurav, I'll quickly come to you. Considering that we've seen a significant run up in the stock, what are the charts still indicating?
Mahima, charts are indicating that this run-up is likely to extend towards 500 levels. Although the stock is it has been a clear-cut underperformer, but this is a phenomenal up that we have seen in the past, say, just 2-3 days. It has went up from 350 to currently 470, 475 zones. Further upside towards 500 is pretty much likely. Therefore, a trailing stop loss is what I'll be suggesting to the traders to have here. Maintain a stop at 450. Look for immediate targets close to 500 odd levels.
Nirav, the question to you then, and Mahima just very nicely put out the comparison even on the valuation front, right? And if you compare it with a Titan, it's still trading at a discount. The question though is, will it continue to have the kind of growth run rate that it has managed in the last 12 months? What do you think?
Well, it's quite possible because we've seen that the entire gold jewelry trade is essentially very, very scattered and fragmented. And I think if I'm getting my figures right, then even Titan has a market share of approximately 7%. So there is a room for everyone to grow, and this is of course the age of the hyperlocal jeweler. And most of these players have been following very smart strategies with respect to their hedging policies, with respect to the way they are growing, because they've been following FOCO models, which is franchisee-owned, company-operated, which is an asset-light model essentially, and ensures better quality margins. And I think the positive for the Kalyan is that it was trading at a valuation comfort of around 29 times, and when you have a growth of close to 40%, which has been achieved in the Q1, then naturally the market is going to take it in a positive way. So hence we have seen this valuation catch up, which has happened very, very fast.
Yeah, indeed. And certainly that that might just be a little bit of an understatement, the valuation catch-up been fast. The gains that it has seen this week itself, 22+%. It's time now to go across to my colleague Sumit Sarkar for his regular feature at 2:45, Heard on the Street. And I'm pretty sure, Sumit, that the news and the buzz is significantly better than it was 2 days back, isn't it?
Well, even 2 days back, the news flow was obviously there. It was just the fact that people were not able to make any money out of that news flow. There was just news flow that was coming in. But right now, yes, there are a few stocks that dealers have highlighted. Firstly, it's Ellen Berry. Now there are buy flows on the PMS desk is what dealer rooms are indicating. A well-renowned PMS has been buying in to trade in this counter is what dealers have indicated. Second one is CE Info System, that is MapMy India. There are buy flows on the HNI desk and there's a buzz of a potential acquisition announcement that could come in anytime soon here. For HEG, there are buy flows on the HNI desk. Dealers are quite bullish on the demerger of its unit, which is expected to happen soon. And hence this spike in share prices is something that you have seen in trade today. And then there are multiple stocks on results. First is Bajaj Auto, Oracle Finance and Bajaj Consumer. There are buy flows on the institutional desk on all the three counters. Dealers are expecting strong Q1 numbers to come in from these names. And on the flip side, there is Angel One. There are sell flows on the large HNI desk for this counter. Dealers expect a weak Q1 earnings from Angel One. So keep an eye out for all these names in trade.
Okay, all right. Soumya, thank you so much for getting us those details. A lot of those names, Alex, are looking, very interesting. There's HEG, there's CE Info Systems. I think I'll take up HEG with you, Gaurav, first as to what are the charts indicating right now for this one.
Mahima, a fresh uptick was seen, but stock failed to hold above its crucial moving averages, which is not a good sign. A close above 555 odd levels is pretty much warranted to confirm a breakout here. Until then, such kind of volatility will continue. So I'll be interested in placing my bets once the stock is able to surpass 555 levels. Then only a further up move towards 585, 590 zone is possible. Well, among the stocks that Soumit noted here, Ellen Berry looks very attractive at the moment. It is, I even this caught my eyes only after your notified it, and it is looking exceptionally good. The results are phenomenal. The company is a consistent performer, yet the stock was not being rewarded the way it should have been. It is looking very attractive. I think a further up move is likely in this stock, although currently it has reached the 10% circuit mark, but it is still looking upbeat.
Barry, okay, keep that on your radar. What about CE Info Systems? And this is a stock that gained quite considerably in trade yesterday, Gaurav. Pull up the 1 week chart if we can do that, and you will see that spike that took place in trade yesterday. If I remember correctly, about 8% or thereabouts. It's up as much as 17%, 18%. And so if Sumit Sarkar's Heard on the Street ends up coming true, this is going to be an acquisition candidate. What's the view on the charts?
This is also looking good, but if at all a comparison needs to be done, I'll be placing bets with Ellen Berry, clearly, no doubt about it.
All right. Let's talk about the IT pack as a whole. And the pack as a whole has given up a little bit of ground, but it remains one of the key talking points of the day so far. It's up about 2% or so compared with the 4% gain that you saw, or the 3+% gain that you saw at the start of trade. And something like a TCS has come off quite substantially from the high point of the day. Look at that intraday chart. It's now trading with gains just about 1%. One can argue that those early gains were so substantial that people got in and managed to take some money off the table. But the point is, can the numbers that TCS has posted and the outlook that it has, the headcount data that it came with, can it be extrapolated to the rest of the system? And what does it mean for IT? Jasmeet joining in to tell you just that. Jasmeet?
Well, Alex, thank you for that. As rightly said, we have seen a strong commentary coming in for TCS, and that's something that's really seeing a broad-based growth across the sector. Now, if you look at the key things that were in focus for TCS, the first one was the constant currency, which has been positive for 4 consecutive quarters, which key positive showing the overall stabilization in terms of the actual growth. While the second one will be the AI revenue. It has been growing constantly, though the growth has slowed down from earlier 27 to 13%, but still growing in a double-digit form, and the management remains bullish in this. The third one is the net hiring. While it has been highest in last 15 quarters, and so far in last 2 quarters, company has hired nearly 12,000 odd employees, showing a strong momentum in the future deal wins, in the future growth as well. But the last one is the value buying, which we're seeing in IT sector, as it has already been beaten down, and the valuation is currently at a 10-year low decade. Now, in terms of the demand commentary, what we are cross-reading for other sectors is first one, the BFSI. We have seen that TCS has a flat BFSI movement. It's about 1% flattish, but still staying resilient. And given a lot of IT companies have majority of the business in BFSI, that's why we are seeing majority of the IT companies buzzing into today's trade. The second one is the consumer vertical. TCS does make a note that the consumer vertical business will come back to normal once the geopolitical tension eases down and it will start seeing the growth. And the third one is manufacturing and life sciences, where TCS says out that in the Q2 will be a turnaround quarter for these two sectors as well, and the stocks that have heavy focus in manufacturing and life sciences are buzzing in today's trade. But the last couple of them are the regional market. The India focused market has grown well for TCS, is up about 7.2%, while the management sees no broad-based discretionary spend slowing down for the company as a whole. Now we have jotted down few companies that have high focus in BFSI, manufacturing, life sciences in India. Starting off with the BFSI, we have majority of the IT companies focus in BFSI. To name the companies, we have all large caps, we also have Emphasis and OFSS all gaining in today's trade on the back of that heavy BFSI exposure. Now in terms of manufacturing and life sciences, we have stocks like Persistent Systems, Coforge and Sagility having heavy dependence on the life sciences, and that's why these three stocks are buzzing in trade on the same basis. While the last one is the India exposure. Now there are a few of the India companies which have high India exposure, like Newgen, Tanla Platforms, Orient Pro and MapMy India, which have higher Indian and regional market, and that's why these stocks are buzzing. Now, in terms of the return potential and buy call for the companies, if you look at TCS to Emphasis, we see majority of the buy calls for the company with least sell calls in terms of return potential. It lies between 8 odd to 25 odd percent, with TCS being at 24 odd percent, HCL Tech at 13 odd percent, and Coforge and Persistent between 7 to 8 odd percent from the current growth levels.
Okay, all right. Jasmeet, thank you so much for getting us those details. Quite a comprehensive link on the entire space as well as TCS. But in fact, my colleague Neeraj caught up with Kriti Vasan, who is the company's MD and CEO, and Aarti Subramaniam, who is the ED, President and CEO of the company, to discuss the quarter gone by and the outlook ahead, listening to that entire conversation.
When I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, like obviously if there is a beat, we are all happy about it. Our order book has been good. Our largest vertical, BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having on the size, the other point is that the ticket size of our AI projects are growing, and the discussions we are having with our customers on AI. So that's also resonating very well. Our customers like the overall 5-pillar strategy we put in front of them. As I said, all in all, satisfying quarter. Geopolitics did play, like particularly the Middle East war. We have impact because of that in some of the verticals, particularly retail, travel and airlines and all, and of course our Middle East business. But despite all that, we are happy that we've been able to put a good quarter.
Yeah, and I would like to get your opening thoughts before I ask about hiring, because that has stood out for me. I don't know if it's really that important in your eyes, but your opening thoughts, Aarti, on what do you think went behind the quarter and what does that signal for the quarters?
I think as Kriti said, I think it was a satisfying and a good quarter. And if you really look at the deal wins this quarter, we had one mega deal with SKF, which we are extremely pleased about. And also the nature of, it's a completely net new win and cuts across, multiple services that will deliver for SKF. Complete, AI first IT operations in terms of how the business would work, enterprise transformations, and also AI-led business transformations. So I think the whole construct is something that we are very pleased about. Then other deal wins, renewals, and again, all these renewals require a very clear AI powered proposition, and we are doing well there. And with a US based utility major, we had a very good renewal, a large deal renewal. But what we are also pleased about is how the renewal came with a large double-digit AI transformation deal, expansion baked in, right? So I think we're very happy about that as well. Apart from that, I think this quarter, if you really look at the autonomous GBS, the whole agentic AI in business process operations, we saw some really good deal wins across, HR, finance, and customer experience. So those deal wins, which are completely AI-led propositions, AI-centered propositions, I think the deal wins were quite good. And you look at our AI revenues this quarter, 2.6 billion. So I think good growth from 2.3 billion last quarter. And these nature of AI projects are such, right? These are discretionary projects, 3-month, 4-month, 6-month cycle. So to grow from 2.3 to 2.6, which means that we need to win those many newer projects to keep the growth momentum going. So net, a good quarter.
Yes, a good quarter indeed. A good hiring trend is what we've seen. Inline numbers is what we've seen, and a positive commentary, and that's reflected in TCS as well as the other IT names as well. Nirav, I'll come to you. Today in the morning I was speaking to an IT analyst, and he said that in the next 3 odd years, at least in the SMIDs, he's expecting a good CAGR of anywhere between 15 to 18 odd %. Would you also agree? And do you also think that there's value buying in the mid and small caps in the IT space, or do you still prefer large cap?
I think the TCS results have largely managed to meet the street estimates. And I think, as you pointed out, that around a 15 to 18% growth, it looks quite likely. It's quite possible that companies would be able to scale that, but it will all depend on what is the quality of execution. And of course, one positive thing which comes out of this is that the AI transformative deals have been growing. And of course, this win with SKF is definitely going to be a test case also for TCS. And hopefully they should come out strong after this execution. But numbers clearly left a lot to be desired, because we've hardly seen any sequential growth. There was a degrowth in the profitability. They've managed to hold on to their margins, but I think overall the cost structure, the costs did bite, because we've seen employee cost as well as other expenses move up at a faster clip. So I think while the valuation wise we have TCS, which trades at barely 15 times price to earning multiple, yet we have not seen any excitement for the stock, despite the fact that the valuations are looking so appealing at this point of time. I think there could be better value, which is there in the mid-cap space.
Okay, that's well put, and that's a fair assessment as well. There's still a little bit of uncertainty on how this will pan out. On that note, gentlemen, Nirav, Gaurav, thanks so much for taking the time today. Pleasure speaking with you. Happy Friday. Okay, we have to slip into a very quick break, but on the other side, we'll talk about a key trading strategy that you should keep in mind, and various other conversations. In fact, we've got a conversation lined up with perhaps one of the stocks of the day. That's Indian Bank. Stay tuned for that.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूम
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we build a prototype and learned that we can deliver the same.
Welcome back. You're watching India Market Close, and we are, in fact, talking about Indian Bank. Pull up the chart because it is arguably the stock of the day today, gaining as much as 10% and at the high point of the day. The numbers are absolutely fantastic if you think about it, right? Because the gross advances coming through with gains of as much as 14%. The personal loan segment has seen a bit of a degrowth in the retail space, but then that's not too much to worry about. In fact, that growth in deposits has been anchored by robust CASA that stands at close to 40%. The PAT number has grown by as much as 10%. Asset quality has remained resilient. Gross NPAs have actually improved on a sequential basis. The net NPAs, barely any there. They've remained pretty flat. But most importantly, the net interest margin, a key measurable for the profitability of a bank, has actually improved 6 basis points on a sequential basis. Let's bring in the management. We've got Binod Kumar, who is the Managing Director and Chief Executive Officer of Indian Bank, joining in. Mr. Kumar, thanks so much for speaking to us on NDTV Profit. I must tell you that I also have my colleague Piyush, who's joining in, who tracks the space very closely, and he'll be asking you a few questions as well. But let me start by asking you about that margin performance. Would you say that this improvement in margins is a sign that the margins for your bank in particular have bottomed out and the path ahead, the trajectory ahead, should be upwards?
I think it has bottomed out, right to say. First of all, thank you for having me here. And coming to the margin, I think it has bottomed out because I don't see any further rate cut. Going forward, impact of some MCLR may be there, but also at the same time, deposit will also reprice. So margin has bottomed out, but at the same time, I also don't see any trigger for very significant increase in any further increase in margin. So margin, I think going forward will remain flattish, 1-2 basis point expansion or few basis point expansion I can expect, but not very significant, any significant expansion from here.
Mr. Kumar, your deposit book has grown by around 13-14% odd. I'm sure you are also mobilizing FCNR deposits. If you could give some guidance on how much of these FCNR deposits you have raised and what's the target?
Yeah, so far I have raised around 140 million and I'm expecting to raise around 2 billion by the end of the period window provided by RBI.
Your advances also have done quite well. In fact, corporate loans have grown by around 12-13% odd year on year. What is the quantum of corporate loans that are in pipeline?
Pipeline is around 63,000. We have a pipeline of corporate book of around 63,000.
If you could share where this demand is coming from, which segments of loans, what corporates are putting up, and whether these are working capital loan or these are for fresh investments?
No, majorly are fresh investment because WCDL, LOC, etc. working capital, low yielding, still we have shaded around 6,000 in Q1. So, particularly, I am saying good traction in data center, good traction in green finance. A lot of battery projects are coming. Data center we have underwritten also. 2-3 projects we have underwritten. and also the transmission line. So few sector relating to green and data center, we are seeing good traction.
Sir, also I just want to understand the government's ECLGS 5.0 scheme. How many loans have been disbursed under this particular scheme? How many loans do you expect to disburse under ECLGS 5.0?
So I was expecting around total eligible customer amounting to around 11,000 crore. So out of that, around 5,000 crore has been disbursed so far. And I expect about entire 11,000 crore may not be utilized because that eligibility also provide for the customer who are very rate sensitive. So maybe because of that, but I expect majority of that will be disbursed.
Quickly, sir, you have made 350 crore of provision towards the risks that are emanating from West Asia conflict, and you have also made 1,000 crore of provision for ECL related, implementation. How much of more provisions do you expect for both of these? And in particular, from West Asia, which are the segments that are more, exposed to the risk that is coming from this conflict?
So first of all, let me give disclaimer that we have made that provision 310 crore in the Q4 itself. This quarter we have made around only 13 crore only, not much. So let me give disclaimer that we are not seeing any sign of stress anywhere. We have made this provision totally prudently. Because if you see my SMA book has come down for YoY basis from 7.99 to 4.69. So I don't see much of the impact. Going forward, ECGLS, I think around 5,000 we have disbursed already.
ECLGS. No, on expected credit loss, you have made 1,000 crore of provision. How much more do you need to make?
Okay, coming to that. So ECL, my total expectation is impact will be around 3,000 crore. And at the end of the year, I have given guidance that I will be making additional provision of around 1,500 to 2,000 in this year itself. So out of that, 1,000 I have already made. So during the course of the year, I will be able to create further buffer of around 1,000 crores. So not seeing much of the impact at the time of transition. So transition will be smooth.
Understood. Mr. Kumar, I want to come back to the deposit and the credit growth that you've displayed in the first quarter. And I'm trying to understand what the implications that of the numbers that you've given us with regard to the FCNR deposits will be on the overall growth figure in deposits for the full year FY27.
See, I will see deposit FCNR coming, but if there is something which is high yielding, so high costing, maybe I will set some of that. So depending on the cost benefit analysis, I will balance the growth. So I say FCNR I'm getting at good rate, then I will like to set some of the high costing deposit. So guidance, I keep same guidance. I'm not revising guidance as of now. I will see after Q2.
And what is that guidance, Mr. Kumar?
I have given guidance between 9 to 11%.
That's
although
pretty.
I have beaten that 13.40.
I was just going to say that's a pretty conservative guidance given the kind of track record that you've displayed. But what about advances then, Mr. Kumar? Because if you have a corporate book pipeline that is over 60,000 crore rupees and the growth that you've displayed of close to 14%, it's slightly lower than certain other peers have displayed. Would you say that you will play catch up perhaps in the second quarter? Do you anticipate that the trajectory will rise in the second half?
See, my take is even 13-14% is growth is a good growth. I remain mindful of the margin also, but I try to balance between growth and margin. And CD ratio also, we are at 81%. So if there is a huge gap in the growth, where like since you have told, I'm saying, few of the bank gap between credit growth and deposit growth is huge gap. So I will not be comfortable with that type of gap between credit and deposit growth. I will like to maintain between 1.5%. So of course we could have grown better, and this quarter it will automatically come. If you see segment wise, corporate you have already told around 12%. MSME we have grown by 17%. Retail we have grown by 19%. Only subdued performance was in agriculture, which is 9.96%. That is primarily because of the jewel loan change of the guidelines by RBI, which kicked in from 1st of April. So first 2 months it took time in stabilizing. Thereafter we have catch up. So I expect it will be good growth. Maybe 14-15% growth we can achieve.
Going back to the FCNR deposit front, we also reported today that after the initial thrust, now the deposit mobilization is becoming slower. If you could help us understand what are the rates? Should the rates be higher on such deposit? Should the leverage increase? Borrowing cost has gone up on one hand, and also there are certain reports that the RBI will meet all the banks' CEOs on July 14 to discuss deposit mobilization under the FCNRB scheme. Is that happening on later this next week?
So there are two things. First of all, FCNR, there is no dearth of FCNR. We are seeing good traction. Question remains funding of that. So funding we are arranging, and of course, we should understand the motive behind this FCNR. FCNR motive is not to earn money this time. It is to support the FII has withdrawn huge amounts. So that is to support. So even if we have to fund at some higher cost, we are okay with that. We will be supporting the need of hour. I'm okay with that.
Meeting, sir, of public sector bank CEOs on FCNRB deposits.
Agenda has not come. And normally once in a while, RBI keeps on holding this type of meeting. So, I don't think it will be only agenda. When meeting happens, many things are discussed about the health of the bank, future plan of the bank. So, not any specific agenda that only this will be discussed.
Got it. Right. All right. Thank you so much, Mr. Kumar, for taking the time, and a fantastic set of numbers that you've reported, and look forward to speaking to you again really soon.
Thank you. Thank you for having me.
All right. Piyush, thanks so much for joining us on this conversation. You should go onto the website ndtvprofit.com and take a look at some of the stories that Piyush Shukla has done, and keep a tab on his regular coverage of the banking space. Let me introduce you to Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Sher Khan, joining us right now to talk about some of the stocks that are buzzing in trade. Among them, of course, is Indian Bank. Kunal, let me start by asking you about that. It's up about 10% right now. Would you ride that rally? Would you get in at these levels? Or would you take money off the table?
I think definitely I'll ride the rally. I think there is still more upside left into the stock. Already the base that has been formed around 770, 780, that is very strong. I'm expecting going forward, the stock might continue to make a new high. So you can expect targets of 950,000 in the coming months as well.
Okay, all right. Kunal, your quick view on the indexes as well, both the Nifty 50 and the Bank Nifty?
And for the Trump, we have seen again a one-day fall of almost 400, 500 points, and again we have reversed. So overall, again, crude is the factor which one should keep an eye on. If that continues to remain stable, we'll continue the rally on the upside. Now, broader markets has been very strong, mid caps, small caps, again, they have hit a new high, and I'm expecting that to continue in the next week as well. So I think broader market participation will be very strong. For Nifty, the downside support of 23,800 is now protected. And once we again break about 24,300 on the upside and sustain above it, we'll be heading toward 24,700 on the upside. And even for the Bank Nifty index, here, there could be a sideways consolidation because next week on a Saturday, we have 4 banks coming out with results. So probably Bank Nifty might continue to consolidate at these levels. Overall, Bank Nifty also remains as a buy on dip mode. Dips to be utilized, not at the current levels because the risk to reward ratio is not favorable. And once we break above 58,500, we could head towards 59,000 on the upside.
All right. One pack of stocks continues to remain under the radar, and this is the defense pack. Of course, I'm talking about solar industries at this moment because it's in focus. It's gaining as much as 5%, and it's not cheap to begin with. It wasn't cheap yesterday. It isn't cheap today. It's something that trades with a price to earnings ratio of close to 100 or thereabouts, if I'm not mistaken. It's in focus because the DRDO successfully tested the Pinaka long-range guided rocket validating its compatibility with existing Indian Army launchers. Goldman Sachs has come out with an interesting note on the developments, and Parth is joining in to tell you about what they're saying in that note. Parth, a lot of questions about the valuations as things stand right now, but you can't argue with the kind of growth rate that the company has had and the opportunity that has presented itself.
You're absolutely right, and Goldman kind of agrees with that. Actually, they have come out with a buy rating on Solar Industries with a target price of 19,590 rupees per share, which implies an upside of almost 8% from the current market price. They're expecting that the EPS in the first quarter of FY27 could grow at a rate of 70%. So that's what they're estimating as well, and this is the highest expected growth in the coverage universe of Goldman among the defense companies. So that is what is the expectations right now. Now let's understand the reason. Let's build up more on of the DRDO successful testing which you mentioned as well. So that is the Pinaka long range guided rocket which DRDO has successfully tested. It was conducted at Chandipur's integrated test range, and the rocket achieved a precise strike. Now this is a large potential opportunity for solar industries, because according to Goldman estimates, it has a potential of around 4,500 crores. As solar industries is an extended range, because Pinaka is an extended range and guided rocket, so solar industries will be involved in that entire value chain of orders that they will be getting, and they already have an orders that are up to 6,080 crores. And also, because these rockets are lower cost, they are expected to have a wider adoption among India's overall defense network. Another long-term catalyst for solar industries is Project Kusha. DRDO has issued the RFP for Project Kusha, which means that the program is moving upwards from the designing phase into the testing and deployment phase as well. It is the India's largest long-range missile air defense program, and Solar Industries is the development and the production partner for it, along with Bharat Electronics and Dynamics as well. So this is the entire view of Goldman on the company right now.
Absolutely. All right. Thanks so much, Parth, for that. And who better to talk about this than Gurmeet Chadda, Managing Partner and CIO of Complete Circle. Gurmeet, thanks so much for taking the time, and what timing. We were just talking about solar industries and you popped in. You want to talk about some of the things that my colleague Parth was just mentioning?
No, I mean, you sometimes get lucky. I've been a beneficiary for last 10, 11 years. I think I personally bought in 3 digits. So it's been almost like a 35, maybe 40 bagger for me. So God has been kind. Sometimes you get things right. And I think we continue to hold it. I think when they keep looking, and optically it's always been expensive last 4 or 5 years. What you keep missing is the size of the opportunity. I think 2 big reforms which have gone unnoticed is that the DRDO is now virtually removed the monopoly of HAL in terms of the fighter jet program, and BDM in terms of the missile program, and which your colleague pointed out, which is development come production partners. It opens up a huge opportunity, and I think Pinaka itself could be another 4 to 5,000 crores more, maybe more, with yesterday's testing of the extended range. Then you have Bhargavastra, which so far hasn't been incorporated, which is basically your anti-drone system. Because you need to have a different to protect your important sites, let's say nuclear plant or a parliament or important religious monuments. And then is the Kusha. So right now it's 18,000 crore defense book. I think this can surprise. And I think we have, another strong 3, 4, 5 years growth more. So as I said, I think defense is right now still 30%. My sense is next 3 years it will be 50%.
Yeah, okay. So that's certainly a stock to keep on your radar. Gurmeet, I know that you track this very closely, so I'm going to ask you about this. I wonder if you've seen the Amphi data that came out just a short while back at 2 p.m. today. Seemingly the flows have recovered compared with the month of May, 28,000+ crore rupees into active managed funds, and on a gross basis, 31,700 odd crore rupees in the SIP book. That looks robust again. So seemingly that interest or that participation by retail is coming back to the fore.
No, it's visible at our end also, because we have a wealth management outfit where we do MF distribution. I think the flows are picked up. The SIP book is seeing traction. Also, the net inflows have picked up post-March. Also, if you see, you have today the MF Industries crossed 76 lakh crore. The FPI holding in India is less than 75 lakh crore. So I think the MF equity holding has crossed the FPI holding. To me, that's the big change which has happened. Obviously, we want FPIs to come back, but I think this is very structural. And look at, for example, US. You have the largest asset manager, which is 12-13 trillion dollars, which is BlackRock, and you have JP Morgan, which is $3 trillion, which is the largest bank. So I think the largest asset manager are 2, 3 times, 4 times size of the largest bank there. I think we still have a long way to go. We have about 200 lakh crore plus deposits. MF industry is still 70, 75. So we are playing asset management space. We have CAMS in the portfolio. We have Birla AMC and HDFC AMC in terms of asset managers we have. And I think SBI IPO, mutual fund IPO, I think would be another good one. 3,000-4,000 crore PAT, reasonably valued, and I mean about 12 lakh crores of AUM and growing. So I think that's one IPO I'm looking forward to.
HDFC AMC, Gurmeet, has been buzzing today. I think the earnings are expected next week, but it's seen a good volume growth also coming in as far as the charts go. But just going back to solar indices, because Gurmeet called it luck. I don't think it's just luck, right? It's all the hard work that you've put in, Gurmeet. So kudos to that. But Kunal, quickly on, since we were talking about all of these AMC companies, HDFC AMC is what I was seeing where volumes are looking very good. Do you think charts are looking attractive enough right now to make an entry?
I think yeah, definitely looks attractive. It's almost on the verge of a breakout here. So 2850 is where the resistance has been, and once we break above that, we'll be seeing new highs coming. So yes, good time to add on to for HDFC AMC, can head towards 2900.
All right, I want to quickly head across to Parth, if he's with us, to talk about some of the stocks that are buzzing in trade, possibly on the back of significant volumes. Parth?
Right, Alex. So there are 3 stocks that are buzzing in trade today. The first one is Muthoot Microfin. The stock has gained over 12% today on the back of a strong Q1 update which the company posted yesterday. The stock has reached the highest level since July 2024, and volumes today are 14 times the 20-day average. Also, this is the largest single-day gain for the stock since April 2025. The second one is Newgen Software Technologies, which has gained almost 8% today, reaching the highest level since February 2026. Volumes today are again 11 times the 20-day average, and it might be a relief move for the stock because it is down around 70% in the last 18 months. Lastly, we have Shoppers Stop, which has snapped its 2-day losing streak, and it's up over 7.5% today. At highs, at today's morning highs, the stock had almost made a new 5-month high, and the volumes today are 15 times the 20-day average. Also, this is the highest volumes Shoppers Stop has seen since July 2022. So these are the 3 stocks that are buzzing on the back of volumes.
All right. Thanks so much for that. Gurmeet, quick question on Muthoot Microfin. You may not have an individual view on this particular counter, but they've guided for a doubling of their assets under management by 2030, which is quite considerable if you think about the fact that they are in the microfinance space and the tenor of these loans is not much, right? So going to 30,000 AUM is quite substantial. If you have a view, what is it? And what is the view on microfinance lenders?
So, Alex, we've in general avoided microfinance. Reason being that, I mean, some elections, some state elections somewhere, some waiver coming, some accidents happening. So that's one space we've avoided. So we have the Muthoot, the gold financer in our portfolio, because I think that's one category which is one of the fastest growing categories. Of late, slightly under pressure because of gold prices, but that's one category which has really done well and I think continues to grow. We have recently added the commercial vehicle financers. I think the uptick has been there. You see the monthly updates on CVs now for, I think, almost 2-3 consecutive months. I think it's looking very good. And a lot of these CV financers, Shriram has done well on back of the deal, but Chola, for example, which is strong and hasn't done well. So I think that's something we are looking to add now, which is the CV financers as far as the NBFC space goes.
Right, okay. So that's the view coming in on a lot of these, BFSI names. But it's time to take a look at SBI as well, because it's unlocking value beyond its core banking franchise. With the SBI funds, of course, OFS, investors are once again focusing on the lender's valuable subsidiaries, while future monetization opportunities include the NSE stake and insurance business could keep the value unlocking story alive. Shara joins us with more details on this one.
Well, SBI is itself a big institution, and over the years they have been doing a lot of monetization all across. Now let's look at the value unlocking. First and foremost is, of course, we know about the SBI Funds IPO, where they'll be selling shares worth 7,365 crore rupees. This is based on the RHP numbers. But let's look at the other key details also, where the value creation story pans out for SBI. Their stake will, of course, come down. We have already got to know about the pre-IPO which was done. Yesterday, the announcement had come in. Almost 1.4% stake was sold. And the market cap comes in at almost 1.17 lakh crore rupees at the higher end of the price band. And these are the key numbers to actually watch out for. But let's look at the value unlocking story of how much is actually it's panning out. Let's do the SOTP valuation, that how much value is assigned to the subsidiaries. Roughly, it comes at around 12 to 13 lakh crore rupees. And if you could show the table, the core bank is just 75% of the SOTP valuation. Almost 25% comes from the other businesses. But let's try to break that down. And of course, I have added a 20% holding company discount as well. Out of that 25%, this is the breakup, which is looking like. But remember, not just the arms, they also have investments in Yes Bank and NSE, which I have added in my analysis. And if you remove the holding company discount, that comes to 25%. So the SOTP valuation is something which I have given you. But let's also talk about royalties. Royalties is very much important. Why? Because SBI Mutual Fund is using the logo and the name and distribution of SBI. So a royalty payment is coming. If you just show the royalty payment also of how things are coming out. Look at that, 500 crores SBI Mutual Fund is giving to SBI. So that's an inflow as well. And going ahead, let's give you the history of the value unlocking, what has already happened. 2 arms from SBI have been already listed. These are the numbers which is there on the screen. I have added in the calculations. This is what we'll be focusing on. That's an inflow coming in. And also 2 other arms, SBI General Insurance and SBI Payments. That's where the monetization can happen. So this is the entire picture of value unlocking.
Thank you so much for getting us those details. Kunal, a quick 20 seconds view on SBI for the charts.
Yeah, I think overall the setup still looks positive on the monthly chart. Immediate hurdle is at 1060. Once that is taken out, expect this rally to continue towards 1100, 1120 on the upside.
On that note, gentlemen, we're completely out of time. Thanks so much for taking the time and speaking to us, and happy Friday to the both of you.
Same to you.
Okay, let's talk about the equity markets as they close, as Mahima joins me to talk about the close of trade. And let's pull up the intraday chart for the Nifty 50 while we're at it. Holding at the high point of the day, 24,200 was that key resistance level. We're closing above that. That bodes well. That's unless something happens over the weekend, let's hope that that doesn't take place. While we're closing out, let's look at the weekly charts for the benchmark Nifty 50 as well as the Nifty Bank and the certain other indices as well. So for the week as a whole, you're still closing with cuts of about 0.5%, and that's because of the crack that you saw midway through the trading week. Pull up the Nifty Bank as well and see what the weekly move has been. It's still about 0.2%, so not too much damage done here. IT is a sector that you should look at as well for the weekly chart. So pull that up and let's see how that goes. And then we'll pull up the broader market gauges as well. Or maybe we can pull up the broader market gauges first, the mid-cap index and then the small-cap index as well. So the week for the mid-cap index, because of the kind of run that we've seen at the end of the week, is in the positive. Pull up the small-cap index as well and see where it's gaining. It is also gaining just about 0.2% at the end of the week. So anybody that deployed at this level has actually gained ground.
Significantly. I mean, and the last 2 days have been very good for SMIDs as a whole. But I think Realty will also be an interesting one to watch out for. Let's try to pull up the weekly chart of Nifty Realty if we can, because it's seen a significant run up. A lot of names have done very well. There you go, a 7% gain for the entire week. And we'll have to wait and watch out for whether this momentum sustains going forward or not. Let's also quickly try to pull up the heat map of the Nifty 50 and see as to how that chart is looking like. And you have Jio Finance topping that chart, followed by HDFC Life. Adani Enterprises up by 2.4%. Reliance doing also fairly well. So heavyweights have done very well, and that's kept the Nifty in check. But DRL closing by about 1.8% of a downtick. Nestle also closing almost 1% lower. And Eternal is also seeing a downtick of around 0.9%. Just a single day in this week where it's seeing a downtick of around 0.8%.
Yeah,
it's gained very well.
Just to drive home that point, and this is the last piece of data that we'll talk about, the contribution chart for the Nifty 50, right? Because you see what Mahima Sharma is just pointing out with regard to the heavyweights. There you go, Reliance Industries, ICICI Bank, HDFC Bank, Axis Bank. So all of the private sector banks, apart from Kotak Mahindra Bank in that list. Bharti Airtel, not too much to speak of, and neither are the other losers, not losing too much ground. So we're ending the week on a high, and that's certainly something to talk about. But that brings us to the end of this edition of India Market Close. From Mahima and myself and the team that put the show together from the NDTV Profit Suzlon studio, thanks so much for watching. Stay tuned. Up next is the editor's cut.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार. Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin rises near the $64,000 mark. Bitcoin ETF inflows see a good return. Swift launches blockchain shared ledger. And lastly, Brazil's B3 stock exchange launches crypto futures. Well, those were the top crypto headlines at this hour. But how should you navigate the digital assets, manage the risk, and spot the next big trend? Let's hear it from Ajit Khurana. He's the founder of Reflexical, as he shares his insights on what geopolitical tensions mean for your crypto portfolio.
So, an asset such as Bitcoin specifically, which was the first crypto, was created because of global tensions. And as a result, I think that this is the time for Bitcoin to shine. Having said that, the risk on geopolitical situation that we are facing has also created a financial situation where war tends to be inflationary. When war is inflationary, interest rates typically go up, which means liquidity in the market goes down, and this tends to have a downward pressure on crypto prices, and that is the tug of war we are facing in the markets.
And let's listen in also some advice from him in terms of what a crypto investor should do in these times.
For the common investor in the medium to long run, which I would define as 1.5 to 5 years, this does not mean much. However, for people who tend to be in it for the short run, and it has been noticed that crypto investors have a shorter investment horizon than, let's say, stock market investors, what we have found is that we are going to face a period of extreme volatility. We've already seen that over the last 2 or 3 months since the US war with Iran, and I think that could worsen over the next month or two.
Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, Shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway.
Welcome, you're watching Editor's Cut. This is a show where we break down what's happened through the week and tell you what we think about what's going to happen next week. We base it on the many conversations we have with so many people, not just each other, through the week. And this week we're going to do something a little different. We're posing 4 or 5 questions which have come from the newsroom, and we're going to talk about what we think about each of them. So let me kick off.
Do you have your boxing gloves that you've hidden behind the table? Do I need to duck and cover?
So you already know who's going to
I know.
throw the first punch.
For sure.
I brought a tank.
You brought a tank?
So out there and just shoot.
Okay. Thanks, Neeraj.
No, nowadays it's all fought with drones. So,
correct.
So your tank is obsolete now.
Completely.
I see your tank and I raise you.
No. This is not going to be one of those fights. But just talking about some of the things that are top of mind, I suppose. And the first one, I thought this was an interesting question. Has the US-Iran threat receded no matter what happens next? What I mean by has the threat receded for our cohort as investors? Has the worst of that threat receded no matter what happens next?
You want me to start? I don't think it has. Because we've seen in the week gone by itself that all it takes is a sudden spark or the possibility that there can be an escalation, and that lever of crude, which I think the equity markets in India, and in fact both the currency and the bond markets also get affected immediately. So even if you have a small inkling of an escalation in tension there, and the possibility that the Suez Canal, the Strait of Hormuz, not the Suez Canal, Strait of Hormuz gets affected, you have a situation for India.
I kind of concur with almost everything that Alex has said. Maybe oil doesn't go all the way to 110, 112, but oil going to 90 as well would mean that there could be some pressure points for the Indian markets.
I would argue that it's never going to go back to the worst part of the US-Iran conflict.
But that's my argument. So you got to say something new.
No, I'm saying I would argue it's never going to go back So it's the opposite. I'm saying that in my view, the worst is over as far as the US-Iran conflict is concerned.
From the perspective of Indian markets?
For the perspective of Indian markets, global crude markets, and everyone, except for the people who are on the other side and the receiving side of guns and bombs.
Why
not
though?
For them. So here's why. And I again come back to exactly what we observed this week. Yes, there was a very sharp reaction. There was a drawdown in Indian equities. Crude did jump up maximum till 80 on the Brent. Even that for a small period of time. It didn't go as far as shutting off the Strait of Hormuz, even though it went as far as Iran firing at a Bahrain and a Kuwait. So it could have gone that far. I think it's done in terms of the threat to global crude and global equity as a result for a couple of reasons that ships have been passing through one way or the other now for a while. Seafarers have figured it out. They shut off their transponders. There is an alternate route, and Kepler data that came out after this showed that there is an alternate route which is found. So it depends. Now there's a US blockade and there's the Iranian officials. Depends on who you talk to. Either one is going to give you a safe passage. A way out has been found. The fact that 2 days later there were 53 vessels which came through, out of them 20 Indian flagged, tells me it's never going to get so bad. The appetite for a fight to that extent is over. There will be some showboating on either side. There might be some skirmishes. Neither side is interested in going all the way to the top. One more point to bolster my view on this debate is that even when Trump was saying what he was saying, it's a very harsh language there, the technical committees on both sides are still meeting and talking. So these negotiations never really ended to that end, which is why the threat perception, at one point we were saying this is going to go nuclear, at least in my view, has now dialed down.
So, okay, so I take that point. But Neeraj, what you're saying is that the threat is not over. Why do you say that?
No, I'm just saying that even if the worst is over, and which may well be the case, that we will never have crude, possibly because of this reason, go back to 110, Brent that is. From a market's perspective, Brent at 75 versus Brent at 90 is a different argument, and therefore, if Brent were to go to, let's say, 85, 90 also, if the conversations go south, it could have an impact on the market. So is the worst over? In fact, I concur with her. Yes, the worst is over. But can this still have an impact on the markets? To that, I'm saying the argument, my argument is it can still have.
I think it
can. The chances of going to 90 have also diminished in the interim. What's happened in the last 3 months is alternate sources of crude have bumped up. Large consumers of energy like China have figured out their alternative streams in a bigger way. At least to my mind, the chances of this going back to where is the crude in the world and the Strait of Hormuz is jam-packed have diminished greatly.
In a sense, that is also on account of the fall in the demand or slightly lower demand and projection for slightly lower demand on account of slowing global growth, right? So
have I managed to convince both of you all at the end of it to come around to my view?
No, I think it's still...
No, I'm concurring. It's the worst is the worst, as in 110 is out of the window. But can a slightly higher crude price have an impact on the markets? And can crude prices go slightly higher than where they are right now? By slight, I mean until 90. I think yes.
That wasn't the question as well. The question is the US-Iran threat receded to that extent.
For the markets,
no matter what happens next. Yeah, of course. For the people sitting in Iran, of course, it's there.
No, I'm saying it's not receded because this threat could impact crude prices slightly more, and therefore it could impact the markets.
Yeah, through earnings and all of that, right? Because ultimately, if you think that the conflict is over, crude will fall, input cost pressure is over, earnings will get better.
Conflict is over. We have to now live with the new normal, where this can keep happening. It's possible this happens again next week, Wednesday, Thursday. But the responses to it, which you see, will become less and less sharper as we get used to it.
Worst may be over. But so speaking of earnings, because I mentioned it, you were at TCS yesterday, right?
Yeah.
And I think the second question that the newsroom was speaking about was, is the turnaround underway for IT? Or can you say, basis what you've seen with TCS Print, that the worst may be over?
Yes, I think all three of us heard the management. I did it in person, but all three of us saw the interview as well the next day, right? And the body language and the commentary seems to suggest that they believe that the worst is over. And by the worst, you mean the slightly lackadaisical growth without any kind of confirmed hiring or the choppiness in hiring, particularly at the TCS level, right? But the fact that they've hired 9,000 people, the fact that they've said that the margins which got impacted 24% will go to 26, 28 range, etc. All of that seems to suggest that even if they do 2%, which is done in the quarter, and if they just extrapolate it or annualize it for the year, 8-9% of growth, if they manage to do that with higher margins and therefore higher profitability and some commentary around execution, 79% of verticals showing growth, I think, and the valuations what they are, I think we got a winner on our hands.
For the IT pack, because that's the premise of the question, is TCS results indicating a turning point for IT?
So maybe the proof of the pudding is in the eating, and we wait for the others to come in. But I would presume that the giant, the
largest one.
Yeah, the largest one is doing this. So maybe the Davids will also be able to do it well enough.
I don't agree with you on that. So for a few reasons, that TCS is optically looking better because the expectations were so low. And yes,
from a stock perspective.
Yes, from a stock perspective.
Yeah, sure.
So and the results, the way the results were seen. I mean, some of these expectations were baked in. The fact that they've not reduced their guidance or any of that is good. The fact that they have the highest hiring in 15 quarters, all of that is good. But if the question is the worst over for Indian IT, I would say that let's wait 3 or 4 quarters at least to see if this continues, because a few things there. Your growth is still at 2%. Could be improving, but your growth is still very anemic. The AI deals that you're getting in are shorter term than anything else. All of those AI transition deals, they're not as long-lived, so there's no steady view there. And any new technology can come tomorrow and spoil this entire game. So I would on this one say, no, I don't think this is the turning point or the base case for Indian IT.
What you just mentioned and what we were speaking about earlier, I can't remember if we were doing this on India Market Open or was it during the break, right? Where Neeraj, you were talking about the fact that what Tamanna just mentioned, a lot of these AI transformation deals are relatively smaller in size, and the duration of these deals are as well smaller. They're not annuity deals, right? You don't carry through, and so therefore you may see a situation where IT companies need to be looked at from a different lens. You had for many, many years the ability to predict within a very narrow margin of error the kind of growth that an IT company would deliver on a quarter-on-quarter basis. That may be difficult to do, and so therefore will the view change completely from the street's perspective if next quarter there's a 15% growth or there's a 10% growth? Suddenly everyone will say, oh, the best times are back again, and then the following quarter there'll be a negative performance.
So is it a yes or a no?
I don't think that the worst is over. I think that there will be a lot of losers from this pack, and that you cannot extrapolate what one large company is doing to the rest of the pack, because you will have to separate the wheat from the chaff.
Yeah, so you have to defend because it's 2 versus 1 now.
So just one last point here, because we're going to get 3 more topics. My limited point is this, that when we're talking about this question for IT companies per se, TCS is trading at the valuations that it is because it's really been one of the biggest underperformers on the delivery side as well. If that is starting to deliver, and it is so large that it's easier for the others to probably do what a TCS is doing in terms of, some demand, some AI-led things, some companies like Persistent and a few others are doing an acquisition, Coforge is doing that. I would suspect that the others are more nimble and will be able to do it. But you know what? This debate will be put to rest in the next 2 weeks when the other companies come out with the results and the commentary.
Yeah.
So let's do this 2 weeks out on
2 weeks out as well. And I have to tell all of you, please weigh in on any of these issues that we're debating. First round was 2 versus 1. Second round was 2 versus 1. Yeah. Let's see what the third one is. The third one is an interesting topic as well.
It is. In fact, with regard to the monsoons, and we've been talking about this, the threat to the Indian economy beyond crude and the fact that it has been very volatile is the fact that the southwest monsoon monsoons have been deficient, right? I'm going to start off this time because I think that a lot of people mistake this when they look at the southwest monsoon and the progress that it makes, and I think a lot of the officials from the IMD and SkyMet tend to warn against this. You look at the overall figure and you compare it with the long period average and you say you're 95%, so you're okay. If you look at the data, we were deficient by 40% earlier at the start of June. We're now deficient by 14%. So the gap is narrowed in a big, big way. But the problem is not with that overall number. The problem is with the spatial distribution in the monsoons.
Alex, is it yes or no?
I think that it's going to be a problem, because in large tracts, you're going to have agriculture that is getting affected. And yes, one might argue that irrigation is there, and to that extent it will be mitigated, but there will be a hit to rural income, and so that to that extent there will be a little bit of distress, or at the very least a loss of consumption. What do you think?
I agree with Alex on this one, and I think it's also the distribution. Just because you have very heavy monsoons for 4 or 5 days is not necessarily a good thing. The monsoon deficit threat to rural incomes will definitely be there. Some of the kharif sowing has already been impacted. Maybe it could be blunted if we continue with rains. But remember this week on the show, we had SkyMet coming in, who said that in parts of the country which have had very heavy rains for the last few days, there's going to be 10 days of now a calm period.
Yeah.
And then maybe it'll start again, and then we'll have to still wait and see. So I think maybe the threat could be blunted at the most, I would say, but the deficit threat is still looming.
Yeah. So if I could just change the question a little bit, that is it well in the price or discovered and accepted? I would say that the answer is actually a yes. That most people now know that इतना deficit था हो गया. अभी इससे ज़्यादा तो market में as things stand, probably there's no further impact unless the monsoon really worsens further. But I personally believe that the worst of the monsoon threat is priced in.
On the earnings front as well, Neeraj?
Yeah, I would believe that people have priced it in. In fact, I wouldn't be surprised, Alex, despite the monsoon and despite the conflict, if we actually have an earnings surprise, not just in quarter one, in the quarters ahead as well. Because remember, ahead of quarter four, we were actually in an earnings upgrade cycle. There was this big hit because of the conflict.
The GST tailwinds were panning out, and all of that was happening. In fact, for the consumption, for the automotive package as a whole, and we've spoken about it repeatedly over the course of the last couple of months as well, the data shows it that demand is quite robust.
Yeah.
Demand is quite robust with how it's been so far. If we continue with this monsoon in this patchy manner, and there is effectively a deficit, you could see it impacting prices as well, and maybe not all of it is priced in. Right now.
देखते हैं again 2 versus 1, huh? But you guys are cornering me here. Okay, let's start with Alex.
Why don't you take the next question?
Yeah, I'll take the next question, and we have to put the man in the corner, right?
Yeah. Okay.
So, okay, Amphi data that proves that retail investors scared is exaggerated, right? And there was so much of chat. Will retail pull back? Now, Alex, you look at it every month.
I know that you're going to agree with me.
Why?
Because what I'm going to say is 100% what you think. Okay, so let me put the data on the table, right? First of all, that SIP figure, even in the month of May when the flows fell dramatically to 22,900 crore rupees for active equity, right? It was quite a fall. Even then, you had the SIP number that was above 31,000 crore, very close. So that gross number was robust.
This was for the month of?
May.
May.
In the month of June, which just came out, the SIP figures come to 31,700 plus crore.
Okay.
780 crore, which is great. And your active equity inflows have actually also climbed quite substantially to 28,900 crore rupees. And it's strong inflows in flexi cap, in mid cap and small cap, 5,000, 6,000 crore. And not just that, I also think that tactical allocations are being made in passive. How do you see this? You look at other ETFs, which is your Nifty 50 ETF, your Nifty Next 50, etc., right? You also have the silver ETF, but most people will likely be putting money into equity ETFs. That number is stood at over 13,000 crore rupees inflow net in this month gone by, compared with an outflow of 600 odd crore rupees in the previous month. So people have deployed money in the month of June on a tactical basis, and seemingly people have gone towards the passive side to deploy. So I think that the numbers are good. I think that people have bought the dip, and it's going to look positive going
forward. I agree. So it's 2 already. Now, come on.
There is no way to disagree on this. I can't for the sake of it be. I think the other way to look at it is what cash volumes will be like. So not in the mutual fund space, but if direct volumes have come down, F&O volumes have come down.
Stocks,
so maybe individual retail investors are not so hot on playing the market right now. But, this brings me back, and one of the questions also exciting, because a few weeks ago when Shankar Sharma came on the town hall and made that statement that India's SIP investors are actually funding FIIs from exiting, and there was a huge viral moment around it, and a lot of people actually commented कि यार SIP बंद हो जाएगा तो गड़बड़ होने वाली है. Clearly it's not happened. The data is showing it, and I think we've now passed that Rubicon where people will look at what's happening every month in their portfolios and decide to switch around?
You know, I haven't checked this and I need to check this. Gurmeet was talking to us, Gurmeet Chadda of Complete Circle was talking to us earlier today on the closing show, and he was saying that active equity as a category as a whole, 76 lakh crore rupees, and it's more than the FPI holding in the equity markets in India. 75 crore rupees, lakh crore rupees is what it is. Not to say, and he was also making the point, not to say that you shouldn't have FIS come through, but if the argument 5, 6, 7, 10 years back was that domestic investors don't own enough, or retail investors don't own enough of India, then that argument can no longer be made.
One is not owning enough of India. Two is not owning enough of some of the best companies in India. And granted, we may not have a great AI company, etc. and stuff like that. But there are some amazing names, right? If it was HDFC Bank in 2011 to 2020 and many others, and it was not owned by institutions, not owned by retailers, because always ये होता था कि 75% threshold से थोड़ा नीचे जाता था तो FI flows आ जाएंगे HDFC Bank में, because it was FI dominated. It's great to see Indians owning great Indian 100%. Companies.
Yeah, no, and it's great to see Indians deploy when the markets go down. And I'm not saying it's necessarily going to be a bet that has always worked. It doesn't.
So right.
But the fact that investors become so intuitive that when they see a dip, they're like, okay, I want to come and buy it. And that faith is persisting, I think, is a very, very important one.
Just one comment on here, a shout out to some of the advisors as well. You got to give credit to them. They are the ones who are keeping the retail investors, giving them sound advice that, right through this turbulent period, because there is a pot of gold.
I shout out to the investors as well.
As well, of course.
So if there is a contrarian view on this, we want to hear, because you don't ideally, everyone want to agree, but you also don't want to disagree for the sake of it.
I do have a slight nuance that I want to add to this, and it's an important point that you raised, because it's found, and data has proven, that average returns are not easy to get. Most people do not stay invested for the long term. They actually get out at all of the wrong times, and they get in at all of the wrong times. And so if you say that the average returns are 12, 13, 14%, whatever it is, over the long period, most people, it's actually the division of that is that most people fall at the bottom end of the bell curve, right? So it's not that traditional
but
bell curve.
Sometimes you can't time it. People will also withdraw when they need to withdraw, and then that's,
no, but people mostly withdraw because they're feeling, yahan se market niche jayega, I will buy at the lower level, or they feel ki, oh, this mutual fund is done better than my mutual fund.
But isn't that the exact opposite of what a SIP is supposed to be?
Which is why people stop SIPs and start other ones. My neighbor's SIP is doing better than mine, I should shift to that.
Okay, no, don't do that. Don't do that. There's consensus on this table that the SIP scare was exaggerated. Okay, the last one. I found the story very exciting. So there's this whole debate about Meta's new Muse image AI tool.
What is it?
So it effectively, as best I understand it, it allows you to create any image on Instagram. Now the scary bit is it can also dip into any image on any of the Meta platforms, which could be yours, which could be yours, which could be mine, which could be any of our voices. And you can use that to create a fresh image or video. And you must go to our website and read this piece if you haven't, about how to switch off those settings in your Instagram.
You can do that?
Yes, so that this cannot be used. Alex wants to look at
I want to do it right now,
right now, because this is scary. So now, not to cause fear, and I know I'm already biased with this question, Meta's Muse image AI tool is everyone's worst fear come true. I think yes. Yes, because think about it. You have an AI tool from a platform that has...
but he's changing his settings as we speak, by the way.
I am doing it right now, as we speak.
That has everyone's data. All of us are on so many apps on this one company's platforms. So I think this is the worst fear come true.
I mean, just look, I must confess that I read about this when I saw the topic that you'd highlighted, but just the idea of the muse, right? Where does it come from? It comes from Greek mythology. And the idea that you had somebody that inspired you to have creative art, right? And so the idea seemingly that Meta seems to have is that you will put images up by using somebody else as a muse. The only question is that person...
I don't know if that's what they meant to do.
I guess that's what it means.
Muse is going to be more than just this imaging tool. There's already one version which is out 3 months ago. It was called Mango. Then, they've added some more updates
But if that's the idea, then the Muse should have the option to say, hey, you know what? I don't want to be a Muse.
No, but I think privacy concerns are going to become very, very important going forward. Authenticity is going to become important. You've already had the digital arrests, fake claims, all of that happening, and that was the other thing with WhatsApp and Kunal Shah. After he came in, this was the big hullabaloo, right? That saying have usernames instead of numbers.
No, I just want to say that I was trying to do this for the last 2 minutes while we are on air. I've been able to. So you got to teach me how to do it after.
You have to go to ndtvprofit.com.
Okay, I'll do that.
There's an article there that tells you what to do.
No, but this is yes. I mean, in all stretch of imagination, the reason why blockchain got so prominent because your data should belong to you.
Yes.
And therefore privacy is so important, right? All of Apple's ads are around privacy, and if a lot of that is getting challenged by great cool tools, and if I've understood this problem correctly, great cool tools, then you ought to be worried about it. The tool may be great, but it may not be.
But I think this also brings to light, and I think this is last comment, I guess, you guys weigh in, on targeted marketing, right? Because a lot of what you do on social media generates impressions, and those impressions are ultimately used to have you targeted with marketing.
Yeah, that's the article that we're talking about. It's on the NDTV Profit website, Meta AI, how to opt out. To go and read it. I know Neeraj is going to try and read it right away. Last story before we wrap up, and this is something that our producers team highlighted, is the Chinese managing to do what Elon Musk couldn't for the longest time. They figured out a reusable rocket. And this is something which Musk has been planning for some time. So here are the pictures which came out, and it's a big step in the global space race. The country has successfully launched and gotten back and recovered the first stage of its Long March 10B rocket during its maiden orbital mission. But unlike Elon Musk's SpaceX, which lands boosters vertically, China used a giant sea-based net system to catch the returning rocket. The breakthrough makes China only the second nation to achieve controlled recovery of an orbital class booster. Cool stuff happening there. To add insult to injury, I think a few weeks ago, BYD overtook Tesla as the largest selling EV in the world. So there's a whole China versus Elon race also going on.
But profitability is an issue for BYD, right?
I mean, but they're making advances for sure. And well, let's give credit where it's due. By the way, some great changes around the India-China equations as well, right?
Important.
Chinese companies coming into India on the capital goods side.
Yeah.
The Vivo, Dixon, JV getting a nod as well.
Big story.
Amber got it earlier. So I think there is some thought there, which is good.
There has been a shift there.
Yes.
There's definitely been a shift there, and it's great for companies that are waiting to tie up those deals with their Chinese counterparts. All right, that's all the time we've had. Please weigh in on what you think of any of the topics that we've talked about, what else you want to see on the show. We'll be back next time, same place, same time on NDTV Profit.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, Shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we build a prototype and learned that we can deliver the same output.
Benchmark indices ended Friday's session with the strong gains, but the Nifty snapped its longest weekly winning streak since September, ending the week lower. Broader markets, however, have outperformed the benchmarks. Indian Bank delivers a healthy first quarter performance with net interest margin rising to 3.41% while asset quality remains stable. Management says margins are likely to remain flattish in near term. Apollo Microsystems a buzz as it's set to acquire a 41.33% stake in Premier Explosives in a 1,550 crore deal. Speaking to NDTV Profit, Premier said management will remain unchanged. FY28 will mark the partnership's rollout, capacity expansion is on track, and stronger domestic growth is expected. Akasa hits the brakes on new airport routes. Akasa Air suspends flights between Noida International Airport and Navi Mumbai International Airport due to poor demand and connectivity. Flight suspension in less than a month. Flipkart, Walmart, Myntra under lens. Retailers' body first seek CCI probe, alleges Flipkart engaged in predatory pricing and unfair marketplace practices. Delhi High Court refuses Google's plea in Hindware trademark dispute. No immediate relief for Google. Court had barred Google from auctioning Hindware keyword. After ethanol, government's big bet on hydrogen as alternate fuels, Transport Minister Nitin Gadkari has said that hydrogen is the future of transportation industry. Trails underway on 10 routes. Prime Minister Modi begins final leg of three-nation tour in New Zealand. Prime Minister Modi wraps his Australia tour after C at Melbourne Cricket Ground, highlighting the growing role of sports diplomacy in India-Australia relations. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets have really fared today. So viewers, markets have ended higher on Friday with Nifty gaining over 0.1%. The broader markets has outperformed the benchmarks, and for the week if we talk about, so benchmarks indices have ended on a subdued note with Nifty slipping over 0.2%. Let's go over to my colleague Parth for a complete market roundup.
Well, a good day for markets today. Nifty 50 ends in green and gains about 1% When you look at the broader market, while that outperforms the benchmark, Nifty mid-cap 150 and small-cap 250 both end in green and gain over 1%. When you look at over the week, the picture changes. Over the last 1 week, Nifty ends in green, the Nifty performance, and is down about 0.2%. In terms of top loser over the week, we have stocks like Trent and DRL both losing the most, while the Trent is down about 13% and DRL is down about 9%. In terms of the broader market, well, those outperform the benchmark over the week as well. Nifty mid-cap 150 ends in green and gains 1.2% and ends in green for the second consecutive week, while the top gainers in mid-cap 150 are stocks like Kalyan Jewellers, which gaining the most, gained about 25% for the week, and well, we also have Godrej Industry, which gained about 15% for the week. Now we'll look at the small-cap 150 when that ends in green for the second consecutive week, and while Nifty small-cap 250 gains about 0.6%. In terms of top gainers, we have stocks like J&K Bank and CE Info Systems, which has gained the most in the small cap 250 space. While if you look at the sectorial image, we do see that Nifty Realty was the top gaining sector for the week, which gains about for the fifth consecutive week, and it gains about 5.2%. In terms of top gainers in Nifty Realty, there are stocks like Lodha Developers and Brigade Enterprise, where they have gained the most for the week in Nifty Realty per se. Now, in terms of Nifty FMCG, that was a top losing sector, which lost about 1.5%, while Varun Beverages was a top loser of Nifty FMCG, which is down about 7%. Now, if we look at the key trends, we do make a note that Nifty PSU Bank, Nifty Oil and Gas snaps its 2 weeks of losing streak, while Nifty IT, Nifty Metal gains for the second week in a row, and Nifty IT seeing that momentum during the last couple of days after the TCS result, which came on Thursday, and we saw the impact on Friday market. Well, if you look at the other key trends, we also make a note, Nifty Pharma gains for the 5th week in a row.
All right, viewers, TCS roars on the back of resilient Q1 performance with modest revenue growth and headcount growth coming in at 15-quarter high. So my colleague and also executive editor of NDTV Profit, Neeraj Shah, caught up with K. Krithivasan Company's MD and CEO and also R.T. Subramaniam, ED President and CEO, to discuss the quarter gone by and even the outlook ahead for the company. Let's listen in to a snippet of that conversation.
When I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, obviously if there is a beat, we are all happy about it. Our order book has been good. Our largest vertical, BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having on the size, the other point is that the ticket size of our AI projects are growing. And the discussions we are having with our customers on AI, so that's also resonating very well. Our customers like the overall 5-pillar strategy we put in front of them.
Viewers, Indian Bank has delivered a healthy first quarter performance with NII rising to 3.41%. And if you talk about the asset quality, so that also remains stable. And so what really stood out in the earnings and, what is the management outlook been like? To better understand this, my colleague Piyush, in fact, spoke to Binod Kumar, who's the MD and CEO of Indian Bank. Let's listen in to that conversation.
Your deposit book has grown by around 13-14% odd. I'm sure you are also mobilizing FCNR deposits. If you could give some guidance on how much of these FCNR deposits you have raised and what's the target?
Yeah, so far I have raised around 140 million and I'm expecting to raise around 2 billion by the end of the period window provided by RBI.
Your advances also have done quite well. In fact, corporate loans have grown by around 12-13% odd year on year. What is the quantum of corporate loans that are in pipeline?
Pipeline is around 63,000. We have a pipeline of corporate book of around 63,000.
If you could share where this demand is coming from, which segments of loans, what corporates are putting up, and whether these are working capital loan or these are for fresh investments?
No, majorly are fresh investment because WCDL, LOC, etc. working capital, low yielding, still we have shaded around 6,000 in Q1. So, particularly, I am saying good traction in data center, good traction in green finance. A lot of battery projects are coming. Data center we have underwritten also. 2-3 projects we have underwritten. And also the transmission line. So few sectors relating to green and data center we are seeing good traction.
All right, viewers, let's turn to a major development in the electronics manufacturing space now. Dixon Technologies is in focus after the centre has approved its long-awaited joint venture with Vivo Mobile India. And the JV will undertake smartphone OEM manufacturing with Dixon holding about 51% stake. So the stock is reacting positively to the news and my colleague Puneet is joining us with more details on this.
It's definitely a lot of perspective being covered, but a 19-month wait has essentially ended because the company had actually alerted the exchanges on 15 December 2024 for the joint venture with Vivo. So it's taken a really long time for this approval to come through. And as you rightly mentioned, that one key aspect that management had mentioned that 45 to 60 days ramp up is still yet once the JV will be approved. Will take. So you will see 2 quarters, Q3 and Q4 essentially, and most probably at this point of time for the Vivo volumes to be visible in Dixon numbers as well. And the other aspect that the management had guided for 32 million smartphone guidance for FY27. That's a similar number that the management achieved in FY26 as well. But this does not have the Vivo JV numbers in. So, you know, the IFL estimates is around 40 million. For brokerages like Jefferies, they see a 43 million volume guidance for FY27. So they will see essentially management coming out in Q1 and upping their guidance, and that's what most brokerages also feel. So JP Morgan has actually hiked their target price to 16,700 versus 14,300 earlier, and hence a lot more management upward guidance revision is likely on the cards.
Right. Thank you so much, Puneet, for that. In fact, viewers, moving on, June mutual fund data is also out, and it shows that investors are doubling down on equities with strong inflows into mid, small and flexi cap funds. My colleague Alex is here to tell us more on this.
Well, the numbers look better than the month of May, that's for sure. And here are a few takeaways that you should pay attention to. First and foremost, the SIP data is robust once again. That number for the month of June coming in at 31,781 crore rupees, and that is a 3-month high. It's within touching distance of all-time highs, and that's certainly something to be happy about. The second key takeaway has to do with the recovery in active equity inflows, and that number climbing as much as 26.5 base. And here I'm talking about the net inflows into the active equity category. The number stood at 28,973 crore rupees. The gross inflows had actually reduced quite considerably in the month of May. That has recovered by as much as 17.3% in the month of June. And the gross number stood at 67,600 odd crore rupees, as a result of which that net numbers looked much better. You've seen pretty good inflows in a number of these important categories, small, mid and flexi cap. Passive inflows is something to pay attention to. That's the third key takeaway. And other ETFs as a category have seen inflows of over 13,230 crore rupees compared with an outflow in the previous month. However, index funds have seen a small outflow compared with a small inflow in the month of May. So seemingly some people have taken money off the table, but the last observation, or the fourth key takeaway, is that seemingly the negative sentiment among retail investors in the mutual fund category seems to have dissipated a little bit, and tactical allocations seem to be in evidence, particularly given the other ETF inflows of over 13,000 crore rupees.
All right. Thank you so much, Alex, for breaking down those numbers for our viewers there. And in fact, viewers, retailers' body First has approached the Competition Commission of India, alleging Flipkart being engaged in predatory pricing and unfair marketplace practices. Now, Flipkart has responded to the CCI complaint, and it has said that Flipkart operates in compliance with all applicable laws and will also cooperate with any sort of regulatory process. My colleague Rishabh is joining us for more details on this development.
Absolutely. We broke the story earlier this morning that a retailer's body called First has moved the Competition Commission against Flipkart over alleged predatory practices. What this body had said was that there were certain GST avoidances that Flipkart was creating, and this created a 3,000 crore rupee war chest that essentially funds the deep discounts that one can see on the Flipkart app. There were other allegations around several violations of the inventory-led model. There were claims that they are operating as an inventory-led model as opposed to having the permission to operate only as a marketplace model. There were other allegations as well, but what we have now is Flipkart's response to all of this. What they are saying essentially is that they are in compliance with all applicable laws here in India. They are saying that they will cooperate with any regulatory processes that come up as and when required. What they also are saying is that they do enable about 1.4 million sellers, most of which are smaller businesses. And that is something, and this is a smaller business body that has come up and made this complaint to the CCI. So all eyes peeled on whether this complaint actually gets admitted by the CCI and what sort of probe, if at all, is ordered by the CCI against Flipkart.
Rishabh, just stay with us, Rishabh, because we are getting another update in which TRAI has clarified, on use of 1600 series and 140 series. And they're saying that mandated use of 1600 numbers for transaction calls by government entities, financial institution, regulated by RBI, SEBI, IRDAI and PFRDA. So on this crucial development, what more are you picking up?
Yeah, so this is in accordance with what has been happening over the past few days. About 2 or 3 days back, you had the Truecaller CEO taking to social media and posting about why they feel that the introduction of these special series of numbers, has actually led to an increase in proliferation of spam calls and messages. TRAI has come out and said that they have mandated the use of these numbers for certain government entities and banks, financial institutions that are already regulated by the government in various forms like the IRDAI or the PFRDA. They've said that any tagging or blocking, if Truecaller or any other app like that blocks or tags calls from the 1600 series numbers, that is not permitted. And you've also had the TRAI that has come up and sought extra authorization from the MeitY to issue notices to such caller ID apps. So there is a sort of a standoff between TRAI and Truecaller at this point in time. One of the sharpest confrontations that one can say that Truecaller has indulged in publicly with the telecom regulator. So we are seeing a lot of developments on that front. We're chatting later with Truecaller, the CEO of Truecaller today. So stay tuned to that as well.
Absolutely. Thank you so much, Rishabh, for getting us those exclusive details on this crucial development that has come in. And, it's key to watch that what really pans out in the future as well. And viewers, moving on, Prime Minister Narendra Modi has arrived in Auckland, beginning the next leg of his 3-nation tour after concluding a high-impact visit to Australia. Now, the visit saw both countries deepen their strategic partnership across trade, defense, clean energy, critical minerals, and even maritime security. Now, before his departure, Prime Minister Modi visited the Melbourne cricket ground, where he joined Australian Prime Minister Anthony Albanese to launch the India-Australia Sports Collaboration Roadmap. And viewers, through the journey of the JRC and NDTV campaign, Child Marriage Free India, we have brought you stories from India's villages and from the farthest, most remote corners of the country. Today, we turn our lens on India's cities. For every 2 girls married off in villages, 1 girl is married off in an urban space, an alarming reality that is echoed by the latest National Family Health Survey, or the NFHS 6. So this is a crime which often exists within touching distance of our own lives. And we look at a story from Pune now, where a girl was saved from child marriage. Look at the report.
Every single day, lakhs of people arrive in our cities to chase their dreams and build their lives. Yet, within the folds of these concrete jungles thrives the insidious reality of child marriage. More often than not, it impacts girls and women known to us, who occupy the same spaces as you and I, removed just a degree or 2 from our own lives. 16-year-old Vaibhavi is one such girl, living a stone's throw from the bustling IT hub of Pune city. She was on the verge of being married off to a 25-year-old man when she was rescued in the nick of time.
एक्चुअली एक मेरी फ्रेंड है जो अहिल्या नगर में रहती है, तो उसने मुझे ऐसे ही कॉल किया था शाम के टाइम पे, और हमारी बात चल रही थी, तो उसने मुझको शेयर किया कि अरे मुझे ना हल्दी में जाना है करके। तो उसको मैंने पूछा किसकी हल्दी है, तो बोले नहीं मेरी बाजू में ही रहती है एक लड़की और उसकी शादी है और उसका जो एज है वो कम है। तो उसको पता ही था कि मैं काम करती हूँ, और उसको ये भी पता था कि बच्ची की जो शादी है वो पूना में होने वाली है। मैंने मेरे NGO को बताया इसके बारे में, और उसके बाद मैंने चाइल्ड लाइन को इन्फॉर्म किया, CWC को इन्फॉर्म किया, और इनको इन्फॉर्म करने के बाद हमने वहाँ पे जो स्पॉट था वहाँ पे हम चले गए। वहाँ पे जाने के बाद हमारे साथ में चाइल्ड लाइन का टीम था, और जैसे ही हमने इन्फॉर्म किया था कि वहाँ के स्थानिक जो पुलिस थे वो वहाँ पे थे, ग्राम सेवक था, BDO था, और देन और भी आंगनवाड़ी सेविका जो थी वो भी हमारे साथ में थी। हम लोग सब वहाँ पे पहुँचे, और बच्ची का जो एज था तो सबसे पहले हमने वो वेरीफाई किया। देन जो फैमिली थी उनको बताया कि बच्ची का जो एज है वो कम है, तो ये चाइल्ड मैरिज होता है, और अगर आप चाइल्ड मैरिज करते हो तो आपके ऊपर FIR दर्ज हो जाएगी। तो उनका काउंसलिंग किया दोनों भी फैमिलीज़ का, और फैमिली को समझाया। देन वो समझ गए कि नहीं बाबा, कि हमें चाइल्ड मैरिज नहीं करना है।
The collective action of Child Helpline, the Gram Sevak, the Block Development Officer, Indapur Police, an Anganwadi worker and the local NGO, Committed Communities Development Trust or CCDT, a partner NGO of the Just Rights for Children network, stopped the wedding before it could happen. As a result, no arrests were made. Today, CCDT continues to follow up regularly with Vaibhavi and her family to ensure her safety, education and overall well-being. Vaibhavi is still living safely at home with her family and is now preparing for her Class 10 exams. Child marriage is a crisis thriving right inside our urban centres, fueled by migration, economic pressure and a lack of awareness and action on our part. Ultimately, child marriage is a crime and a grave violation of human rights, regardless of its geography.
ग्रामीण में तो केसेस वैसे आते हैं हमको, लेकिन ऐसा नहीं है कि शहरी भाग में नहीं आते। शहरी भाग से भी केसेस हमको आते हैं। शहरी भाग में भी जो भी वहाँ के जो ये है कम्युनिटीज़ वगैरह है, जो कि रूरल मतलब जो चाल वगैरह जो बोलते हैं, उस एरिया के भी लोग कैसा रहते हैं, उनको ज़्यादा इन्फॉर्मेशन नहीं रहता है, या फाइनेंशियली उनके इशू रहते हैं, उनको फाइनेंशियली वो बच्ची को सपोर्ट नहीं कर पाते, तो उनको दिमाग में क्या रहता है कि बच्ची की शादी करवा दो, और जो है बच्ची की शादी करवा दी है तो उनके ऊपर से जिम्मेदारी निकल जाएगी।
Vaibhavi's story tells us that vulnerable girls can be protected and given a second chance at childhood when vigilant local communities and civil society networks work together. Each one of us can make a difference. Stay alert to the warning signs in your own ecosystem. Your one act of vigilance can rescue a life and save a childhood.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries. Commercial activities which they are into, and it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it, and then that hunt was on for 4 years. Nothing changed. Shifted in the shawl outside.
You have a technology called BLDC, which
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, finding you the best stories, and also, is there any alpha to be made from here onwards or not? Today is a very interesting company I've got. I'm going to explain you, but before that, try to guess it. It's an Ahmedabad-based pharma company. Very interesting name. Of course, it was recently listed, so I'm sure you'll try to guess it. A very interesting name also they have. This is one of the fastest growing companies amongst the top 30 Indian pharma peers as per the data, and Street is quite bullish on it. Recently, it was listed in the month of December 2025, 15th to be precise, but from then onwards, the IPO has been strong, the listing was strong, the stock is up almost 90% from the IPO price. IPO के भाव से लगभग 2 गुना बढ़ चुका है ये स्टॉक. लेकिन ये स्टॉक का नाम क्या है? What is this pharma company? Ahmedabad based? Interesting. No, it's not Torrent Pharma. The company's name is Corona Remedies. This is what we are talking about. But why are we calling this company? What is it that they are doing different than the markets? Why are they doing better than the industry? A lot of questions. I'll try to find you all of these answers. The commercial production of women's hormone facility. ये धंधा कैसा है? इसमें margin क्या ज़्यादा है? We'll try to understand that, and also the capacity utilization and expansion. एक हिमाचल प्रदेश, and of course the second one is in Gujarat. Another important question to be asked for the company is on the portfolio mix, chronic versus acute. Where is the company's focus actually going ahead? Another question, the fourth one, which we'll try to understand, is the inorganic growth. There is Bayer Zydus relaunch portfolio also which is coming in. How does that strategy work out for this business? And this timelines for this Vocadine acquisition. That's what the street has been looking forward to for this acquisition. It's a very interesting story though. And the biosimilar biologics, what's the entry looking like, product launch. So they are going all out as a pharma company. And the growth in the international business. It's very small right now. It's domestic focused. देखा जाए तो Mankind Pharma जैसा जो है इनका exposure है. To put that in perspective, we'll have Bhavin Bhagat, the CFO of Corona Remedies, trying to explain us what's the real story behind it. And yes, the company is coming first time in KYC. तो company के बारे में आप समझते हैं. About the company, what is it all about? It's a pharma company. It was established in the year 2004, Ahmedabad based, interesting origins. Let's talk about the other key reasons why we are interested in this counter. They develop and market therapies in women's health, cardio, diabetes, pain and urology. Lifestyle के जो आप कह सकते हैं बुरी आदत का जो impact आता है, that is what they are catering to. So this is a very interesting theme, to be honest. They operate, of course, on the certified manufacturing facilities, and Invesco has bet in this stock. 4.4% stake they are holding. So this is an interesting story. Formulations, roughly 1.65 billion units. That is the capacity which I'm talking about. Sachets comes around 20 billion, and bottles comes at around 10 million units. This is what they can keep manufacturing. Is the fastest growth amongst the top 30 Indian pharma company. This is the MAT industry data which we have taken and analyzed the key details about the company. Also 76 brands are there. They are having 32 engines brand as well. So the way they have this brand acquisition at play and the way they commercialize it, that seems to be quite important in this re-rating. Now they are commercialized recently this approval of women's hormone manufacturing facility, और इस पे जो है हमारी सबसे पहली सवाल रहने वाली है मैनेजमेंट के साथ. Everybody is talking about it. This is a very important trend and a high margin business. Also, let's look at the other key announcement. Of course, for hormone and oral solid dosage facility approvals have also started coming in. याद रखिए इनका जो हिस्ट्री है सिर्फ 6 से 7 में नहीं पुराना है. So that is how we have put our analysis as well. But let's move on from the recent announcements. What you should know before you start this. Remember, the acute
का जो business है, this is for sudden, severe and short-term condition symptom whenever we talk about acute. Number 2, chronic. This refers to a long developing persistence, long lasting condition. ये 3 महीना या lifetime हो सकता है. यानी कि chronic के धंधे में ज़्यादा customer stickiness है. That is the reason why everybody is moving towards chronic. This progress happens over a lifetime. Why this is that? Because there is a higher customer stickiness and chances of margin expansion. अगर आपको lifetime के लिए कुछ fever या आपको कुछ type से कह सकते health issue है, then you'll keep buying these products. Portfolio breakup, that is how things have changed. Look at that, the story moves on to the chronic segment. 72% of that comes from just this. The acute has come down. So this is the trend which we are looking at, and this is how things have changed for the company over the last 10 years. And remember, 96% of the revenue comes in from the domestic space and 45% comes from the western region in India. So definitely there is a skew coming in towards this, but company is expanding in the other sectors as well. This is how the domestic business looks. But इस company के positive triggers क्या हैं? तो मैंने 5 trigger निकाले हैं. The growth for the chronic segment, that is at 19%. Compare that with the industry growth, it comes in at 10%. That is a very important point to track. Also, the geographical expansion is still at play. And India is such a huge country for pharma that पहले domestic business पे focus कर लिया जाए, and that is why a lot of players are focusing on it. There's more DI and FI participation likely. इसका lock-in का जो overhang है stock का IPO का, that is also almost over, but still a good absorption is coming. That's a really good sign. The expertise in the strategic collaborations and product scaling, बड़े brands के साथ, the way they scale up and make their products, that is one of the moats which I have discovered in the history while I was studying this company. And also important approvals are being announced, and that is why the market is rewarding, at least in terms of premium valuations. But what may not work, not everything is right. In KYC, we make sure that we give you both the sides of the story. The valuations have become expensive if you are looking for fresh positions. Regulatory risks, आपको US FDA या आपके कह सकते हैं कि बाहर वाले जो रेगुलेटरी अथॉरिटीज़ होते हैं उसका इस धंधे में हमेशा रहता है. And they do a lot of integrations and acquisitions. So if there is any delay, it might be impacted in the numbers, and that is what the story is all about. But the KYC story, that's also very much important, and that's what I write. 8 rating parameters I get for you. This of course includes the income statement, balance sheet, cash flow, and the usual return ratios, especially the ROC numbers. Very important to track as an investor, especially if you are from the long-term thought process. Street cred and shareholding, take it with a pinch of salt. सिर्फ 6 महीना का ही data है, उतना ज़्यादा है नहीं. Valuations, I'll give you an interesting peer list, and more than 3 of them are there. It'll be very interesting to analyze. Is there any fair valuation left, or the stock has run up already from the IPO? And the outlook, where is the overall guidance looking like? And company is coming for the first time in KYC, so this is something which everybody will be excited about. But let's talk about income statement and see what's happening here. This is the first one to talk about. Largely the 3-year CAGR numbers look pretty decent. That's around 17 odd %. 32 to 33% growth coming in the EBITDA as well. That is where we see a good momentum coming in. So it's kind of ticking all the right boxes, and this is where the business model थोड़ा change हो रहा है. और अब 20-21% पे जो है margins आ चुके हैं, and it's a significant jump, and they're sustaining it. This is what I like about companies, you know, the way they change, and the change is the biggest constant in life, as everybody talks about. So let's talk about balance sheet, what's happening here. In balance sheet, I feel a little bit of debt levels are on the higher side, and the way the expansions happen or integrations happen, then of course stress comes in financials, especially in balance sheet, and that's what is looking like. But nevertheless, it's decently managed as of now. हाल ही में IPO भी हुआ था, तो capitalization was decent. So it's a neutral rating right now for my analysis. But apart from this balance sheet, let's talk about the cash flow segment, what's happening here. In cash flow, we see a good amount of movement has happened. It's at 229 crore rupees. Compare that, it's around 157 crore rupees. So you see a good momentum is coming in. Let's talk about the overall absorptions, the way things are panning out, and this is around 115%. It's pretty decent. ज़्यादा net cash flows अभी check ना करें. Company is in its growth phase right now. ये ज़्यादा important होता है. इस पे आप ध्यान दें. So right now it's a strong positive sign in the operating cash flow segment. But let's talk about return ratio. What's the story looking like? And wow, the ROC numbers, something was there in FY23, FY24, especially for margins and the return ratios, and there seems to be a change happening in both these years, and it is sustaining. So now it's a high ROC business as well, and I had mentioned they are looking after a lot of these important, you could say the chronic segment. That's where the focus is, and we can see that in the numbers. So it's a strong thumbs up when it comes to the ROC numbers. Let's talk about shareholding and just take it with a pinch of salt. सिर्फ 2 quarter का ही data है, उतना ज़्यादा नहीं है. So largely things are not moving so much, but yes, minor increases happening from the DIs and the FIs. If you could just show us the shareholding, how things are moving, and largely let's pull out the shareholding numbers to give you that entire picture of what's happening here. And yes, this is over here, and just wanted to get that thing on the screen as well. Just once, छोटा error बीच में हो जाता है, but the error in analysis is not there. Public, that's where around 22% is there, and FIs and DIs we see that's also holding up. That's around 2 to 7%. So that is what we'll be watching out for. Let's talk about street cred now and see what's happening here. And yes, this time it's right. Street cred, let's see, from the IPO price, listing price, stock has done really well. It has almost doubled up, and the listing price also, stock is up 38%. And if you look at 2026, stock is up 46%. पिछले एक महीने में भी stock में तेजी आई है. That's up 14% as well. So net a good momentum coming in. So I'm going to give this a thumbs up as well. Let's talk about valuations to see if so much run up has happened. Are the valuations comfortable or not? And no, it is not comfortable. Corona Remedies, it's at a trailing 12-month P of 62 times. Compare that with the other players. Of course, this is on the higher side for Torrent Pharma, 76 times of valuations coming in. Other players are still cheaper. Alchem Labs सिर्फ 32 गुना trailing P पे चल रहा है. Let's get in the other two companies also, that where we'll show you Abbott and Mankind Pharma. They are still, on the cheaper side. Of course, Mankind Pharma is a very close competitor, but nevertheless, their expensive valuations are there, but not as so much as Corona Remedies. And right now, it's not a good time to enter because the valuations are not that attractive for an investor. So I'm going to give this a thumbs down. Let's talk about outlook to show you how the picture is looking like. There are 5 pillars of growth which the company is focusing on. They want to increase their market share in the domestic space. Of course, largely in the Western India, they have a better concentration. They have expanded into other 2 therapeutic areas as well, and we'll try to understand from the management which are these areas. Are they very high growth, high margin? The strategic acquisitions and in-license agreements, this is there in their business model itself. It was there before the IPO also, and now they are sticking to their culture, expanding the sales in select 5 overseas markets. Right now, only 4 or 5% of revenue is coming in. So I would say that the outlook is pretty strong. So I've given this a thumbs up as well. Let's also talk about the overall ratings, how things are looking like. And let's just get in the numbers. Largely the numbers, income statement, balance sheet has been pretty strong. Cash flow also looks decent. Return ratios, it has changed. The model of the business has changed, and that's what we are seeing in the numbers. Take things with a pinch of salt. Just 6 months of data, street cred and shareholding for you. Street cred, it has been really wonderful. 90% gains coming from the IPO price, but the run-up has made sure that the valuations are not attractive in the stock, but the outlook is pretty strong and the street is quite bullish. So the total rating in the KYC segment for Corona Remedies comes around 6 out of 8. It's largely positive from the normal averages which we give here. Let's talk about the management. After this, how things are going to be coming up. We'll have Bhavin Bhagat, the CFO at Corona Remedies, talking about the company's growth plans. Now we are joined in by Bhavin Bhagat. He is the CFO at Corona Remedies. Good afternoon, Bhavin ji. It's always a pleasure to have you with us at NDTV Profit. And a lot of announcements are coming in. And of course, your company makes a debut at KYC as well. The commercial production of women's hormone facility. That's what the street is talking about. Just wanted to understand what is this facility and why are you focusing in this segment?
First of all, thank you so much, Sharatji, and thank you so much for inviting me in the KYC. So it is delighted to share you about our company first. And as you asked about the hormone facility, women's healthcare is a need of an hour in these days, and it is an evolving era in the modern medicine. Henceforth, we have started our EU GMP approved women's hormone manufacturing facility on 30th June 2026. As far as the women's healthcare is concerned, we are into top five in India as far as the covered market is concerned. And out of our several brands, 7 brands are into top 3 category in terms of rankings are concerned. So we are niche in gynecology and women's healthcare. We are present from menarche to menopause into it. So from 14 years young girl to 75 years old lady, we are catering the entire basket as far as the women's healthcare is concerned. Out of 30,000 gynecologists and IVF specialists in India, we are present in 85% of the market. And after the total revenue, 31% revenue comes from the women's healthcare and gynecology segment in us. So that is the reason it was a need of an hour for the company as well to go for a dedicated hormone facility. And we have secured our supplies not only from the manufacturing side, from the API as well, as we have invested 31% equity stake in an US FDA and EU GMP approved La Chandra facility. It is just outside, it's in Gujarat, and we have invested 31% equity to secure our supplies. So we are going all out as far as the hormones and the women's healthcare is concerned.
Right, hormones and women, that's a very interesting take which you have given and also given us an industry perspective. But Bhavin ji, अगर बताया जाए तो आपकी कंपनी की मोट क्या है? What's your moat? It's been 6 months, the markets have rewarded you, the shareholders have been rewarded, but we want to understand and maybe do a revision. आपका मोट क्या है आपके धंधे में?
So first of all, we see our business is very simple, to be very honest. Right. You are into such business where you deal different types of people and businesses. But as far as pharma is concerned, we are into simplest form of business where every day a new company is entering into this competition. So out of 1,200, 1,300 odd pharma companies, every day a new company is entering into the business. And as you asked the question, that was what is our moat? We are very simple company. We are very focused company. Our moat is very clear, is a razor sharp focus and ruthless execution in whatever we do.
Wow, that's interesting. Bhavin bhai, let's try to understand chronic and acute, the way your business has changed. Chronic is getting more, preference going ahead, and we all know why. But just wanted to understand what's the growth outlook for acute as well as chronic now going ahead for the next 2 to 3 years.
So I'll tell you the last 3 years scenario at Corona is concerned. If the chronic is growing by 10%, which is 25% faster than the overall IPM, we are growing by 19% in chronic since last 3 years. And as far as the acute is concerned, acute is growing by 6 odd %, whereas we are growing double than the IPM, that is 12.5%. So acute and chronic mix, and out of which 72% is chronic in nature, chronic and subchronic, which contributes 76% of the total revenue out of it, and which is growing by 19% since last 3 years.
But the inorganic growth strategy is also something which, I've just noticed, the history also, the way you do your strategies for the portfolio launching, talking with the bigger guys, it's a very good setup which you have. But what's your inorganic growth strategy right now?
So, as far as the last 3 years growth of Corona is concerned, out of the 100 rupees growth, 85% rupees growth have come from the organic side. Only 15% came from the inorganic. That means we are not highly focused on the inorganic side. We are focused purely, majorly on the organic activities. Yes, having said that, if anything adds into the kitty, we'll definitely go for it. So our strategy as far as the inorganic acquisition is concerned is very clear and simple. We have 3 philosophies whenever we acquire any brand. First, that brand should have a strong brand recall. Means the doctor should be on the pen and mind of the brand should be on the pen and mind of the doctor, which is the first and foremost. The second philosophy of R is there should be an underlying science with that brand. And the third and most important is that perfect fitment in our basket. If all these 3 philosophies are done, we go all out for that brands. Hence, we never say that whatever brands are available on the street, we go for that. But if these three philosophies are tick in the box in the right manner, then we go all out.
Right, you do go all out. But Bhavin, by the Vocadin acquisition, that was a very important, step for your company. Any kind of timelines, how things are looking like when the integration will start coming in?
Yes. So as far as the last two acquisitions, what we did, that is from Bayer Pharma and in the form of a Dr. Reddy's, that is Vocadin. So just to tell you that by end of FY26, means on the last quarter, we started the integration, and the integrations is coming into picture, and the play is going on in this financial year. So this financial year is based on the execution of what acquisitions we did in last year, and it is very important for us to grow. And just to tell you, Bayer acquisition was a missing link in our entire women's healthcare portfolio. We acquired that link from Bayer Pharma, and now we are going all out and meeting the direct competition with the people who are having this infertility portfolio, which we acquired from Bayer. This is our integration. We have deployed a dedicated task force of 46 people and design a particular division to hit the IVF specialist in India. So that is our strategy as far as the inorganic from the Bayer side. And as far as the Vocadin side, we have launched into the multi-specialty portfolio, which caters the 40 to 45% revenue of the organization.
Fair enough. And the products which you are there is a good pricing power also which you have. I was just studying that as a student. But biosimilar and biologics, that's also a lot of noises coming in. We already know big players are talking very bullish sentiment about it. But your case, entry time, products launch, how are things looking like?
So as a philosophy, we introduce 6 to 8 new products on a yearly basis or an SKUs. So this is our philosophy as far as new product introduction is concerned. As far as the launch and execution is concerned, we always see that talking to the biologics and the biosimilars first, we have entered into footprints of the biosimilars by launching 3 products. That is Fostin R, which is into, again, a gynecology and women's healthcare segment. Second is a Tritium D mAb, which is a denosumab, which is again a biosimilar. And the third is a GLP-1. So all the 3 products we have entered the biosimilar market.
Right. It's a full revision of the pharma sector, which we did in just 30 seconds. Very nicely done. Bhavin, by the capacity utilization and expansion, these are basic numbers, but the street wants to know what's the current capacity. This blended दीजिएगा consolidated करके, and the expansion strategy or any capex plans अगले 1-2 साल में.
I'll take you from the date of listing.
Right,
so it is just 6 months ago. So it is very easy to tell me from that side, and a brief revision for me as well. So when we got listed, both the facilities were having 95% capacities. So in January 2026, we unlocked 40% manufacturing capacity in an EU GMP approved facility based out of Ahmedabad, which increased our further levers of growth, as we already commented in the past. Several earnings call that will be growing our revenue by 15%. So this 40% enhancement in my capacity will help me to grow for further 2 to 3 years with our own in-house manufacturing facilities. And as far as the coming years down the line, for coming 2-3 years, we need a 4th manufacturing facility by the start of FY29, for which we are seeing and seeking the land and the other machineries involved by the end of this year. So we need 2 to 3 years time, for which we need a capex of almost 175 to 200 crores, which we will be managing from our own internal accruals. And after the total mix is concerned, 65% is owned and 35% is being outsourced.
Fair enough. A very interesting take, and maybe who knows, you can have a new plant in Madhya Pradesh or South or even Bengal now. Of course, geographical diversification is something which we all want. It's always a pleasure to have you with us, and best of luck for the future going ahead. It's always a pleasure to have you at NDTV Profit.
Thank you so much. Thank you so much, Sharatji. Thank you so much for inviting.
Thank you. Thank you. So that's the management of Corona Remedies, recently listed, but the street has given a green signal. Stock has almost doubled from its IPO price, and the management are sticking to their core philosophy, and the bullishness is coming on the women hormone space as well. So for interesting companies like this, keep watching KYC and stay tuned to NDTV Profit.
पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of the jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway. I think not even a month probably, right? And I literally cried that night.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate tech, agri-tech, you name it. Young entrepreneurs are taking on risk, they are innovating, and they are keen to create value. And to me, that gives me the optimism of what India can become.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300.
If you're a salaried employee, then you've been contributing to the Employee Provident Fund by default. And even if you're someone that swears by equity and only invests in it, you will still agree that it has been a great vehicle for quietly building your wealth. The reason we're talking about it today, though, is that the government has come out with a gazetted notification last week clarifying a few things related to the EPF. Of course, the one clarification that caught everyone's attention is the possibility of capping your contributions to the fund. But there are other changes that have also taken place that you should pay attention to. Those relate to the employee pension scheme and the rules that govern withdrawal from the fund. All of that is the subject of today's MoneyWise. And my guest today is Ketan Das of FinRight. Ketan, thanks so much for taking the time.
Thanks for having me, Alex.
No, my pleasure. You know, I want to start with first what this gazetted notification was all about, and then we'll talk about some of the history and contextualize it a bit. Let me start with what everyone's paying attention to, which is the capping of your contribution to the Employee Provident Fund at 1,800 rupees. Why is that significant?
Right. See, Alex, that came into picture because of the new labor codes. In my opinion, the labor codes got implemented, people's basic went up, and as a result, their PF contributions went up. And now that the gazetted notification has come in and everyone is honing in on that point, that you can cap your contributions to the minimum, that is 1,800 per month. This has always existed.
But before we get to that, okay,
Yeah.
So the first statement that you made actually caught my attention, right? And a lot of people have probably been wondering about this. It has affected their in-hand, it has affected various things. So let's unpack this in the first place, right? You say that the wage code coming in has changed a lot of things. Why is that?
Right. So with the new labor codes, your basic salary has to be 50% of your CTC. Earlier, it was relatively arbitrary. People used to keep it at 40%, 50%.
Or 30%.
Or 30%. Now, with that going up, the contribution as per your basic, the 12% on that basic has gone up. As a result, as an employee, you are contributing more to Provident Fund, and as a result, your in-hand salary has gone down. Right? And a few employees on the higher end of the bracket would be contributing beyond 2.5 lakhs. So whatever they're contributing is also getting taxed. The interest on it is getting taxed, right? That's why the interest in this capping the contribution to a minimum. And in fact, there was a resistance from most of the employers when you, as an employee, reach out to them, tell them that I want to contribute as per the basics. You know, there was this resistance. People didn't want to.
I want to cap my contribution.
Yeah. Okay. So that, you know, the HRs, they have to calculate your CTC. The employer contribution is part of your CTC. Now, if you want to limit the contributions, you will contribute 1,800, the employer will contribute the same, and the remaining portion, let's say for the sake of simplicity, your salary is 1 lakh, your basic is 1 lakh, you're contributing 12,000 per month. The employer also is matching that 12,000 contribution. Now, if you go back to them and tell them that you want to limit it to 1,800 per month, that extra 10,200, which was part of the employer share, will now be diverted back into your in-hand salary. And that is what most people didn't know. But with the new gazetted notification, the news firmly being out there that you can limit the contribution, and if you want to go beyond it, you have to explicitly submit it in writing that you want to go beyond and contribute as per your actual basic. Well, this rule existed back in 2014.
So I know this because we've spoken about this, and you said that this option exists.
Yeah.
So this 2014 amendment, why was there a question mark around it? Because as you've said, HR folks in various companies have said, hey, you know what, no, we're following the rule and we're going to ensure that everybody contributes 12% of basic plus journals.
Right. So when it was introduced back in 2014, the rule said that you have to submit in writing to the PF commissioner. But this was something that you want to contribute as per your actual basic, not just the minimum ceiling.
I never signed anything.
Yeah, that was because the enforcement of it was missing. The expectation this time, though, is that the enforcement is either going to come back, you know, because the rules, they've been changed. The one thing that people should focus on is that the new withdrawal rules are the key change in this.
But before we get to that, I'll come back to the withdrawal rules. I want to spend some time talking about this because it's an important decision to make. You're saying that the rules existed before. This is effectively a clarification by the government to say that you can now cap your contribution to 1,800 rupees. This 15,000 rupees though, which is what the 12% is calculated on.
Correct.
It's called the wage ceiling.
Yeah.
why is this 15,000 rupees there? What is the calculation behind it?
So, to be honest, there's no clarification on what's the exact calculation behind this 15,000 ceiling.
Okay.
Back in 2014, it was embedded into the rules that it has to be 15,000. Now, in the new gazetted notification, if you pay attention, it has been renamed as wage ceiling declared by the government.
Okay.
So the next time there was this news hovering that, the government might increase this wage ceiling from 15,000 to 21,000.
Sure.
But they were just talks, so nothing has happened yet. But with this new gazetted notification, what the government can now do is they can notify the new wage ceiling and they don't effectively have to change the literature, So that's the point of having the wage ceiling, but no clear clarification on where that 15,000 comes from.
Okay, and it's existed for some time, this 15,000 level, right? Now, what you were pointing out with regard to the basic, and I know that you're using that word loosely, right? Because ultimately it's called the wage in the new labor code, and the wage at roughly 50% of your CTC would govern your retirals, which is your EPF contribution as well as your gratuity and certain other aspects, right? So why is it important to pay attention to this? In that, why would I want to reduce my contribution to 1,800? You said that there is a tax that comes into play if you cross that 2.5 lakh per year contribution, but that's your contribution, not the employer's
Not the
contribution.
employer's. Yeah.
How does that work?
So EPF being a triple E product, there is exemption on your contribution.
What is a triple E product?
So triple E product stands for exempt, exempt, exempt.
Right.
You get the first exemption for your contributions. You as an employee can contribute whatever contributions you do, you get a deduction. It was in the old regime, under the ATC contributions, you can take up to 1.5 lakhs and get a deduction from that. The employer's contribution, that was never part of your in-hand salary and thus was never added to your income tax.
Right.
So that is directly deposited into the PF department. And the second exemption is the interest that you earn on your contribution. The interest for an employee's contribution up to 2.5 lakhs is tax-free. If you contribute more than 2.5 lakhs, let's say you've contributed 5 lakhs, then 2.5 lakhs remains tax-free and the other 2.5 lakhs will continue to earn tax. Like you'll have to pay 10% TDS will be deducted and it will be taxed as per your tax slabs, right? If you stand in the higher tax range, then a 10% is deducted by EPFO and the remaining 20% or odd, you will have to pay every year. So that's a separate calculation from the interest part. For the employer's contribution, any contribution up to 7.5 lakhs superannuation retirement funds is tax-free. Then the third E, which is the withdrawals. So if you contribute for a period of 5 years, the withdrawal, when you withdraw money from EPF, it becomes tax-free. So these are the 3 E's that were there for PF.
Okay, but in the new tax regime, which a lot of people have shifted to, and I think it's over 80-85% of people that have shifted to it, you don't get that first E, do you?
No, yeah. So you already pay tax on this because there's no exemption, there's no deduction that you can claim on the first E. The employer share, however, is still relevant because it's not getting taxed in your hand, it is directly deposited into EPFO. Now, this is the part that people should care about because when I say that you can cap your contribution at 1,800, in the example that we were discussing earlier, let's say your basic wages are 1 lakh. In that case, you were contributing earlier 12,000 as an employee and 12,000 the employer was matching the contributions. Now, if you limit that contribution, the employer share will be capped at 1,800. The remaining 10,200 was part of your CTC. Now, that gets restructured as your in-hand salary. On that 10,200, you will have to pay tax as per your tax slabs.
Yes, okay, that's interesting.
So that is what people should focus on. In this example, if your basic was higher, how much were you contributing? That employer share entirely was tax-free for 5 years if you kept it in PF. Now, if you want a higher in-hand salary, you also have to bear that tax impact. So for the people who think that, I can take care of my own investments, I'm going to limit my PF contribution to the minimum and I'll take care of my asset allocation and I'll invest it the way I want to. Remember that you'll not just have to beat EPFO when it comes to 8.25 tax-free interest, but you also have to take care of beating that tax hit that you initially take. Right? Because of this decision of capping the maximum contribution at 1,800, whatever, let's say in that 10,200, if you're in the 30% tax slab, you're effectively paying 3,000 tax on it, right? So you're getting only 7,000 to invest elsewhere.
Sure. So it's an important consideration to make. Having said that, for a lot of people, and this is something of a determining factor, particularly those that are at the lower end of the salary curve, that are maybe just starting out, in cities like Mumbai and cities like Bengaluru now increasingly, and other metropolitan cities, the cost of living is pretty high. And so in the initial part of their careers, they're talking about needing more money in hand. And that's the irony of the situation, to say that if you start saving early, you can actually save a large amount of money, but that's the time that it's toughest to save.
Correct.
And so for those people that are likely not even being taxed for their income, wouldn't it be something to consider, to say that they can increase their in hand?
Yeah, very well. If you stay below the increased tax-free limit, like about 12 lakhs and 12.75 lakhs, if the calculation fits, your CTC is in that range, then you can restructure your CTC and ask the HR to deduct only 1800 from your salary and the 1800 as the employer contribution. Rest all can be tax-free in a way in your hands.
So, but of course, this is purely only looking at the taxation aspect of it. Whether it makes financial sense or not is a completely different question altogether. And it's important to consider those aspects, because before you know it, in a 5 to 7 or 10-year career, your money can accumulate very, very quickly in that EPF, right?
Yeah, because EPF, if you look at it in a way, it's disciplined product by default, because money gets deducted before it comes in your hand. And oftentimes people forget that there is an EPF contribution, and that's how you end up having a massive corpus when you retire, or when you need it for, let's say, housing related funds, right? You need money to buy a house, repay your home loan.
Yeah.
That's when your EPF corpus becomes a big asset that you can rely on.
Okay, I do want to ask about, so we've discussed a couple of options, right? One, you can keep your EPF going as it is right now. In all probability, you're contributing to the maximum that you can. Of course, if you've crossed that 2.5 lakh threshold, then it's something to bear in mind, because you are paying tax on the interest that you earn on everything that is a contribution above that 2.5 lakh. For your employer's side, unless you're crossing 7.5 lakhs in a year, you're not paying tax on that. If you do cross that 7.5 lakh, you're paying tax on it, right?
Correct.
So the first option is to keep it going as it is. The second option is to cap it and take it all in hand, right?
Correct.
Both yours as well as your employers. In which case you have the option of either spending it or saving it, and you should ideally be saving it, because this is something that was going towards your long-term saving.
Correct.
But you have a third option, Ketan, which is that you can ask your employer to invest in the NPS, in the National Pension Scheme, on your behalf.
That's correct.
Right? To the extent of 14%, as I understand it, of basic.
Yeah.
Right?
So 14% of basic for the new regime,
Yeah.
and up to 10% of basic in the old regime.
Okay.
Additionally, you as an employee can contribute 50,000 per year extra and get a tax benefit in the old regime.
That's under 80CCD.
Yeah.
Right? So you can do a total, you can, as you pointed out, 10% of basic in the old plus 50,000, or 14% of basic in the new. So you can effectively, in your example, you were talking about 1 lakh of rupees, and you're saying 12,000 rupees, you cap it at 1,800.
Yeah.
And so 10,200 rupees is what, from your contribution, you now take in hand.
Correct.
And the 10,200 rupees that comes from your employer, you can actually ask them to put it in the NPS instead, and there is no change in your tax payment.
Correct.
Right?
That is with a big if your employer does allow it. So the biggest struggle that I have seen is a lot of companies don't yet have the option of, investing in NPS. They do have to tie up, bring all the pension fund managers, and allow you to select that and have that option.
Okay. So that's an important consideration, because all of this that we're talking about is what the law allows you to do.
Correct.
And of course, I hope that people listen to this conversation, and usually it helps if collectives then go to the human resource professionals or the leadership of the company and say, hey, this is what we would like to do as a collective, this is what the law lets us do, and we should actually do this. Right? But what are the pros and cons of doing what I have suggested, to say, as a third option, NPS, you can actually have that contribution. See, NPS has actually gone through quite a few changes in the recent past.
That's correct. So on the pros side of it, see, NPS allows you to do asset allocation on your own. You can decide how much I can contribute to equities, how much to debt, government debt and corporate debt. That option doesn't exist in EPF. It's purely a debt instrument in my opinion. But if you are talking about retirement, which is a long time away, then in that case, investing in equities will give you a higher return. As a result, NPS will beat EPF returns over a longer period of time. Right? That's the biggest advantage. Second advantage in NPS is you can do asset reallocation. Let's say I was supposed to invest in mutual funds. I'm investing in mutual funds. I have an equity portion, which, let's say with the market conditions, I want to rebalance. I want to put something in debt now. If I do that in mutual funds, I'll attract tax on it.
Sure.
But in NPS, if you want to rebalance your portfolio from equities to debt, and you can do that changes 4 times in a year, so that option is available under the NPS, right? So tax benefit, and then definitely the contribution tax benefit we discussed, right? And when it comes to the cons of it, see, NPS is much stricter in terms of withdrawals. Earlier, you could not withdraw your funds up to the age of 58 or 60. Now they've liberalized it a bit, where they're saying if you've contributed for about 15 years, your account has been active for more than 15 years, then you can start withdrawing your funds. And second con, if you want to really nitpick, is you can only invest in large cap and mid cap funds. There's no option to select small cap funds. If that's something that you have that option, if you're okay with that, your risk appetite allows you to.
I mean, of course. So the argument is that obviously in this situation you're comparing it versus the EPF. And the EPF is 85% in debt and 15% in equity, and that 15% in equity is only large cap through Nifty 50 ETFs, right? And so from that perspective, if you're doing more in equity through an NPS, then it's a superior product.
Definitely.
And the other thing has to do with the withdrawal from the NPS when you do withdraw. And you said that 15 years is now that threshold that you need to bear in mind, which is actually positive for a lot of people that are contemplating retiring early. They don't want to wait till they're 58, correct?
Correct.
Yeah?
Correct.
So okay, but just to complete that point, the other change with regard to the withdrawal from the NPS, Ketan, is that you can now withdraw 80% as opposed to 60% earlier.
That's correct.
Which is a huge positive.
Yeah, so you have to bear in mind that 60% of it is tax-free. The additional 20% that you withdraw will be taxed as per your tax slab. And the remaining 20% has to be converted into annuity.
Yeah.
Right.
So, and hopefully down the line they'll change that as well. But so the NPS exists, and of course we'll do a separate conversation entirely about what you need to bear in mind in the NPS if you are choosing it, because there are so many options available for you and there are a few nuances that you need to pay attention to. But Ketan, the other changes in the EPF, and I know that you were waiting to talk about those, because I think in your opinion those are more important, or at least more significant than the capping, right? What are they?
Correct. So if I want to talk about the new withdrawal rules, earlier there were complex 13 reasons under which you could withdraw, each having its own eligibility criteria, the amount that you get from each claim. Sometimes they were confusing and you got a lot of rejections because you could not figure out what to do. Well, now they've simplified it and put it into 3 different categories. One is the essential needs, which covers your illness, medical emergencies, marriage and education. The second is housing related needs, where you need to take out money from your PF either to buy a home or to repay your home loan. And the third category, they've introduced a new one called special circumstances, under which you can withdraw twice a year. And across the board, they have made the eligibility criteria and the withdrawal amount the same.
Okay.
Now you need to wait for 1 year. You've contributed for 1 year, then you can start withdrawing money partially from EPFO. Earlier it was 5 years, 7 years, various different rules existed. They've also increased the number of times that you can withdraw these funds.
Okay.
And talking about the eligibility, how much money can you withdraw, that also has been standardized to 100% of eligible balance, with a big star mark on the eligible balance.
What does that mean?
So EPFO has introduced this rule which says 25% of everything that you put in will be kept as a separate lock-in account. Right? Let's say I'm contributing 100 rupees to EPFO, 25 is going to get locked for my future, for my retirement. 75% would be available for withdrawals as and when I choose to withdraw. Right? So that effectively caps your maximum withdrawal from partial withdrawals to 75%.
Okay. Okay.
Right?
And so just to be clear, right, suppose you have accumulated 10 lakh rupees in the NPS, and for whatever reason, and that can include loss of job as well.
Correct.
You've lost your job, and this is not necessarily the first port of call that you should have. You should have an emergency corpus, but in the event that you say that you want to take a bit of a gap from working for whatever reason, you want access to these funds. if you've completed a year, which you have, if you've contributed 10 lakh rupees,
correct,
you can pull out 7.5 lakhs.
That's correct.
Right?
You can pull out 7.5 lakhs under partial withdrawal, and they've introduced this limit of not being able to withdraw the entire balance for about a year now.
Okay.
Earlier it was just 2 months. You left the job. After 2 months, you can access the entire fund from PF.
Okay.
Now they've extended it to a year for PF. And for pension, if you were contributing...
I'm not able to understand. To say that this 7.5 lakhs in our example, you have to wait a year?
No, 7.5 would be accessible
immediately.
The remaining 2.5 lakhs would be kept for your retirement, or at least 1 year since the date of exit from your last organization.
Okay, so you need to have a gap of employment for at least a year for you to have access to this 25%.
Yeah.
What if you get a job in between?
Then this continues.
It continues.
Yeah.
Okay, so that's clear.
And the reason they've brought this into picture is because a very interesting stat that came out when these new rules were actually announced. The EPF commissioner said that about 14% of all full and final withdrawals were above 1 lakh. Can you imagine a retirement product having just 14% of people who withdraw the full balance were above 1 lakh. Rest all was below 1 lakh. So with this 25% capping, what effectively happens is at least they'll ensure there's a balance left for people.
So you're saying, wow, okay, let me get this straight. You're saying that out of all of the people, that in what year?
So this was when it was announced, barely 4-5 months ago.
So, but you're saying that in most situations, there was less than 1 lakh left in the EPF account?
Yes. And hence the mandatory 25% rule.
Wow, okay, that's significant.
And because people in the lower income bracket had this tendency, to switch more jobs and then withdraw the funds as soon as they leave, right? And this also created a lot of issues with the EPS or the pension scheme. That's why they've increased that to 3 years now. The PF you can access after 1 year, but the pension you can access only after 3 years.
Okay.
So with this, effectively, once you have become a pension member, you won't be able to withdraw it, and then it continues till your retirement.
And there's also a change, the third change that we discussed earlier has to do with the pension scheme. And what does that relate to? Just to be very clear, out of the employer's contribution, which is matching that 12% that you do, 8.33% of that goes into the employee pension scheme.
Correct.
What's changed?
So, to be honest, the contribution, the membership still remains the same. If your basic salary is above 15,000, you are not a part of the pension scheme, and you cannot choose or even, in fact, pay to be part of the pension scheme. Effectively, the rule says your wages are above 15,000, you don't have to pay to the EPS or the pension scheme.
What are the implications of that?
So, the implication of it is, simply put, 1,800, let's say you are contributing to PF, then 1,800 from the employer also has to match into PF.
Yeah.
It should not go into EPS.
Okay, no, I get that. But I'm saying that suppose I'm doing my full contribution right now, right?
Yeah.
And whatever it is of my basic. And the employer is also contributing.
Yeah.
Thus far, before this gazetted notification came through, my assumption was that 8.33% of what the employer was putting in was going into the EPS, which is the employee pension scheme. That no longer happens.
No, so there's a catch on this. So you have to go back to 2014.
Okay.
If you've started your employment before 2014, by default, majority of the audience was, or majority of the members were part of the EPS scheme, right? And with the rules that came in 2014, they had to continue to be a part of the pension scheme. Then people who joined after 2014, there came a basic salary check or wage ceiling check. If your basic salary was above 15,000, you are not a part of EPS. If you are below the 15,000 wage ceiling limit, then you would become the part of EPS. And it continued. In 2014, if you look at the amendments, the people who joined before 2014 and were contributing to pension scheme challenged in Supreme Court and also opted in to get a higher pension by contributing as per the actual wages.
Okay.
Right? So not at 15,000 ceiling. See, pension calculation is done at that 15,000 ceiling.
Okay.
So employees who were before 2014, they were given a one-time window by Supreme Court to then contribute extra and opt in for a higher pension. This was a one-time window. With the new gazetted notification,
and now
it puts it to rest. You cannot, as an employee, contribute as per your actual basic into the pension scheme. That route for a higher pension at retirement is completely gone.
Okay.
Even if you contribute, you can only get it as per the wage ceiling, which is 15,000.
Significant. So there's quite a bit that has come through in that gazetted notification that relates to the employee provident fund, even the pension scheme. But I think we've covered most of that ground. I'm sure that people have a lot of thoughts on that. Thank you so much, Ketan, for taking the time today.
Thanks, Alex.
Hopefully, we've gotten you to think about how you can approach the Employee Provident Fund based on the changes that have taken place. But remember that before you make a major decision, you should seek financial advice, because these could be quite dramatic changes in the way that you manage your money. It's been an absolute pleasure bringing you this. Stay tuned. This is NDTV Profit.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because, you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, yaar, engineering karke tum lipstick bechoge.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway. I think not even a month probably, right? And I literally cried that night.
First of all, my compliments for NDTV to bring back the leadership awards, and in terms of both award categories and nominees, it's a very well defined process they followed, and it was pretty difficult for us as jury members to choose only one awardee among the nominees, and my compliments to the team.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Right, we have Rishit Jhunjhunwala with us, the CEO of Truecaller, a company which is in the middle of a confrontation with the telecom regulator, TRAI. Rishit, thank you for joining us here at NDTV Profit. My first question to you will, of course, be on what sort of evidence do you have when it comes to the 1600 number series that was designated as official by the TRAI? What sort of evidence do you have of that being misused by bad actors? And if you have that, what have you communicated to the regulator to help out sort of with the spam detection?
All right. Thanks for having me, firstly. The evidence that we have around 1600 number, two data points, very simple data points that I can share. 80% of the calls that are made by 1600 actually go unanswered. And the second data point is that we have more than 1 lakh block reports. So 1.25 people actively, manually block these numbers on Truecaller every single day. And this is in spite of Truecaller not showing that they are spam. They're blue on Truecaller. As you know, blue is a regular call and red is a spam call. They are not red on Truecaller. So we're not, we're not coming in between in any way in this flow, and yet these numbers are being blocked very actively by consumers. We've also had anecdotal evidence from consumers. We have reviews that tell us, social media tweets that keep telling us that they're getting spammed by 1600 numbers all the time, and Truecaller is doing nothing about it.
Rishit, the argument that the TRAI has against this particular stat of yours is that there are genuine calls as well that are coming by these numbers, and if there is blocking that is happening at your end, which is not permissible, or flagging or spamming that is happening at Truecaller's end is not permissible under TRAI's regulations. What do you have to say to that?
There will absolutely be genuine calls, and that is really where the problem lies. If you whitelist a number series like 140 and 1600 on Truecaller, this will enable spammers to spam consumers using these number series, simply because Truecaller will never show them as spam. And because spammers use these numbers, the legitimate calls also are being ignored by consumers. Because consumers know that if it's 1600, I think it's going to be a spam, and they won't even pick it up anymore, because the previous call that they got from 1600 was actually a spam call. So it doesn't matter what Truecaller says anymore. What has happened is the designated number series has lost trust. That was the aim of the designated number series from TRAI, and unfortunately, because Truecaller cannot mark them as spam, it's actually become the reverse of what they wanted to achieve.
Rishit, we have a survey with us by local circles, and what they have found out based on their survey is that 1 in 2 users have actually reported an increase in spam calls despite using Truecaller. What do you have to say to that stat when it comes out? If spam detection is your #1 job, why are we still seeing an increase in spam proliferation over the last 2 or 3 years? Where is the sort of core promise that you have made to your users in terms of reducing that?
Yeah, our job is to detect spam and to identify spam for users. We never block calls on our own. If users wish to turn on blocking on Truecaller, it's a manual switch that they have to turn on. So we can't really reduce spam calls as such. What we can do is flag them so that users pick up calls when it matters to them. The reason why spam has gone up, there are a few reasons that I can think of straight away. One is the advent of AI. it was hard to make calls at scale because you needed humans to make those calls. These days, you don't need humans to make those calls. AI is good enough to mimic a human, and you can have a system that makes millions of calls a day without any human intervention. That is likely to be creating an increase in spam calls. Secondly, like I mentioned, 140 series and 1600 series, they are both completely whitelisted series across Truecaller and any other call management app like us. And therefore, spammers found this loophole, and I believe they're likely to be abusing this loophole, which our data also tells us that the spam calls on these two number series is on the rise very dramatically.
Rishit, what social media, what we're hearing a lot of chatter on social media is also around the fact that if the government's CNAP, if the government's DND app, all of these work well, if telcos that have started also flagging in-house, your Airtel, GOV, all of them have started flagging these bad actors very actively, then where does Truecaller's true business then really lie, right? Where do you see that opportunity? Because if AI is also being used by bad actors, then we're already a step behind, right? What's how do you tackle that?
Yeah, Truecaller's relevance will not go away. We've coexisted with CNAP in multiple different countries. CNAP has been rolled out in India as well. It shows you the name of the caller, and yet we still continue to see the high growth that we've seen in India, as well as many other countries. The reason for this is because while CNAP shows you the name of the caller, Truecaller goes beyond that and gives you the context of that call. So because we're a large community of 350 million users in India, this 350 million users suggests to Truecaller more data behind the name. So it doesn't just say that this is Rishit Jhunjhunwala. Truecaller will actually go beyond that and tell you where Rishit works, where does he stay, what is his location, what is his job title, what is his profession. All of those data points are actually what matter a lot more to be able to pick up the call. Additionally, Truecaller has advanced capabilities that help your communication. We have an assistant which can actually answer calls on your behalf, so you don't even need to answer calls anymore if you're using Truecaller. Truecaller lets you get advanced blocking capabilities that is able to stop your phone from ringing itself if that's what you want. All of that we believe is more than what CNAP provides, and that's more the need of the hour today.
All right, Rishit, fair enough. Also, the second grievance that you brought out against TRAI in your post was around them seeking more authorization to issue notices to apps such as yours. What is exactly your grievance with that? Where do you think TRAI is overstepping its authority in asking for that? Or talk to us about what your grievance with that is.
Yeah. I mean, we are regulated by the Ministry of Information Technology. MeitY is the entity that regulates apps like us. TRAI is a body that has a lot of context, and they've done a great job in regulating the telecom operators, which actually take a license and operate under their jurisdiction. Our context is more of innovating using software and technology, which is more pertinent to MeitY. TRAI does not have that context. Their context is solely around licensed telecom operators. So we believe that would be very hard for us to navigate and make our case and have collaborations if TRAI is actually responsible for regulating or has any authority over us.
Rishit, if this does happen, will you challenge this or will you comply? What will be the way forward for you as the leader for Truecaller?
We're not sure as yet. It remains to be seen. We'll of course engage with both the ministries, both the regulator, TRAI. We'll once again plead our case and show them the data that this is what is happening. Spam is on the rise, and they need to allow apps like Truecaller to say spam when a consumer is saying it's spam. It's not what Truecaller is cooking up. This is lacks of real people on the street experiencing it and saying that this is spam. So let Truecaller continue to show spam. And we'll make the same case to Meti as well. We present our data to them and we'll explain to them why it is that this is actually anti-consumer and it's hurting consumers. It's growing in spam, and therefore we should be allowed to do the right thing for a consumer.
Fair enough. Lastly, Rishit, before we let you go, at the end of this sort of standoff, I think users and viewers of this episode will also are also some of the worst affected users when it comes to spam calls and texts. I believe each one of the viewers that will watch this will be affected by spam on a daily basis, and spam is still the least of the worst actors, right? You have fraud, and then you have so many others built on top of that, all sorts of criminal activities that are built on top of that. What is the way forward? What do you now expect? What do you take to the government now? What do you take to TRAI or the Meti now as a next step? Because at the end of the day, it is the users that all of these entities, including yours, need to protect.
Yeah, absolutely. That's the only mission that we're on. Look, we've been doing this for 17 years now. We have 500 million users globally. We add around 8 or 9 million users, mostly organic, globally each quarter. We've been a profitable company for a very long time. We're public listed in Sweden. We call India our second home because it is our largest market. We've invested very heavily in India. Our main job is to protect consumers. Over the last 17 years, we've built a lot, both on calls as well as messages, to protect not only from spam, but also from scam and fraud that is on the rise these days. We recently launched Family Protection, which actually protects the elderly from getting scammed specifically. So we've been very focused on finding every surface on a mobile phone where scam takes place, and we will plug each one of those. I think that's what we all need to come together. We all need to collaborate and allow each of us to do what we do best. Truecaller leverages its community, its 350 million users in India. They all get together and help each other out by contributing with name suggestions to Truecaller, with spam suggestions to Truecaller. Allow us to continue doing that for 140 and 1600 and any other designated series that might come in the future. I believe that is what consumers should be on the lookout for, that Truecaller has always helped them, and we should be allowed to voice our opinion through Truecaller.
All right, Rishit, thank you so much for your views. So we can expect some sort of a notice going from you, or some sort of a letter that you might be staying your stance to the authorities. Would that be a fair assessment?
Yeah, absolutely. We will engage with the authorities, as we always do. It has been collaborative with both the authorities, and we're going to continue to try and be as collaborative as we can. We will show them the data, and we will tell them why this is actually hurting the consumer and is facilitating spam. We will definitely continue doing that.
All right, thanks, Rishit, for your time, and we'll all keep our eyes peeled and hope that spam calls and messages continue going down in India. Thank you so much.
Absolutely. Thanks so much, Rishabh. Thanks for having me.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
Now SEBI came out with BRSR, Business Responsibility and Sustainability Report.
TCS first quarter interviews and a lot of talking points out there around hiring, possibly try and get some outlook around what's happening with AI and that world, and whether geopolitics had an impact, if any, on the quarterly numbers. And we speak to them every quarter. Kriti and Aarti, thank you so much, both of you, for joining in. I mean, when I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, like obviously if there is a beat, we are all happy about it. Our order book has been good. Our largest vertical, BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having on the size, the other point is that the ticket size of our AI projects are growing. And the discussions we are having with our customers on AI, so that's also resonating very well. Our customers like the overall 5-pillar strategy we have put in front of them. As I said, all in all, satisfying quarter. Geopolitics did play, like particularly the Middle East war. We have impact because of that in some of the verticals, particularly retail, travel and airlines and all, and of course our Middle East business. But despite all that, we are happy that we've been able to put a good quarter.
Yeah, and I would like to get your opening thoughts before I ask about hiring, because that has stood out for me. I don't know if it's really that important in your eyes, but your opening thoughts, Aarti, on what do you think went behind the quarter and what does that signal for the quarters?
I think, as Kriti said, I think it was a satisfying and a good quarter. And if you really look at the deal wins this quarter, we had one mega deal with SKF, which we are extremely pleased about. And also the nature of, it's a completely net new win and cuts across, multiple services that will deliver for SKF. Complete, AI first IT operations in terms of how the run the business would work, enterprise transformations, and also AI-led business transformations. So I think the whole construct is something that we are very pleased about. Then other deal wins, renewals, and again, all these renewals require a very clear AI-powered proposition, and we are doing well there. And with a US-based utility major, we had a very good renewal, a large deal renewal. But what we are also pleased about is how the renewal came with a large double-digit AI transformation deal, expansion baked in, right? So I think we're very happy about that as well. Apart from that, I think this quarter, if you really look at the autonomous GBS, the whole agentic AI in business process operations, we saw some really good deal wins across, HR, finance, and, customer experience. So those deal wins, which are completely AI-led propositions, AI-centered propositions, I think the deal wins were quite good. And, you look at our AI revenues this quarter, 2.6 billion. So I think good growth from 2.3 billion last quarter. And these nature of AI projects are such, right? These are discretionary projects, 3-month, 4-month, 6-month cycle. So to grow from 2.3 to 2.6, which means that we need to win those many newer projects to keep the growth momentum going. So net, a good quarter.
Yeah, I mean, the annualized AI revenues are great, but I was just looking at it, and correct me if I'm wrong here, but considering that all IT companies in India are kind of starting off and you are the leader out there, but the pace of growth Q1 over Q4 versus what you did in Q4, Q3 or Q2, that is...
See, that's what she mentioned, right? Many of these programs are all short tenure programs.
Okay.
So you have to win it's not like an annuity program. When the growth is on top of what you already have. Okay. Many of these you have to win almost. Previous quarter probably you would have won the 2 points. Now I have to win all the 2.6 or nearly all that. So like the annuity part of it is very limited. So because of that, you would see some lumpiness.
Got it. It may be erratic.
Yeah, and also what you call AI revenue is, it's not an industry definition. We have defined only pure play AI transformation work that we do as AI revenues. For example, if we did AI in a software engineering, we don't call that out as this thing. So I think it's up to the company. But I think what's important is this a metric that we have put out, and we want to run our race with this metric and drive growth momentum at a time where the AI adoption is only picking up and enterprises are, calibrating their motion. And as we create more value, I think acceleration will come.
Yeah, your team handed me the leaflets, and there's some 3 pages of large companies talking about these AI deals with you, which is great. Hiring, my colleague Jasmeet was telling me, start off with hiring, because I want to know this. I don't know if it's as big a deal, but when the results came out and we in the newsroom were thinking about it, over 9,200 net hiring, right? Versus what? 2,500 or 2,600 in Q1. So what's led to this? I mean, is it confidence about the future or current execution? What is it?
Both, right? We're constantly looking for top talent within the organization. And we also look at what is the demand that we have in the current quarter, demand we have for the subsequent quarter. So when we realize that we need to hire the top talent proactively, some of it is based on the demand we have on our hand, some of those hiring is being very proactive because we want to hire good talent from the market. So both led to it. So definitely it's a reflection of the confidence we have. And of course, being ready for the future as more and more complex engagements, AI engagements come our way. We should be ready to respond to that very quickly.
Got it. Yeah, but I'm sorry for pressing this, but since this has been, kind of choppy, these numbers, I'm wondering if this hiring is an indication of what could happen in Q2 or Q3. Can one read into it?
You can, Neeraj, as I said, I'm not going to guide you into something. But as I said, this definitely reflects the confidence we have, reflects also the kind of conversations, kind of project wins we have. So based on that, we went ahead and said, this is what we are going to need in future, and we need to build that and scale that competency. Based on that, we did this hiring.
Yeah, I'm going to talk about this tomorrow morning for sure on air. But Aarti, can I ask you about the margin picture as well, right? Because in some sense, it's come exactly in line with what people were estimating, maybe 10 basis points below some estimate, but that's hardly anything. And it was a quarter of wage hikes, etc. Is this a net new normal of sorts? I know you won't guide, but I'm just trying to understand still.
No, I think if you know that Q1 margin came out at 24%, and you spoke about the wage hikes. And you know that, from a TCS perspective, we want to operate in a 26 to 28 range, which we have called out, externally. And, if you look at our performance last year, I think quarter after quarter, we have looked at how we have improved. And that would be our endeavor for this year as well.
You reckon things could actually move northwards and northwards quite substantially?
Yes, and we have done in the past.
We always, our CFO likes saying, 26 to 28 is our guiding beacon, and so we'll be guided by that targets that we have set for ourselves.
To either of you, the consistency of the deal TCV could be heartening, right? I mean, one brokerage note, the first cut that I received said, it's slightly below, but 9.5 billion. I mean, that's a large number, right, per se. So, and it's consistent. So that must be heartening for you guys.
It is, like, as I said, as Aarti was mentioning, one is the overall number. Two is the quality of the deals that we have won. We are happy with both because we have, apart from one mega deal that Aarti just now spoke about, and then with the number of large deals that are there and the kind of AI deals that have come and the spread of the deals that are coming from multiple industry verticals and geographies, all of them put together. And I mentioned some time ago the kind of conversations we have, the pipeline we have, we are quite confident about the overall pipeline and the order book that we have today.
I wonder if the conversations, so we speak to a few PE players and they are saying in all our portfolio companies, our conversations with them are that what is the human cost, what's the token cost? I'm trying to understand as you are delivering AI-led solutions to your clients, is the conversation coming around, now that the token costs have gone so high, all need not be AI and therefore the human plus AI combination, etc. Is it getting a lot more relevance than what it probably was in conversations 12 months ago?
Definitely, I think that whole token cost of AI is a top conversation with customers. And if you really look at it, right, over the last 3 years, right, we had traditional AI, generative AI in December 2022 and agentic AI since Jan 2025. And now a combination of generative and agentic AI solutions coming together in production with the reasoning capability, the kind of workflow redesign that you can do, right? Those possibilities are getting better. So I think the token costs are definitely going up. But I think what we are doing is, what is the need now, right? So you saw this with cloud costs also, and FinOps came into picture. So I think the conversation is all about AI governance. How do you govern the token costs? How do you control it, right? And secondly, I think as we are learning more about the models, I think you just don't choose a model, in an ad hoc manner. The workload that you are, developing chooses the model. And so I think that whole matching the nature of the need of the work and the model is becoming important. And lastly, I think when you are building, I think the efficiency of doing development cannot be undermined because you have a coding assistant. So that, hardcore engineering skill set also becomes important. So this is definitely, but I think in terms of building the agentic control plane, and just like FinOps, AI Ops, all these things are emerging. And I think like we did with the digital and the cloud wave, I think our teams and the industry is quick to learn and respond.
Yeah. No, my question was also stemming largely from the fact that if the conversation was always about how AI will disrupt tech, I mean, and then external players like Jeff Bezos, etc., have come out and said that, listen, don't lose out on the relevance of what IT services will do. So which is why I was asking.
Absolutely. See, like again, you're talking about token cost and human cost as somehow being a total sum. But as customers start seeing business value, they will continue to spend more on technology. We expect that the overall spend on technology to continue to go up. And as they get more and more value from AI on their business value chain, the spend will increase. I don't think this is a zero-sum game on the token cost plus human cost.
And if I may just say, please. I think to your point on SIs, I think making technology work, a product work in an enterprise is significant work, right? And that's what we have seen through various generations of technology transitions. And the same is true or more true for AI. And that's where I think being there in the customer context, serving them for decades, gives us that, extra grounding, the contextual knowledge to really help customers make this AI transition.
One final question, and that's around what the strategy could be, because a couple of I won't call them your peers per se, but a couple of companies in this space have done very large acquisitions as inorganic routes in order to kind of gain growth, etc. What is your optimum utilization of cash on books? Would you believe buybacks, dividends, acquisitions, inorganic moves? What could the bent be towards for TCS the next 12 to 18 months?
See, we have been consistently returning a significant 80 to 100% of free cash flow, and we will continue to stay in that. But if there are opportunities, like a strong opportunity towards acquisition, we will not shy away from that. And what we look for is wherever there's a quick scale of competency that's available. Like we don't look at for as a revenue game, or we don't look at it to just shore up our growth. We look at it for a true competency and synergy benefits that would come. So if a right opportunity and right asset comes through, we will look at it, but we actively are considering multiple opportunities at any point.
Yeah. Sorry, just to qualify that, you will not get a company your size. It's impossible, right? You're a behemoth. My question really is that would it be still, by your definition, a large-sized one that you're looking at, or would it be string of pearls?
No, all. Like as I said, like our approach would be: am I getting a new competency in the organization?
Okay.
If I'm getting a new competency in the organization, we will do it.
Is there something like that left for TCS to search for?
There are organizations that we always look at. So some of the, as I said, it's about our ability to quickly scale. If a particular capability comes along, which helps us in scaling, for instance, AI, scaling in cybersecurity, scaling in any other area that we believe that there's a great opportunity, we will not shy away from that.
Thank you so much for speaking to us
you.
today, and all the best for the quarters ahead.
Thank you.
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
Now Civic came out with BRSR.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway. I think not even a month probably, right? And I literally cried that night.
Thank you so much for coming into the studios and joining us on the Disruptors today, guys.
Thank you.
Thank you so much, Tamanna, for having us here.
I want to understand first a bit about the product and the differentiation. You have a technology called BLDC, which powers your fans. Why is it different? Because if I look at all of the ads you have for pankhas, everyone's saying कि हमारा शांत है, less electricity consumption. How are you differentiating?
Yeah.
So, more than the technology, I would like to say that the underlying tech, which is behind this product. We started this journey back in 2015 when it comes to fan. By then, we built certain good capabilities in motors and electronics and control systems. That is underlying tech in the fan. And when we were studying the fan industry as a whole and trying to understand the pain areas of consumer, we learned that the regular fans, traditional fan, consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power. So that was a huge breakthrough and understanding to us and revelation to us, the kind of impact we can create in lifestyles of people when it comes to energy saving. So that's how journey started, right? But today the product has evolved from 2015 to in last 10 years. The product has evolved significantly from a basic energy efficient product to a smart product, right? So back in 2050, the pitch was energy efficiency, 1/3 power consumption, right? And roughly 65% saving of electricity. Remote control was the other feature which we introduced back then. And the rest of the evolution after that, generation 1 to generation 4, 5, it was evolved keeping consumer aspiration at center.
Yeah, and
it also costs double of any other fan out there in the market. It's also premium.
I will slightly disagree to the statement. I don't think it is double because it also function of what you really compare this with. Today, for example, and just give you from
I'm just talking about the fan. I'm not talking about the energy savings because I know
that's what fans only, right? So if you look at from today, any decent quality fans you can get at maybe 1,800 rupees. A very simple, plain, vanilla-looking fans. You can probably buy a BLDC fan at 2,500 rupees. So it's not double; it's like hardly 33% more. And if we look at historically, let's say since we began our journey in 2016, we've been able to bring cost down every year, right? And that is one of the evolution. And in fact, just to go back to your previous questions, that what is fundamental difference between Atomberg and other technology, right? in BLDC within the BLDC segment? I will say that BLDC technology is not something that we did it for one moment, right? It's a journey, and over a period of last 8-10 years, we have been investing heavily on R&D. Like we have one of the best R&D setups in India today, in Pune, right? And because of those investments, because of those infrastructures, because we control the entire stack, we've been able to visualize a cost reduction roadmap, and that we have been doing. And I think our belief is that it's going to come down further, right? So yeah, I think if you look at the overall BLDC market today, is roughly 1/5 of the market is BLDC.
1/5
of the market is BLDC, which is the overall fans, which were like hardly 1.5% when we started our journey.
Okay. So you've grown the market as you came in, and awareness has grown of this technology.
Whatever technology could have evolved, it has seen its evolution in the last 100 years, right? And all the brands left with only innovating on the colors, and the external. But beyond that, the technology was limited. It has constraint. The motor was bulky. It was inefficient, heating was high. Brushless DC motor disabled all those constraints for us, right? And you see our product journey, 2018, we introduced this Renaissance series of our product, which became hit. And it introduced a category called small motor fans. Small motor fans were not existing before Renaissance. So BLDC enabled that. From energy efficiency journey, we learned that since it is energy efficient, it can be exploited to make the motor compact. You can increase the energy density of motor, and we reduce the form factor to half, right? So compare this big motor and just half the size of Renaissance motor. So that was really polarizing design for consumers, right? And it was completely new experience for them. कि यार fan इतना छोटा भी हो सकता है क्या? Because a lot of people were looking for minimalistic designs, right? And the consumers were evolving in their journeys of interiors, aesthetics, their aspirations about minimalistic designs, etc. So Renaissance was that moment for us, which enabled this minimalistic, compact designs for us. On top of it, we introduced LEDs and interfaces, smart interfaces, because our positioning then started changing from energy efficiency to energy efficient and smart. A smart product has to look smart, right? And how a smart product will look smart, it has that kind of sense or sense of intelligence should come out from the form factor. So these LED interfaces helped us, and with time we integrated all this Wi-Fi, BLE, app connectivity, and the product evolved, and today it is getting into a gadgetization journey, basically. So this is how we see, the fan.
Sure. In fact, I remember, sorry to cut you, in fact, I remember when we introduced the Renaissance for the first time.
Renaissance is a brand
it is like sub brand. I mean, not a brand, like it's like a model name. Yeah. A lot of partners said, ये तो खिलौना दिख रहा है, ये fan हवा देगी, ये चलेगा. There are a lot of objections around this, but I think eventually consumer loved it.
Yeah. No, so the question I was going to ask is, and clearly there's a lot of passion about your product, but I was just thinking about it when I was, reading up about you guys. IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया आप बहुत सारी चीजें बना सकते थे.
No, I think,
honest question. The thought that came to my mind, is this the best use? And I'm not saying the fans are not great, and I'm sure consumers love it and they look good and handle it with the remote and all of that. Was this the best use of the talent and ability both of you have and the technology you came up with?
So I think I think it's a very interesting question, and I will probably go back a little bit, slightly back beyond fans, and Manoj can add to it, right? So we started this company in 2012, right? The journey began in 2011, and And if you look
this is after IIT.
This is when we were in IIT.
Yes. So you all didn't want jobs which you get after IIT. You didn't want those jobs.
see.
No, we didn't join. We got jobs.
Really?
We got jobs.
Where did you get a job and not join?
I think he got in ISRO.
You got a job in ISRO, you didn't join?
So in my final year, So we had this passion that, which you rightly said, that, engineering must solve some consumer problem one day. So that was thesis with us. And during college time also, we were kind of active, participating in robotics, competitions around colleges, bunking the lectures for that, all those things we were doing because we were passionate about engineering. Second piece was engineering must solve some consumer problem. And since our childhood, we have seen struggle in people's life, and if we could improve lifestyles of people with tech or engineering, that would have been our ultimate purpose. So these two things, passion and purpose, were the key things which we realized that entrepreneurship could help us marrying these two things. Otherwise, in job, there might be certain constraints, meeting your purpose or living with your passion, which is engineering. So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
आपने क्या बोला?
मैंने बोला कि यार I have got an extension in ISRO, and it is a special extension, and I can join back ISRO after 1 year, and allow me to experiment in my life for 1 year.
Oh my God! तो जब पता चला कि आपने तो ISRO join ही नहीं किया?
Join ही नहीं किया, and I was under impression and this hope that in 1 year life will change. And I would be able to convince them that entrepreneurship is a good career opportunity, which is completely unheard from there. And nothing changed, shifted in a shawl outside. And from hostel mate, Shibam also was my shawl mate, after that. So that's how journey started.
When you started off, the day one plan was not let's become a consumer fan mixer company. You had a lot of different journeys you went to, and then you came to this. Tell me a bit about that.
We did not start with BLDC motor. Right?
Okay.
We start with, it is not like that we had a BLDC motor and then we figured out what we wanted to do and then we got into fan. That was not the journey. Manoj will cover this in brief, but I'll quickly, briefly say that, for the 2012 to 2015, we did many things, right? But mostly around with these engineering capabilities.
So what were some of the things you did?
I think you can ask
so before just getting into the engineering capabilities, there are certain things which were driving us, because 4 years is a long period to bootstrap and survive.
Yeah.
And what kept us going. With engineering, we always had this thing we have to create an impact, right? So that desire to create a larger impact was always there. But what idea? We were desperately hunting for it. And then that hunt was on for 4 years. We did certain projects for research institutes, some industries and institutions, and they were projects, they were not product, right? Some projects were related to data acquisition systems where we learned, power electronics and software stuff. Some projects we did around motor design, and they were the challenges thrown to us because these players, they wanted to leverage our capabilities to build something for them, right? And they were custom projects from research institutes, from remote monitoring of the device, shop floor monitoring of some factory, vehicle tracking system. So you name it, like very, very vast fields, and in one of the journey, we stuck with the vehicle tracking system for almost 1.5 years. Yeah, 1.5 years, right? And we were used to, then there was no team. We were going whenever there was a challenge because the drivers were throwing those devices outside because they knew that they are monitored. Right, so we were going hunting the trucks where the.
So you were tech support, you were
everything. I
CEO, you were marketing, everything.
So I think I remembered one day I was actually spent one entire night with one truck driver and took the entire route from Bombay to I think Nasik and then some part of that part and then I come back to Bombay and we actually literally spent that day with the truck driver to understand their challenges, what exactly they do. We did all of that, I think.
And see, in one of the journey, they can be at any remote location. So we have to go and fix the trucks and other devices. And we were convincing them, please don't throw it. Otherwise, you have to come again and fix it. And they also had the same question. What's your background? And we were telling that we are from IIT and engineering, all that stuff. Then they were surprised what you're doing here.
So you've been getting this question a lot through your journey. Ki aap kar kya rahe ho?
I think we did like 4 pivots, right? And good.
So one pivot was vehicle tracking.
Yes, before that project. I think
data acquisition systems,
was one.
And some projects around motor controls.
This is a very important lesson here. That you may be good at a lot of things. You may have the ability of success at a lot of things, but you have to pick where you want to exert your energies to to hit your end goal.
Yes.
For you guys, you have to scale. You have to get out of that chawl.
Yes, absolutely.
You had to, go from bootstrapping to go to investors with a plan that makes sense.
Yes.
So more importantly, we have to survive.
Yeah.
Right? And keep experimenting and keep hunting for something scalable idea. And that Eureka moment came in 2015, right? And that is also a wonderful story.
So
We keep
please.
telling, so one day we were, and we, by the way, we upgraded ourselves from Chawl. We got incubated in IIT Bombay,
Okay.
Incubation Center
They
in
opened the
2012.
gate and said, "Bhai, aa jao wapas."
Up Chawl's office, aa jao.
Chawl's office,
Then we used to stay in
and-
office.
And we realized that office is more luxury than our Chawl, so we shifted to our
How did you work that out? वो जुगाड़ कैसे हुआ?
So we built a business model, right? And we were selected, luckily. Got an office space, and the office space was not big, maybe 400 square feet area.
I think 400 square feet, yes.
Not more than that. And we had a small team of 2, 3, 4 people. From there, we were able to running the show. And we learned that it is much more luxury than our Chawl, and we decided to shift there. And, because that helps also to improve our productivity. We were working late nights and many times night outs when you have to deliver certain projects, and then we can go to any hostel, freshen up, come back again. So it was life was so sorted.
I think it all started with this one monsoon, I remember. So what happened is in the Chawl there was water leakage from the roof, right?
So you have the full Bombay experience. This is
we
this is sounding like a movie. बेचारे दो engineer
So
chawl
at
में पानी
one
टपक
point in
रहा है.
time, at one point in time, Tamanna, we used to pay the rent for the Chawl, but our friend used to stay there.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT. You from Rajasthan, you were born in Assam, simple families, and you've really struggled to get there. Are they at this point able to make sense of this decision not to cash out on the golden ticket? You've already won the golden ticket, right? Once you got into IIT. Why aren't you cashing out on it? Would have made no sense to them.
So very briefly on the background, so I'm from farming background, a village from Rajasthan, and had a good awareness about the struggle which regular people face, in their daily life. In fact, in my village, I remember power was available only for 1 hour, and the people used to wait for that particular 1 hour. The borewell will start, and people can collect water and do their job. So this passion and this awareness to solve and giving back to society and creating an impact was always there. Parents knew my this nature, but they always wanted you to be settled in your life, And being selected for ISRO was one thing which they were super confident, here you have done a good job. Why don't you join it and be settled in your life and be happy? But those things were completely, not in sync with my passion. And I would say the kind of things I wanted to do in my life, So I took that call, and it was, a shock to them. And anyway, I had already tell lie to them that I can get extension and can join back ISRO after 1 year. So this was tricky part, but they allowed me. And after that, they knew that I'm struggling after 1 year because nothing happened, and the job is also not in your hand. And so they knew the struggle, but I was convincing them, I'm working, and this is a good idea. A lot of people are working, surrounded by good professors, mentors, friends. So that way they were convinced that at least I'm with the right people and trying to do some good thing, right? Although I was not able to convince exactly what I'm doing ever, because data acquisition they won't understand, vehicle tracking system they won't understand, motor design they won't understand, right? But one day in 2015 I told them I'm making fan after 4 years, So that was another shock. But at least they were able to understand. They were able to understand, and they thought ki yaar, I'm opening some shop there in Mumbai to sell fans, right? A distributor or something like that. So that's how the journey has been, but I think they have been supportive throughout the journey because, I think I'm very thankful and supported little bit, maybe some money also when we were in tough time, although there was no huge money. But
but that's amazing that, your family stood through and didn't put that pressure on you, gave you that space to breathe. Did you find that kind of comfort with investors, or was it a tough ask to even explain to them what you're doing and the choices you've made?
Yeah, I think before going to investor, I just said 2 things about my family, right? So what happened is, when I was starting my journey, right? So before Attenborough, from my second year only, I started trying my hands on various business ideas, right? So So I did one idea in my second year, which was like simple trading business. Then my fourth year, when I was in college, I started with an e-commerce business. Now, and that was, I told the parents clearly that it's an e-commerce business, and we used to sell like cosmetics. It was like a Nike at that point in time, too ahead of its time. And they were like, यार engineering करके तुम lipstick बेचोगे, right? And that was the feedback. But I told them, give me 2 years. They were very supportive at that point in time. The only thing that I asked from them was that don't expect anything from me for the next 2 to 3 years, and then things will be fine. And they were there. But once Atomberg happened, they were like, "Okay, at least अभी lipstick नहीं बेचता, कुछ तो engineering कर रहा है." So they were like, okay with that narrative. But they've been very, very supportive. Fortunately, despite being a very humble background, etc., they were actually quite supportive. Coming to investors, it was a very, very tough job, right? And I think we can look at the journey, right, how it happened. I think first, so between 2012 to 2015, there is no investor. It's all us, post-trade money, some money. I think the only investor that we had was our friends who actually lent us $1 lakh here and there to survive. So we are like really grateful to those people. Then what happened in 2016, we came out with this idea of BLDC motors, fan, etc. We got first investment, not very large amount, small amount. But that was like quick. That was not like a very, very challenging job for us. And I tell you one story on that as well. So we took that capital, we thought, and we were like very lucky to have that. We just saw that so much amount for the first time in our life, right? Then we went ahead, started building the product, technology, molds, capital investments. So we बहुत fast खर्चा कर लिया, right? And then we figured out कि we thought, we'll make the product, we'll go to the market will accept it, they will love it, give us money in advance. We didn't understand the concept of working capital, receivable, collections, all of that was not there. So what happened is, we raised that capital, spent majority of that capital into building the product. We went to market and figured out that industry doesn't pay you money on day one. So अब पैसा तो है नहीं, क्या करें? Then we actually, literally, we went to that ceramic industry owner in Gujarat. And when I reached there to ask money, what he did the first thing. When I entered, he didn't say hi, he didn't say anything. He was in a shirt, opened up button shirt. He just opened his shirt and showed me a, something like a bandage, right? And he showed me the thing that I took a bullet last week. That was the first sentence that I heard. And my next sentence was, "Sir, mujhe paise de do. I need to pay my salary," right? That was how it happened. We stayed there for like 6 hours. And towards the end, I actually took like 10 lakh rupees from him and came back.
So why did he tell you about the bullet? Was it a warning?
I think he was saying that don't come and ask for money. I think that was, he was really giving me a hint on, but we stayed there, we got the capital. So I think investor is one, but we got capital from customers a lot, right? Then that happened. Then the second round also happened. Like we got lucky, pretty quickly that happened. All of that happened pretty nice. But when we started scaling up, when the business started focusing, right, we figured out that we wanted to do consumer. That was really challenging. Right? 2017 is when we started raising capital. We thought, we raised 2 rounds very quickly. Third round will be much easier because now it's much larger. We reached out to all investors. People loved our story. People loved the numbers. But somehow, somewhere, they're not able to believe why will incumbents, will come and because of the larger balance sheet strength, they'll not be able to outperform you, right? And beyond
how will you survive competition?
How will you survive competition? How will you keep innovating on technology? How will you keep that edge forever? We got into like 4 IC stage, and we got rejected all of that, right? Usually in IC stage, like 1 out of 10 probably get rejection. We got all the rejections. Then we went to strategic. We got ridiculous offer from some of them, right? We just said no to that. Eventually, one strategic happened, not like direct, but quasi-strategic. We're not happy with the offer, but we said, no, that was what it. We went back, but after 1.5 months, that offer was also not there. Then what happened is, and the business was growing. The beautiful part is business was growing up, but the problem is as the business grew, your capital requirement goes up, right? Then what happened, we got an offer from a Chinese company, right? India was exhausted, we went to China. We got one offer from Xiaomi. But again, what happened is because of that India-China tension at that point in time, that again got slowed down, right?
Were you ever at a point where you thought the journey ends here?
So that was the day, and still remember, right? We hardly have like very short runway. I think not even a month probably, right? And business requirement was larger, right? And I literally cried that night, right? Because I know that next day morning, I and Manoj had to have a conversation saying that now how do we like balance it, manage it, probably wind it down, right? And that day morning, we caught an article on your story saying that ex-Sequoia partners left Sequoia and started a new fund, right? We reached out to them without any hope, but that changed everything. Right?
They responded.
They responded within 1 hour. We met them from about to shut. Within 2 weeks, our valuation went up. That was like a moment where I still remember that day. And then I figured out that I still remember that day because when we really signed that check, I and Manoj were in Hotel Trident, 5-star hotels for the first time. And I literally bought a pack of cigarettes from that hotel, very expensive cigarette at that point in time, just to celebrate this. Right? So that at that moment, I realized that probably our time has come.
Apna time aa gaya. Apna time aa gaya. Oh my God, that's an amazing story. Is it time now to use your technology capabilities and become that global engineering company? What next?
Yes, Amarna. So this has been always the intent, to create a larger impact. And wherever we got opportunity to create impact, we entered into that product category from one product to another product. And what we have done wonderfully is that keep building the tech stack. So today we have a huge asset of technology, huge capabilities around technology, and there are multiple layers to it. Motor being one of the fundamental layer, where we are saying BLDC motor, but BLDC is a sub-category of electrically commuted motors. So that is one. Second is very deep capabilities around power electronics. So these two things, motor capabilities and electronics capabilities, they are required by many other players, right? A lot of people, when we were growing our journey, they knew, from other industries, they noticed that Atombug is growing on the technology, and these are the core technologies. A lot of people reached out to us that can you build this technology for our application? And we got those early signals that there is a need of, need to venture into those areas also to create the impact larger.
So give me an example of something that you're working on, whatever you can share.
So one of the industry is the air conditioning industry.
Air conditioning.
Yeah. So
you can make a quieter and less power consuming air conditioner?
So air conditioner is a complex system which has two motors which goes in your indoor unit motor, outdoor unit motor. Then there is a compressor, and the new inverter conditioners are powered by a electronic controller. So these are the building blocks of any AC. If you ensure that these building blocks are efficient, they can make the system efficient. So we are not building the system, we are building those components for them. Motors, control cards, and the compressor. This is what we are intending to get into. That is one industry. Second area where we have recently introduced is drone motors. So that is another thing which we introduced very recently, 2 months back. These motors are there in the market already. Our industry has welcomed us really well, that we were looking for this moment, because these are the things which will help us to contribute to make India self-reliant. And that was another related purpose we had always.
We also have a B2C business, the consumer business, which has been our forte for the last 10 years. Now within that, we have been doing good job on fans, but we have just launched water purifier, we have just launched mixer grinder. Very early days, a lot of consumer love. I think within this, we have a lot of growth opportunities to unlock. If you look at the overall appliances market, electrometer, that's roughly $20 billion plus market, right? And within that, we're hardly even barely scratched the surface.
Yeah, that's exciting. Exciting times ahead. You've come a long way.
Exciting and busy, I will say. Yeah.
From long way from that cramped IIT hostel and that chawl with the roof leaking. Glad to hear your story, and I'm sure it'll be inspiring to many. Thank you so much for coming in and speaking with us today.
Thank you.
Thank you, Tamanna. Thank you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में. PMark, the mustard specialist since 1933.
सरसों से सरसों.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
The stakeholders are becoming more important than just the shareholders or the majority shareholders. So things have changed over the last 3 decades. In that background, corporates in India who are more focused on stakeholders, who are more focused on sustainable business growth, that has been the focus of the jury. We are looking at people or organizations where the focus is on long-term sustainable growth rather than doing something by cutting the corners and making a one-off improvement and one-off wealth creation. The jury realizes that wealth creation is important. These are people who are creating wealth not only for their company but for the nation. But it has to be in a sustainable way, in a long-term.
Welcome, you're watching Editor's Cut. This is a show where we break down what's happened through the week and tell you what we think about what's going to happen next week. We base it on the many conversations we have with so many people, not just each other, through the week. And this week we're going to do something a little different. We're posing 4 or 5 questions which have come from the newsroom, and we're going to talk about what we think about each of them. So let me kick off.
Do you have your boxing gloves that you've hidden behind the table? Do I need to duck and cover?
So you already know who's going to
I know.
throw the first punch.
For sure.
I brought a tank.
You brought a tank?
So out there and just shoot.
Okay. Thanks, Neeraj.
No, nowadays it's all fought with drones.
So, correct.
So your tank is obsolete
Correct.
now.
Completely.
I see your tank and I raise you.
No. This is not going to be one of those fights. But just talking about some of the things that are top of mind, I suppose. And the first one, I thought this was an interesting question. Has the US-Iran threat receded no matter what happens next? What I mean by has the threat receded for our cohort as investors? Has the worst of that threat receded no matter what happens next?
You want me to start? I don't think it has. Because we've seen in the week gone by itself that all it takes is a sudden spark or the possibility that there can be an escalation, and that lever of crude, which I think the equity markets in India, and in fact both the currency and the bond markets also get affected immediately. So even if you have a small inkling of an escalation in tension there, and the possibility that the Suez Canal, the Strait of Hormuz, not the Suez Canal, Strait of Hormuz gets affected, you have a situation for India.
I kind of concur with almost everything that Alex has said. Maybe oil doesn't go all the way to 110, 112, but oil going to 90 as well would mean that there could be some pressure points for the Indian markets.
I would argue that it's never going to go back to the worst part of the US-Iran conflict.
But that's my argument. So you got to say something new.
No, I'm saying I would argue it's never going to go back. So it's the opposite. I'm saying that in my view, the worst is over as far as the US-Iran conflict is concerned.
From the perspective of Indian markets?
For the perspective of Indian markets, global crude markets, and everyone, except for the people who are on the other side and the receiving side of guns and bombs.
Why
not
though?
For them. So here's why. And I again come back to exactly what we observed this week. Yes, there was a very sharp reaction. There was a drawdown in Indian equities. Crude did jump up maximum till 80. On the Brent, even that for a small period of time. It didn't go as far as shutting off the Strait of Hormuz, even though it went as far as Iran firing at a Bahrain and a Kuwait. So it could have gone that far. I think it's done in terms of the threat to global crude and global equity as a result for a couple of reasons. That ships have been passing through one way or the other now for a while. Seafarers have figured it out. They shut off their transponders. There is an alternate route, and Kepler data that came out after this showed that there is an alternate route which was found. So it depends. Now there's a US blockade and there's the Iranian officials. Depends on who you talk to. Either one is going to give you a safe passage. A way out has been found. The fact that 2 days later there were 53 vessels which came through, out of them 20 Indian flagged, tells me it's never going to get so bad. The appetite for a fight to that extent is over. There will be some showboating on either side. There might be some skirmishes. Neither side is interested in going all the way to the top. One more point to bolster my view on this debate is that even when Trump was saying what he was saying, it's a very harsh language there, the technical committees on both sides are still meeting and talking. So these negotiations never really ended to that end, which is why the threat perception, at one point we were saying this is going to go nuclear, at least in my view, has now dialed down. So,
okay, so I take that point. But Neeraj, what you're saying is that the threat is not over. Why do you say that?
No, I'm just saying that even if the worst is over, and which may well be the case, that we will never have crude, possibly because of this reason, go back to 110, Brent that is. From a market's perspective, Brent at 75 versus Brent at 90 is a different argument, and therefore, if Brent were to go to, let's say, 85, 90 also, if the conversations go south, it could have an impact on the market. So is the worst over? In fact, I concur with her. Yes, the worst is over. But can this still have an impact on the markets? To that, I'm saying the argument, my argument is it can still have.
I think it
can. The chances of going to 90 have also diminished in the interim. What's happened in the last 3 months is alternate sources of crude have bumped up. Large consumers of energy like China have figured out their alternative streams in a bigger way. At least to my mind, the chances of this going back to where is the crude in the world and the Strait of Hormuz is jam-packed have diminished greatly.
In a sense, that is also on account of the fall in the demand or slightly lower demand and projection for slightly lower demand on account of slowing global growth, right? So that
have I managed to convince both of you all at the end of it to come around to my view?
No, I think it's still...
No, I'm concurring. It's the worst is the worst. As in 110 is out of the window. But can a slightly higher crude price have an impact on the markets? And can crude prices go slightly higher than where they are right now? By slight, I mean until 90. I think yes.
That wasn't the question as well. The question is the US-Iran threat receded to that extent.
For the markets, right?
No matter